Reportedly, Cebu is considering a new order for both Boeing and or Airbus. Cebu likely to unveil an order at the Farnborough Air Show. They could be looking to buy as many as 150 jets, including options. Charlie Echo Bravo trades in the Philippines, looking to buy airlines from Boeing and Airbus, reportedly. Dollarama on the earnings conference call saying they expect normalization. Same-store sales growth will carry through the coming quarters. And DOL in Canada.
Woo! Good morning, people. Oh, brother, that was a tough one getting that set up this morning. Oh my goodness, I had to set up my live stream 14 times. Good morning, everyone. Hey, Tams, good morning. Good morning, everyone out there on the tube. Good morning, everybody out there on the Twitter. Hello, hello, hello. Present. All right. What a wild day to start. It's CPI day. It's Jerome Powell day. Rate decision day. I just got back from a vacation. I'm like, what the heck's going on? All kinds of good stuff. We'll get into the market. I'm sure people know what happened with inflation, but we'll quickly run through that. And then we'll hop into how the market digests. I mean, yeah, look at that. You can have good inflation data and the market could go down. You could have good inflation data and the market could go up, right? That's what we got to watch for really today, actually, because if you remember at the market bottom in 2022 in October, we actually hit, the highest inflation reading, and that actually marked the turnaround in the market. And now we have obviously inflation coming off. So it's going to be interesting to see how Jerome Powell kind of approaches that today in the press conference, which we'll put on live. I do plan on being here. We had India CPI coming that year over year, 4.8 versus 4.9. But more importantly here, what's really moving the U.S. markets is our CPI, which is the month over month. It came in, let's see here, 0 versus 0.1 estimate. Year over year was 3.3 versus 3.4, and that was the lowest annual pace since February 2024. And the first flat month over month print since October 2023. So the first flat print since October 2023, and remember that was 2022, was the market turnaround. And then it said the U.S. Fed funds futures are now pricing in the first full rate cut at the November meeting. I'm going to double check that. I guess that would be considered accurate, but in September, there's about a 60% probability that they'll cut in September. So we'll see if Jerome Powell says anything about that and kind of what those projections may be. But more importantly, honestly, like these are all narratives. It's very hard to trade on that type of information. What is the market doing? And we'll take a look at that now. So let's get into it. So first and foremost, let's take a look at just the daily price action. We'll take a look at NQ to start the day. We anchored a volume weighted average price right to it. And you can see we saw just insane just move on the release of the CPI data. Kind of flatlined for a while. The market opened up right over here. And we've been pretty much sitting roughly at around the highs of the trading session. As far as the gamma perspective goes, 5,400 was the call wall. That has since changed. We'll see if that changes once again, but it's a pretty close race between obviously 5,400, but then 5,500 traders are reaching up there. Now the local resistance for the day is 5,450, and price is, it's going to be hard to really escape actually 5,400 and even 5,450. So it's going to be interesting to see, how's the market going to interpret what Jerome Powell comes out and says, because he can come out here and it could be, whatever. And this whole move can get reversed right back down to 5,400. We've actually seen it many times, like for example, 5,300, right? If you go back, not even that far, right? 5,300 was this pin level right here that we just kept on breaking from and coming back, breaking from, coming back, breaking from, coming back, right? And we finally started breaking through that level going into the 5,350, where we got pinned right here too, okay? And then we finally got these this kind of release, and now we're standing around some pretty key gamma levels. So coming back into 5,400, it's definitely a possibility, but that's just not what the market is saying at this current moment. So if we look at market net flow, you can see here, it's been a very, very bullish day so far. You have the cumulative net premiums for calls going up. You have cumulative net premiums for puts, right? Flatlined. We've had convergence through the bulk of the day. We're starting to kind of wane right into and around here. And that's what you're seeing is this little consolidation as we're kind of getting closer and closer to the time that Jerome Powell is going to be coming out. From the perspective of the S&P 500, the SPY chart, we did come into the upper monthly expected move. So this is what the market priced in for the month of June. It's only the 12th and we're already there. This happened last month too, and we got outside of it. And what happened? We came back on the very last day. We came right back into it and bounced a little bit from that level. Okay, and we're also right outside of the weekly expected move and outside the current daily expected move. The weekly expected move, because I wasn't able to make a movie, to start the week up, 541.65 for the S&P 500 or for the SPY, 526.37 to the downside. Let me take a sip of my coffee. Give me a moment here. Let me adjust myself. There we go. Centered. Now, as we also know, it's never been also that great of a time for markets when actually they cut. So the anticipation up into the cut has been a positive sign for markets. But when the Fed actually starts cutting rates, I mean, historically, like if you go back through the times where we had yield curve inversions and then they began cutting rates, it just hasn't been. Give me a second, people. Sorry, there's somebody at my door. Give me a second. Sorry about that. I have a painter coming in to fix some stuff. Okay. And my light fell. Where was I? I guess I was talking about, I forgot where I was. I got sidetracked. So let me just hop right back into it. So this is the chart of the S&P 500, the 15-minute time frame. Okay. Typically, the higher probability is that we eventually come back into these areas. But just with Jerome Powell around the corner, it could be.
In an interview saying that they are seeing an inflection point in power demand. It's for next era NEE. November Echo Echo.
Could be just a really binary event. So would I short into this? No, not necessarily. Do I think it's going to come back down? That'd be kind of where my thought process would be. Unless Jerome Powell really surprised the market. Now, what we were talking about was when the rate cut. So the anticipation into the rate cut, it's been bullish, and it typically is. But then when the cuts actually come, right? If I show up, I'll show this chart here, and then we'll go into like some various names and equities and kind of go from there to see if there's any trade setups. Okay. Give me one moment. I'm going to pull up this chart just so you can see it. It doesn't mean that it's going to have to play out the same way, people, but it's just historically, this is what happened. So knowing this information that I'm about to share with you, again, you shouldn't be caught off guard if there is issues down the road in market structure or what happened to the market. And I'll tell you how I plan on approaching it too. Right, I'm not going to just enter in short into a market that keeps on going higher. I mean, just look at Apple today, right? I'm almost there, sorry. Let me see. Yeah, there it is. All right. Okay, so these were the inverted yield curves, right? So that's current, this is in current, and this is the Fed funds rate down here. Okay, let's focus right on this side. You don't need to see where my screen's cut off. It's not that important. It's the same thing. So this is back in 2000. This is back in the financial crisis. This is back going into 2020 pandemic area, and then this is where we are now. And what you'll notice here is these pink lines. They're actually showing you that while the yield curve was inverted, these were all-time highs. So even though that we had a yield curve that was inverted, right, the market was pushing all-time highs. Okay, and then what you'll notice here is, well, we were in a rate hiking cycle, and then the rates, they paused. So what happened when we uninverted and they started dropping rates? When we uninverted and started dropping rates, and this wasn't instant, but uninverted started dropping rates, and this is where we are now. Well, we went through turbulence, right? We saw the dot-com bubble bust, right? We saw the great financial crisis. Does that mean we're going to, and then over here, right, we saw, you know, the market go up, continue to go up higher, and then we had the, obviously the pandemic. So even if like, yeah, this is the, oh no, you can't count this. Okay, well, this happened, over here happened. And now we're here, the most deepest, longest inversion since, I don't know, probably since the 30s or something like that, if I recall. This is the 10-year 3-month, by the way, which is the Fed stable, which, you know, it mattered at a point. And now apparently yield curves don't matter, but I think it's, I think it's just something that we got to be aware of. Okay. And does this mean instantly, oh, market's going to come down? No, nope, not at all. But it's just something to be aware of, because as the market progresses higher right now, let's take a little bit deeper of a look. What's it doing it on? I mean, let's look at the heat map. There's a lot of red here on the screen still, and it's being helped by, you know, NVIDIA. Recently Apple, but it wasn't, you know, recently now Apple's just firing off. Everyone, it was so funny. Apple was down here, oh, ha, 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 AI something. No one cares. And then all of a sudden, 2 days later, it's like, oh, snap. Then everyone's changing their mind on that. Like, oh, gee. Okay. Microsoft is at all-time highs. NVIDIA, all-time highs today. Google tapped into all-time highs today. All strong. Amazon, or a few cents separated, dollars separated from all-time highs. Meta has made quite the recovery from its earnings move down here, which was quite bearish looking. But then you look at other names, like some software names like Snow, right? Or that's been getting absolutely crushed. MongoDB, I think it was MongoDB, right? That one got absolutely bonked. CRM, right? CRM got absolutely clobbered. And this is a monster market cap name. It doesn't hold like much weight, obviously, but it's a big name. And pretty much every company in the S&P 500 uses this software. I know when I worked for a Fortune 10 company, they use this software. So just very interesting divergences taking place in the market, held up by various, you know, some, very few names. It was crazy to see. So look at this. Okay, so Nvidia right now is a $3 trillion market cap. Microsoft at 3.2 trillion. Apple is now beating out Microsoft at $3.3 trillion market cap. So we have three $3 trillion market cap names. Google's 2 trillion. So this is really focused. It's a tech focused move. And I could show you once again here. Go chill. What is today's move? Today is a very risk on move so far. Okay. This is like your picture perfect risk on move. I don't know why that's so small. Okay, tech leading the way up 2.4%. You have some rate sensitive stuff. Real estate is up 2%. And then consumer discretionary. So consumer discretionary tech leading the way right now. And then you have at the bottom consumer staples and utilities, right, and healthcare. So very, very risk on type of trading session so far.
And that Casey's benefits overall from trade down in restaurants, and they've seen a pickup in traffic. Charlie Officer Yankee on CNBC.
Give me a moment here. All right, if I were to pull up like a chart of like, so if I look at something like, if I pull up the Qs, all right, we'll get into some names here I do plan on trading. I traded a little bit this morning. So, right, so Qs, all-time high right now, pressing higher. SPY, S&P 500, right, all-time highs. And then look at like the Dow, right, the DIA. This one is pretty far off the highs. And we're kind of sitting at the lows of the trading session today. This one's been going sideways for quite some time. And that's very similar, okay, to IWM. And IWM saw this big rally today off the back of the CPI data. So this has been really just going sideways, very similar to Dow. So you have these divergences in the market. And like I said in the prior stream or prior videos, I forget when, there's going to be one of two things that happen here. One, there's going to be a massive catch-up trade. Or two, these divergences are going to resolve themselves where we're going to see the market participants that have been pulling up the SPY and stuff start to consolidate, digest, and resolve itself that way. That's how it's played out through time that we've seen. And, I think we're going to get a lot of movement here and confirmation about some sort of a move here when Jerome Powell comes and talks. All right, so let's take a look at the book map, see if there's anything going on here. And we'll map out some new 0-date levels, see if anything's on the trading table right now. So overall, strong day, and we're just pulling right into where the daily volume weighted average price, and there seems to be a pretty decent size area of support here. So once again, this isn't really like a market that I would try to come in and short, okay? Would I try to go long? I would say, yeah, I'd be looking for longs on pullbacks, similar to what we saw, and then I would look for the strength after that. So even like right around here to come back to these highs, that kind of stuff would make sense to me. We did pull back into the upper monthly expected move. Like I say, we're outside of the daily, outside of the weekly. It's a very, very, very tactical place to be. So if you guys want, you can drop in some tickers into the name. We're going to pull up some intraday stuff on the fabulous 5 names, Apple, Microsoft, NVIDIA, Google. And then we'll also pull in like Tesla and stuff like that and kind of go from there too. So see if there's any setups that we can I'm going to look to trade. Reddit's getting some moves right now. Getting some volume in Reddit on this little breakout. And that's nothing that I would chase, but perhaps if this consolidates, look at the daily time frame. It's also on a little bit of a breakout right here of this kind of cut. It's interesting, like right Reddit. Who would have thought? Well, the market's moving it up higher, so you might as well be prepared for that type of stuff. That was a pretty fast and aggressive move, so any sort of flags or consolidations could be something to watch there with some pretty decent volume coming in on Reddit, okay? All right, I'm gonna get my notepad out. I'm gonna write down some of these names. They look, yeah, you guys got some good ideas for some names to pull up, and we'll go from there, okay? Got Oracle, GME, Nike, Disney. Yeah, these are all good stuff here. Tesla, big F-Cell. We got Oracle already. Yeah, yeah, RS. I don't know about the whole Apple thing, but it is what it is, man. The market wants to take it up. Let's just, just let it do its thing, right? Costco, BitX, which is basically Bitcoin. That's just leveraged, right? I'll put BitX, but I'll probably look at Bitcoin. Shopify, that was one. I think I'm out of that trade now, by the way. I did get Qualcomm. I'll get Crocs. Oh, Crocs is a good idea. Yeah, that one's good. A lot of these retail names actually look like pretty legit. They were setting up quite nice. So if you have some more retail names too, like the Real, Crocs, I think even like Guess or Levi or something like that. There was someone that were setting up pretty nicely. So I got a firm over here. Yeah, SPY will do, obviously. MOARRR, okay, some Bitcoin names. They can do MOARRR, right, and those kind of things. KR going into earnings. Is that Kroger, right? Got gold and silver. Yeah, we're gonna pull up the intermarket stuff actually probably before we get into this stuff. So I'll pull up gold and silver and stuff in a moment. Okay, those are some good names. RL. Oh yeah, Ralph Lauren. Cool. Yeah. Thanks, Luke. You see Reddit how kind of like consolidated here, this little inside candle and keeps on pressing. I'd like to see a little bit more of a consolidation, but overall. Okay. I want to get into really quick just some of the intermarket stuff that's really helping this move, kind of perpetuate itself. And, without even really seeing the market, I can already tell that yields are coming off. Okay. So yeah, 10-year yields off pretty heavy on the back of the CPI data. Good, dude. Take yields down, man. Take the 10-year down to give me home rates back down to 2%, huh? How about that? Jeez, never gonna happen. Might, you never know. Okay, so the 10-year yields off pretty aggressively, and this kind of stuff really does help the markets. But you pair this with like a dollar, which I would assume it's fallen. Yeah, the dollar's taking it on the chin today. A big hit in the dollar. So you have a falling dollar, you have a falling yield, and this is really driving the backbone of this move today. And then you add on top of that Apple being up 5%, Nvidia being up almost 4%. Yeah, wild. So clearly the easier trade would be looking for the dips, right? That'd be the easier trade. Right? Unless if you want to fight the market and do a position trade that's longer, you can fight the market, but that would be, to me, the easier trade. In this current moment. Okay, so with that happening, I would think that gold would be up on that. It is. So it's up slightly, but it's not up all too much given the context of how aggressive that dollar is coming off. So gold's up slightly. We got silver up nicely, right? Up 3%, but rather just consolidating. And it could be gearing up again. Like, who knows? Silver, consolidating for a potential flag, another flag. If this is the case, people, give me a second. How do I clone this, dude? Oh, duplicate. Okay. So if silver is flagging out right here, and we're going to see another move in silver, which would be pretty wild. I mean, is it that wild? I mean, we saw originally this breakout, right? This breakout, and we said, look for consolidation. It consolidated. Now we're potentially consolidating again out of a monster base. And if silver really is going to keep continuing higher, the trade there for even more leverage would be miners, because miners have a very strong correlation, right? If I strong correlation to silver, right? So they look very similar, but you just get a lot more, right? So silver is a leverage play to gold in a way, right? It's not perfect correlation, but it's pretty much a levered play. And then you have miners, which are like levered to silver, like the correlation is insane between the two. And then you can go to junior miners, which obviously it's a whole different play there, but those are also leveraged. So like something like GDXJ. Let's take a look at copper. Copper came off, nice consolidation here on copper after a pretty strong move. I had somebody on, the CEO of Calanex Mines, Max Porterfield, on my channel just to do a quick interview on, and he gave us some insights into kind of the world of copper and, some of the demand and, how it could be the early stages of something. So if you want to watch that, take a look at it. My thought process is really just from a technical perspective, right? From a technical perspective, this could be just a pullback after a pretty aggressive move to the upside. So you can look at various copper, like you can trade copper futures. You can look into like just other metals, right? You can look into, what is it, SCCO or something like that. Southern Copper is a name that it's up slightly on the day. You know, obviously a big copper name here. And this was after already a huge base breakout. You know, this is one of the larger ones, I believe. And then what was it, like FCX or something like that? Is that Freeport McMoRan? Is this copper, I believe? Yeah, copper and gold, like a larger producer, right? And then you have the juniors obviously on top of that. Okay, so that's everything from kind of an intramarket perspective. MOARRR, CLSK. Okay, we'll pull up. So you said MOARRR and CLSK. I'll pull up CLSK too. Okay. Fubo, SoFi. I'll write these down, guys. Fubo, SoFi, VLO, TLT. Yeah, I'll just do TLT now because TLT is part of the kind of intermarket stuff. Yeah, so TLT is making obviously a big move today because what? Because yields are coming off. So we're seeing a pretty strong move there. Hey. One of the things that I'm looking at here is the breakout here in TLT. Now, I'm kind of curious because sometimes TLT can act like a flight to safety, right? So as it stands right now, I wouldn't really consider that the reasoning behind what we're seeing, but we do notice the low, the higher low, the 40-week, 30-week, 10-week kind of moving averages are starting to flatten out. We're getting these consolidations. We're getting the moves higher. But I'm just curious to know whether or not the 10-year yield is just going to consolidate for quite some time, and we're going to kind of go back and forth still. Like I said, I think Jerome Powell will give us some really good insight on today's meeting, hopefully. You would hope. S&P 500 kind of locked in place. I think just be aware that the closer we come to the FOMC stuff and the press conference, volume's going to dry up significantly. Okay, and you're going to get a little bit more crazier swings probably.
Volatility in some of the GLP-1 inhibitor names after report Michigan's largest insurer is going to drop weight loss drug coverage.
Okay. Let's pull up some of these individual names. We'll look at the daily time frame and kind of go from there. We're going to start with Qualcomm. Yeah. So a lot of they look great, man. So Qualcomm, is it entry worthy right in this current moment? No, but are you in the trade? If you are, I mean, you're in a great position, right? Or a great spot.
Dropping weight loss drug coverage. We are seeing some volatility in Novo Nordisk, Eli Lilly.
Oh, wait, give me a second here, actually. NVO was a great swing trade setup, but we are getting some volume to the downside right here on that news that they just said. So careful with that. And then Eli Lilly, seeing a little bit of a break right here too as well. Okay, so is it entry worthy at this current moment? I mean, for me, no, right? I don't like to enter in like right here, coming out of a consolidation fully right over here. I would prefer a smoother move. I would prefer a longer consolidation. But if you've been in this trade since like, this breakout or even this breakout right over here, well, you went through this consolidation, you have some continuation. Yeah, you can leave these type of trades on, that's for sure. We're sitting roughly at highs of the year. It's in a great bullish trend so far. We can take a look at the weekly time frame, right? You say
this report goes on to say that Blue Cross Blue Shield of Michigan will drop coverage of GLP-1 obesity drugs in a fully insured large group commercial plan starting in January.
European bourses wrapping up trading for the day. The FTSE up 1%, German DAX up 1.5%, and the CAC up 1.1%.
So I'm looking at Qualcomm, and I see this, and I look back through the history, and you see, oh yeah, it could have just broken out of this pretty large base. I would prefer to see it consolidate on the weekly time frame, more to let these averages kind of catch them up. So yeah, if you're in the trade, you can withstand the weeks of sideways price action if you're in it, and then potentially the follow through and continuation. You can even add to positions or take partial profits and so forth. But I can't say that this is a bad looking chart, even where it's currently at, because of the context and the trend and everything like that. If you're thinking of it in terms from the short side, I just wouldn't short it, right? It's, strong stocks typically get stronger, weak stocks typically get weaker. That is kind of the basis of trend following. Okay, this Oracle reported earnings the other day, having a huge follow through, right? When was earnings? It was just yesterday, I guess, and then into today. So a huge move on Oracle. Would I be chasing this up here? No. But what you can do now is now you can put it on your radar, right? Now it could be on the radar to see if it consolidates, and you could play a potential move back up to its prior swing high. Okay, so look at the 15-minute time frame. What are we doing? Well, we saw a big bullish move. Now we're getting a nice pullback over here, kind of calm so far with lower volume. So, to see this pop up and have follow through, yeah, probably going to happen. I mean, just think of it this way: is this the alt? Is this going to be the forever high right over here on Oracle, 139.9? Chances are probably not, right? Probably not. But could it take a few days to get there? Can it consolidate? Can it pull back even deeper and then potentially go there? That's always a possibility, okay? Right? Remember, like I said, strong stocks typically get stronger. This was a nice move. Now it's on the radar, right? I like these bullish earnings gaps, bullish earnings moves. I always go back to like Target, and I'll just use this as an example because this is how I traded it, right? Target, boom, we gapped up right here on earnings. We consolidated it for a few days, and I traded right out through it, right over to here. I did the same thing with Disney, right? And people want to see Disney, so I'm going to skip through this. So that's Oracle and Qualcomm, and then I know that Disney was in here too. Okay, so Disney, where was it? Where did I trade Disney, people? I traded right over here. So we had this bullish earnings gap over here on Disney. It followed through, but no consolidation really. Okay, then it pulled back, and then we had this nice little hammer candle here. So I played it right out of there, right back up to this prior swing high. Then it actually consolidated, a little bit more, and then had some more follow through, and I missed that trade. Okay, now as I see it right now, right, we had this pretty big gap down on earnings, which is a bearish earnings gap, and then we had a consolidation and we had follow through to the downside. Right, so that's just kind of how trends can work, right? Meta, right, we gapped down and we went wide up, which happens sometimes too. But this one had followed through to the downside. So I'm looking at this and I'm saying, okay, is Disney going to start moving? Well, somebody might say, oh, it's the inverse head and shoulders with a slanted neckline. Okay, cool. Maybe it is, right? Or you could potentially look at it like, well, price actually is consolidating right here in kind of this, descending wedge formation, whatever, right? It's coiling up, it's getting tight. So the way I would look at this is, hey, if we can get back and reclaim 102, maybe a little bit higher, that could produce a potential move back into and around the declining 50-day moving average, potentially even a gap fill, who knows, right? Or up into this range right here, okay? But if it breaks down, respect that and start to watch for the 200-day and see how price responds around the 200-day moving average. Okay, right now, a name that no one mentioned yet is CELH. Take a look at CELH. Yesterday, I went into a position more towards the lows of the day. I'm already out because I got out end of day. It was just a day trade. And I think I pretty much got pretty lucky on that. But Celsius, right, got clobbered. And now what's it doing, right? We closed at the 200-day. We went below it, but we came back up. Now we're getting back down under these levels. So Celsius has been absolutely just, head bonked. Where can you potentially bounce from? Well, okay, this is what I'd be looking at. I'd be looking at this area for potential bounce in Celsius.
Shell reportedly said to be the front runner for Pavilion Energy LNG assets, Share Hotel Echo Lima.
Right about here. Why? Because there was a lot of volume right here on this move up higher. It came into this area and we saw a big volume day to the downside. And then when we came back into this range and we saw a nice move up, look at all the volume down here. So my thought is, if we have a very strong move here, but it's still an inclining 200-day, I'd be looking to see if strength can appear in and around this zone for a potential bounce. Okay, if I look at the 5-day moving average, if you want to get more tactical, look at how it's been declining, and we tagged into it, and it kept on pressing down further. Okay, so what you can do is, if it wants to continue down, right, you can look for positive divergences, which we're getting right here. Okay, but you can also wait to see the strength appear with the 5-day moving average start to turn back up, and let to see if that's the case. And then you could start applying some, anchored volume weighted average prices to the low after we see strength, and you can use that as an ideal area around a stop loss. Okay, so this one would be, I forgot why I went into Celsius exactly, but I guess the whole point of that was, weak stocks can get weaker. So, but this one, like I said, no one had mentioned, but this is a very sought after name right now. It's been a home run hitter for a while, and now we're seeing some volatility. I'm going to pull up another one that I was in the other day, BYON. I wouldn't necessarily be, active to go into it right now, but you can look at this stuff like stocks that get hit really hard, right to the downside. And then all of a sudden we have a big volume day on this down day, and it kind of reversed a little bit. It's not the greatest look, but then we had another day. The follow through was the prior day. And this could be create, if you look at this, this red day, drop down, strong day, this 3-bar pattern here is considered a Morningstar potential reversal, and we had some follow through on that specifically today. So continue to watch this one, because this one's pulling into, lows, the low point that we haven't seen since, 2023. And then prior to that, I mean, it's been a long time since these lows. Take a look at the chat here, and then we'll pull up some of these other names. You were just about, Jalen, you were about to mention CELH. That's funny. Should I be looking for a different FA? Hey, my thoughts for you. I'm not too sure what FA, what does that mean? Oh yeah, I see your you have a question. I didn't, so I call my financial question. Hey man, I mean, if your financial advisor said that, and like if he, because of whatever you told your financial advisor, and he's like, okay, well maybe this would be the better case if it's like a little bit too, my bad, dude. I was reading it backwards. Financial advisor, duh. Okay, yeah, thanks. My bad. You know what you should just do right out of the gate for the financial advisor is probably ask if he's a fiduciary and if he's acting on the behalf of you, or if he's paid, a commission or expense. So if he is a licensed fiduciary, he has a legal responsibility to do what's right by the consumer, by the customer, right? Not by his commission check or whatever the case is. So it's always important to kind of maybe clarify that with who your FA is. A lot of FAs, or fiduciaries, they have like a solid rate that they go by, and they don't care what product they go into, because that incentivizes them or disincentivizes them to put you in a product that may or not be the benefit of you. So it's always probably important to just clarify that with them, and then you can kind of make your assumption from that point. But if you're having like, if you can't sleep at night because the positions are too sized up, too big, there's nothing wrong with going into a less of a position, or a money market or something like that, or I don't know exactly the products, but it's always worth just asking those questions and doing what's best for you, right? Everyone's different, right? There's gonna be people that are like, no, dude, just keep me all in, invested, dude, press the limits. But if you're like, even with me, when I was like pretty aggressively investing in my bigger accounts, like I came to a point where I was like, I don't even like being aggressive anymore, like, So. Oh yeah, hopefully it kind of helps a little bit. Remember, there's no right or wrong way necessarily to go. I mean, we can debate that obviously, but it's what's right or wrong for your personal preference, right? And you got to make sure that they understand what your personal preference is. All right, let's take a look at some of these names here. All right, so we're going to pull up, the next one was AG. First, Majestic Silver. No, so this goes back to what I was saying about gold and silver, right? The stronger correlation. So if silver is going to be just consolidating here, you'll get more juice in names like this. So like, okay, look, notice how silver is kind of like, or this one's also kind of just consolidating here, right? Like so, consolidating like so. Or like so, right? Overall, this one doesn't really necessarily have a trend. The 200 days flat. They're below the 50, below the 200. So it's kind of like, at a pause still sort of thing. But if we are going to see silver move, these could be the early stages for a stronger move, right? You can see the 40-week, 30-week, they're crossing up and going up, and this has kind of just been consolidating on the weekly time frame here. So it's pulling back into these levels, and you know, MACD's crossing over and so forth. So if you're looking for, if you believe that silver is going to be an outsized player, you know, you can look at these companies, which are way higher beta than, you know, silver, right? Just a little move is like 8%, 10%. But just understand that like a lot of these like miners and stuff like that, man, they're just they're just super leveraged plays to the underlying commodity, right? And as the commodity goes higher, right? If silver goes higher, if gold goes higher, the margins of these companies improve, which is good for the overall company. It could be good for the stock price, right? There's also other factors and so forth. But hey, come here, my doggy. All right, let's take a look at the GameStop. What is the GameStop doing over here? It's up 6% on the day. The Roaring Kitty, dude. The most cringe-worthy live stream ever. It was hilarious, and he deserves every right to do that because it's hilarious. So I don't know if you like the kitty live stream or whatnot, but it was pretty funny. But it was like dude, what? It was almost too much of an act for me, right? It was like okay. Now you are just playing dumb. I think, I would imagine, I don't know the guy, so I'm only speculating here, but I would imagine he's pretty intelligent. I thought I heard that he's a CFA, which, you know, takes a lot of work and study, and, you know, I don't know. But nevertheless, if it is just like straight up, like if it's not an act and he's really like that, man, holy heck. And to an extent, you would actually kind of believe it, because how would you put on that size of a position if you weren't a little like out there? The only way it would be is if you know what's going to happen, if you really structure it out and you really have to play it off. I don't know. It's crazy. It was just so weird. It was weird. It was just weird. Like, that's the only thing to say. Like, actually, at the beginning, it was actually kind of creeped me out because I thought something was actually wrong with him. And they were like, but then he was like just joking. I was like, oh my God, dude. I thought actually like, oh man, wouldn't that be crazy if something big happened? Okay, GameStop. So I'm just looking intraday right now. GameStop, just so you know, GameStop has been technically working from a technical standpoint very clean. Very clean, right? So this is the opening range. We consolidated, right? We got tighter. And then we started seeing some moves up with good volume. And then we get a nice consolidation. These are very, very clean technical moves because a lot of traders trade these type of things too, right? And then we get a little consolidation, a little bit of a pop, getting a little bit more volatility. Even right here, right, we're kind of following this trend a little bit lower. So if we can eventually pop through it and maybe form ourselves a higher low here, you know, it could create an opportunity where we come right back up into that 33 range, okay? Now, when I look at the daily time frame, I'm not swing trading this crap. I'm not holding it for multiple days. You know, be my guest if that's your style. But I don't like, hey, pick not a position, but pick a direction. Pick a direction, right? I have no idea where this is going to go. It's insane. It's insane movement, but I have been and will continue to trade it intraday because of the volatility. It allows me to take smaller positions. It's technically moving correct, you know, and nicely intraday. It's breaking trends. It's consolidating. It's looking good. It's not sporadic. It's clean. Okay, and you know, for the most part, it's pretty tight spreads with some good volatility. Okay, so right now, yeah, that's what I'd be looking at. It's getting pretty tight right now. So a little pop. We're probably gonna get a little break here. Watch. We'll watch it. Watch the break. So this is the minute time frame. And you can see we just close. So very, very tight closes here, all within this little candle here and all within this bigger one, okay, which was pretty decent volume. So we'll probably get, yeah, there it goes, see? We'll see if it actually snaps back. But contraction leads to expansion. So continue to watch what? This trend, okay? And it was getting pretty tight. He's just a meme lord. Long-time listener, first-time caller. I love how you said first-time caller. Hey, man, I really appreciate that. Thank you. Thanks for joining into the live stream. I know a lot of people can't make the live streams because they got to work, right? Makes sense. It makes sense. But I appreciate you. I appreciate the comments around the Discord and the little Patreon stuff too. I try to add a lot of value and, you know, and still have like some freedom and stuff like that. So I put a small price on it, and hopefully, you know, and I'm going to probably always add to it, right? I'm look to add more things and see how things go. And yeah. For anybody that's interested, that's watching the live stream, I'll pin it. You can take a look at it yourself. This was the whole Patreon thing was set up as a way to subsidize myself leaving my career. So I just said, okay, if I can just do a small amount, add value, and whatever, you know, maybe that'll help me be able to do this more full time. Okay. And then I get to work with some partners too, like Bookmap, which helps. And then
update from the U.S. Agriculture
what is it?
Department.
Interactive Brokers.
Aggregate supply and demand.
They've been helping support me. So if it wasn't for them, like that's why I can make content on YouTube. Just be honest, like I can show you my revenue for YouTube. You guys would be like shocked. A lot of people want to start YouTube channels, but they do it for the wrong reasons. You don't. Holy moly, dude! What is going on here?
25 seen it. 455 million bushels for beans, corn at 2.05 billion, and wheat at 780.
That's just commodity stuff. A lot of people don't understand. Like, you can make decent money on YouTube, but man, even like videos where you get 10,000 views a video and you post a video a day or something like that, you maybe make like $1,000 a month, maybe a little bit more. My career was I was in communications. My career was in communications. I worked for Verizon for 13 years or so, a little bit more than that if you consider when I wasn't even technically hired within, but I did do work with them. So 14 or 15 years total. And I worked with them. I started off in retail, quickly got out of that, and then I started working up a little bit higher there. And then the Patreon stuff really does subsidize it. I haven't quite made up for the entire income yet on that side, but like some of my sponsors, that's what helps out, and like a few, you know, $1,000 here, $1,000 there from YouTube income. It helps. But I did so much saving and stuff too while I was at Verizon. I didn't spend any money. I drove a 2001 Kia Optima for 7 years or 8 years of that time, maybe even more than that. So GameStop's trying to break this trend right here. And yeah, just like everyone else was getting nicer cars, and I was just stacking. I didn't have any bills, and my rent was $700. It was great. Now, and then I got married. Okay. So GameStop's breaking that trend. This is what I mean by like technically potential, like, you know, so we broke it right here, and we actually saw a little nice volume on that. So I don't know, like, I wish I could pay a little bit closer attention on this, because I want to trade, but I do get side. I'll pull up PANW. I get distracted easily. I got PANW, yeah. Powell will be talking. So S&P 500 coming in a little bit underneath the daily volume weighted average price. We're going to give some updates on that. Powell will be talking. Good question. What is today? The 12th? It's 11, I think it was. Where's he at, dude? Where's he at? So the interest rate decision is 11, Pacific Standard, 11, 12, 1, 2. So 2 o'clock Eastern Standard Time. And then we had the press conference 30 minutes after that. Okay. So got some time. Hey, Shane, thanks for the, thank you for the super chat. You didn't need to do that. I appreciate that. This is nice. Thank you. 12:30. Oh, I don't know. What time frame am I on right now, dude? 12:30. 12:30 what time? So it's 11:30 Pacific Standard Time. 11:30, 12:30, 1:30, 2:30. Yeah, no, I think it's 2:30. Are you, or maybe it's 12:30 on Central Standard or whatever, or Mountain Time or whatever it is. I'm pretty sure mine. I'm on my right time frame. Yeah. So it is 11:30 Pacific Standard Time. So 3 hours past that would be 2:30. Wait. Yeah. Okay, yeah. Jeez, oh my goodness. And then tomorrow we get PPI data. Did I go to college? I did go to college, but I didn't graduate. I ended up taking on the full-time job at Verizon. I went hard with that, and then I kind of got an education within that company, and then I started taking classes through that company. Oh, okay, Trollman. And then I started taking classes through there, and I started just getting some more basic classes. And I think I'm like not even far away, and I could technically would be able to graduate and stuff. But I always had a hard time in school. But I always had a really good time. Like you can, like if I showed you my grades, it's hilarious because it's like you'll see complicated courses that like I do really good on and I excel in. But then you'll see these other courses where I'm just not good. Like it's not that I'm not good at it. It's just
following the tariff news out of the EU earlier today in the auto industry, just saying general trade tariffs increase complexity and costs for the supply chain for both Airbus and its customers, Alpha India, Romeo, and Paris.
But these classes are like, sometimes it's either just the teacher or the way that they structure it, where it's like just requires a lot of memorization. And that's just not my style. Like I'm like, well, why would I need to memorize this when I could just look it up? Like I feel like I'm just trying to become a better memorizer. Like I'm just trying to memorize things. That's how it was for me. But then the classes where they like engaged us, it was like, dude, I smoked through those classes where we had to work in groups and we had to like critical think and we had to problem solve and do things like this. And it wasn't about memorizing, it was about solving for things. Those courses I did very good in. But yeah, memorization and like sitting there and trying to like, not knowing what they're going to ask the questions of the test are. And I have to like, oh, they're going to talk about this. Oh, I got to read this again. And I felt all over the place in some courses. So and that's like my ADD brain, which you can see here. A little squirrel brain over here. We're just doodling around the upper monthly expected move people on the S&P 500 right now. Market net flow, we've lost convergence. And since we've lost convergence, we've been kind of just trailing sideways. Wouldn't consider this bullish and or bear. Why am I logged out of this? Give me a second. But this is to be expected coming into an event or whatever. We'll let that load back up, okay? And we'll pull up some more stuff. Am I using data from Bookmap? I'm not using Bookmap data. I'm using DX feed. I technically have DX and Rhythmic, but I don't think I've ever used Rhythmic. I think I've always used DX. But I heard that they have Bookmap data feed now, which I'm not 100% positive on how it works, how it operates. So you'd have to ask them specifically on how that works. I know the context of the company. I could figure that out a little bit more in depth. But right now I use DX feed, yeah. GameStop's all over the place. God, just now just had a volume break to the downside. All right, let's pull up some of these other names and see if anything. It's going to be a hard session to trade right now. As we have a little bit of uncertainty. So if there are any names maybe that you're seeing that are like breaking from the correlation of the S&P 500, we'll pull those up. But we just talked about AG, GME, we talked about some other ones. Let's pull up Nike. Okay, so Nike, here we go. So if you've been watching the live streams here on Nike, not on Nike, but like we talked about how price was coming through this trend and, you know, we broke through it and he said it'd be very possible that we come back to backtest the trend. And what are we doing right now? The trend here is still down in Nike, okay? And we have a new low. We have, you know, lower highs, lower lows. Yeah, there are, you know, some positive divergences showing and, you know, Nike ain't going anywhere. However, it could be a while before this one starts actually really starting to turn up. What do I mean by that? Well, the 200-day is still kind of, you know, declining, right? And we've been holding as a level of resistance. Then we got very tight. We came to back test this trend. And the 50 days starting to turn back around. The 20 days starting to turn back around. So is this potentially where we're going to start seeing that? Coco, hey. Start seeing some of that strength come in. And that's a possibility. Now, we do have earnings around the corner. So do I establish a new position into earnings? Me personally, no. I don't establish new positions into earnings. But if we gap way up and we see this monster like green candle, I'll then put it on my radar and look for consolidations to potentially play moves higher. Give me a second. My dog's going crazy.
And equities coming off a bit here. The Dow up 125, the S&P up 61 as we head in towards the noon hour. Still being led by banks. Treasury yields are also off the lows of the session. Not too far away though. They're at 4.264% in the U.S. 10-year, up a full point. The 2-year staying below 4.7%. Take a look at soybean futures. They are trading flattish, while
Okay.
corn futures are up 0.75%, and wheat is down, heading into the WASDE report here in a few moments' time. Deer shares up about 2%.
Deer, hey? Okay. Yeah, so that was kind of Nike thing. I'd be watching for the earnings to come through, and we'll pull up those kind of expected moves and stuff when it gets a little bit closer. PANW. PANW, we're really kind of watching from this trend break over here, and it's been a little kind of wild of a move, and it kind of still is, right? We haven't really had a decent consolidation like we had over here. If you're looking at a larger base, I'd be looking at just this range right here. Right? So it comes to the higher end of it and then it comes back down to the lower end. It comes to the higher end, it pulls back into the middle and so forth. So perhaps this little, form here is potentially setting up for a gap fill here in the near future. But it looks like just right around this 320, up to 330-ish range in here is where it gets, hung up a little bit. So if I go into the 15-minute time frame, I wouldn't establish a new position right here. But if you are like interested, if I was interested, which I mean, I may be, what I would do would be like, I would wait to see if this divergence, consolidates or digests, comes back into the 5-day moving average, starts turning back up,
US
and playing something like that.
Soybean crop seen at 4.45 billion bushels.
There's the wheat
That's
stuff.
largely in line with the 4.55 estimate there for 24-25. 23-24 end stock seen at 2.02 billion bushels.
So that's how I would kind of approach PANW. All right, I'd look to see if there's. Oh my gosh, these guys are just on one today.
Ending stocks at 2.2 billion bushels against soybeans at 1.825 billion bushels.
All right, so the names that are going to be moving with that information, you can look at CAT, Caterpillar, DE, MOS.
And WASDE world corn ending stocks at 311 million tons. That's in line with the estimate there we had for 2024-2025. Wheat ending stock seen at 758 million bushels.
Caterpillar seeing a nice little move here.
688 million expected.
Caterpillar's 5-day moving average is actually flattening out here. Price was starting to get above it, so could be potentially something to watch there as it kind of shapes up. But yeah, PANW, I'd look for the consolidation. We're getting kind of just news around this crop stuff. S&P 500.
Wheat futures are down about 1.5%. Soybeans trading fractionally lower following the release of the WASDE report.
The WASDE report. I'm not an agriculture trader. Chopping there for the S&P 500. Okay, so yeah, like I said, PANW, sorry, we gotta, every once in a while, the news thing will come on and they'll give us an alert about something happening, and the move hasn't taken place yet, and we'll get all of a sudden this has happened with cannabis companies on like DEA news, and it's paid for that subscription now 2 months straight on just these random notices. So I always keep an eye. I'll pull it up if it happens, and I don't necessarily hop right away, but if the trade is set up, I might get in. Could happen, you know, it happens in a brief and fleeting moment sometimes if you trade the news. Okay, so that's PANW. I like how it's setting up the base. It's in bullish context for the most part. Overall, kind of neutral, but the 200-day is rising, the 50-day is, the 20-day is. So now I'd be looking to see if it can break out of this range or consolidate a bit for an entry. That's kind of how I would approach this. And would I be entering into any new position for a swing trade going into the FOMC meeting? No, that's not my style. I want to let that play out, let it digest, and kind of go from there. So that's PNW. Somebody had mentioned, I have a couple of some other names in here. I have quite a bit, so we're going to go through these actually. Let's go Tesla. Tesla, it might be doing one of those shake and bake sort of moves right here. So we got very, very, very tight, broke out, and now we're kind of coming back here. Okay. Tesla has been sideways and down all year, but this is getting very, very tight over here. Okay. So I'd be still watching this. Looks like this happens all the time on these. When it gets very tight, we get these fake out, shake out type of moves. Could potentially be what we're seeing right here. It gets people out, and then it gets ready to gear up. But it still really hasn't left the consolidation overall. And this is why I say when you trade these type of names, always have like stops. So I traded it, I think, right over here or something, and I played this day up. And I held in. I think my original stop was down here. And then this day, I updated my stop or whatever, and I got stopped out. Then it got really tight. I didn't enter. It didn't break out. But if I was in, right, and if it came down, I'd probably be like, all right, I'm out of it, right? I'm probably on this day. And then I'd say to myself, okay, I'm out of it here. And if it turns back around, I can always look to re-enter. Okay, so now I'm not going to enter right here at the high of day, right? And when it looks like this, right? You know, one straight ticket up, RSI is burnt to a crisp. You know, Jerome Powell's around the corner. But if it does come in a little bit, even if it doesn't come in right here, if it goes up higher and then comes in a bit, you can potentially start looking now at that 5-day moving average to start actually maybe trending and see if it could become trend-worthy for potential trade there. So that's how kind of I would approach this specific look. But overall, yeah, you can even see on the weekly time frame. Look at like these closes: a close, a close, a close, a close. Just look at 4 weeks, like how tight those 4 weeks are. Yeah, we're going to get an explosive move here in volatility on Tesla. Like that's going to happen. Right, it's going to move, and we saw a small little shakeout candle here on the weekly time frame. Okay, so I'm not in my Cybertruck, man. My bad, I forgot. I'm supposed to do the analysis in my Tesla. Okay, so yeah, that is what I see there. Yeah, we'll get a firm. Yeah, I got all these down. Dow by the dip. Oof. Okay. Big is what's that? Big lots. Big lots. What's this one doing? Big lots came off hard and fast. I actually traded big lots over on this day, and then during the GME stuff, and it squeezed up, gave us like 20 or something %. Those are the names that if you're just holding in and you buy it and you're up 30%, you don't want those to become losers. And this thing kind of kept on getting crushed, right? Heavily shorted name, big box retailer. Can it potentially bounce up? Yeah, sure. But the trend, right? Weak stocks typically get weaker. Strong stocks typically get stronger. I know there was some interesting like narratives behind big lots. But it's one of those things like, okay, if you actually believe in the company, yeah, you can buy a little bit because you don't need to. And you could potentially like look to average in or like smaller positions because the trend itself is going to be a long time before it starts to heal, right? Like we've been in a straight decline phase for a while, and it's still technically declining here in this current moment. All right, so it'd have to come all the way up and then maybe potentially start to move back up. But I don't know. I haven't been in a big lots. I think I've been in a big lots like maybe like 2 times in my life, and I got a blender that broke immediately after going into my car and buying it. I'm just kidding. Okay, so that's big lots. Nothing really there. Does it have a high short? I can't remember because I remember I talked about it. It was a joke, but I talked about it, and I think it was a highly shorted name, and I think Michael Burry took a position on this stuff too, if I remember correctly. I can't remember the exact short ratio on our short float or whatever. FSell. So me personally, I'm not a huge fan of trading under dollar names. Very frequently, very very rarely I will. If I am looking at this just from the daily time frame, we got a nice big volume bar here. That was earnings. We traded inside of it. We're trading inside of it again. So it is technically consolidating. It is bearish context, right? You can call this potentially a bear flag, but it's back above that 50, back above a rising 20. So can we potentially, break through this kind of dollar area? The dollar area, you can see it held up there with big volume, kind of held up, within cents there, right here, even today, right? So we're putting in a low, a higher low, a higher low. That's positive, but we're getting held up at $1. So if this is, I don't know if this is a highly shorted name or not, but the kind of where would people that are short, where would they start to really bite their nails if price starts to get above it? And I think that could be right above the dollar marker, because if it starts pushing itself through the dollar line, and it keeps on kind of, I'm sure that there's some degrees of freedom there, but if it starts pushing it through it, I feel like, people, if they are heavily, I don't know if this is heavily shorted, but if it is, and if I was short on a name like this, and it starts breaking the dollar line, I'd be like, you know what? I think I'm just going to cover. And then what happens is you have breakout players come in at over $1. You have short coverings over the dollar or whatever. This is just a narrative, right? But you have shorts that have to buy back their shares, covering, that's buying, right? Then you have breakout people, right? And people are looking at these levels like $1, and then they'll trade into that, and you can potentially get some pretty wild moves. But like I said, so these are very, very, very high beta names, right? Even this day right here on earnings, right? It was up. Give me a second here. That little, it's 13% in that little candle is 13%.
The defense ministers will approve a plan for the alliance to lead the coordination of security assistance and training to Ukraine.
You can really see it here clearly. So here's the 15-minute time frame. You can see that, you see how it comes up into this area and kind of gets rejected, $1.03. So it would be nice, and it never happens this way, but you never know.
Confirming a new FERC member.
Gets tight and then potentially makes its move.
Rosner.
All right, Costco. That was the name that I know. Costco, incredibly strong. No one can stop this horse, apparently. Jeez. This thing has just been, stronger, right? This is a great example of what I mean by strong stocks get stronger. If I look back through history, right, it's been building out bases and it's been moving up. So, there'll come a time where it has to build out a longer base and so forth for, a next leg higher. But yeah, incredibly strong trend. The 50-day is darn near moving up, a really rapid angle, just like the 20-day, and then the 200 too. Is it getting extended? Yeah, I'd say it could be getting extended. It broke out of this base and it just went one way up without pretty much any pullback. So, would I be excited to make a position right here? No, actually. If anything, if you're like a position trader and you're like, maybe I want to put on a short position. If that were the case, I would be going into the trade tab and I'd be searching out the options chain for like a spread, and that would be the way that I would approach it. I wouldn't just put on like a naked short or anything like that. But yeah, maybe like, a $5, $10 put spread or something like that. I'm not an options trader, but that's, if I'm looking at this and it's been a one-way ticket up, you can give it room to go up higher, but potentially consolidate at some point here. 15-day or 5-day moving average, it's above it. It consolidated, it moved above it. So it still looks very strong. Some could call out the negative divergence coming in a little bit. Makes sense. A pullback, even a 50% pullback on this, this rally right here, would make sense, right? So coming back, where did it come from? So today was another 52-week high. If it came back at 788, dude, it'd probably scare some people, maybe even a little bit more, right? That would be totally normal in my opinion. Totally normal. But so far, that ain't the case. It's just been going straight up. Okay, somebody had mentioned BitX, but BitX is a leveraged Bitcoin play. Okay, so I'll just look at like Bido. And Yeah, the Bitcoin, I actually have to check to see if the sailor to shift tool is still active and
Stoltenberg saying
everything.
the U.S. is now modernizing its nuclear weapons in Europe, saying as the challenges evolve, NATO's nuclear mission remains the same: to preserve peace and prevent coercion and deter aggression.
Got to pay attention to the S&P 500 when there's nuclear news. We've just been dangling at the daily volume weighted average price. So yeah, BITO, which is a Bitcoin strategy ETF. I don't look bad, and I think that we're still on the buy signal. So let me just double check that just to verify. Yeah, we're still on a buy signal. We saw some volatility on Bitcoin the other day, but we're on a buy signal, buy trigger still. So yeah, I would be looking for this trend to potentially break, right? It's the same thing with BitX, right? It's the same thing. If they break the trend, I think it opens the door up. Right? If I just look at
$640 million in semiconductors with an eye toward electric vehicles and the electric grid, according to a Japanese press report for Toshiba.
So, I mean, just look at Bitcoin. I mean, we're really just, I mean, some might call this the, inverse head and shoulders. The neckline would be, 74,000, maybe a little bit lower, just kind of, a zone more right around in this area. It's really getting hung up right here at this 72.5 or so forth. But I mean, it doesn't look bad. It looks good. Bitcoin looks good. So if you're long Bitcoin, I mean, you're just dealing with some volatility here. We'll see what Jerome Powell says if it changes up the story, but it's still holding up. Still looks good, right? I traded it. I got out. I probably look to get back in. I would have got back in yesterday if I was prepared, but I was on vacation on the pullback. I'd been totally fine with going in on that pullback. And then right now, I'm not going to establish into it just because of the Jerome Powell stuff, but it's not all that bad of a look, right? We're kind of just getting above that 5-day again. Pretty strong move. It would be nice to see a little pullback consolidation, and then I'd be looking to get in, and then hopefully it breaks out, and then I could play it some more. I'm just a little bit quicker, a little bit tactical. Google's down on the trading session today. Very weird trading session. It's actually sitting around the lows of the trading session here, coming back to an inclining 5-day moving average, and it's also trading around its point of control right here. Amazon down on the day. Interesting. Meta down on the day. Interesting. So really, right now, what's holding this market up? It's Apple and Nvidia. I mean, I guess Microsoft too, to an extent there, but Apple and is making the big move, right? And then Nvidia is also making a pretty dramatic move there. Getting a little choppy here. Okay, we're staying around that daily volume weighted average price. Market net flow, it just actually gained some convergence here. So if the market's going to turn back up right now, or continue its little move, right? So where are we? We're pulling back slightly into where that 5450, which is a local resistance for the day, given the gamma level, and it's also a big just net gamma level too. So my thought here is, okay, looking at this, it's either one going to come in obviously, and we're going to start losing convergence again. But if we were going to move, we're going to need names like Apple and Microsoft, Nvidia to hold itself up. But Google potentially could be one that if the market's going to go up, these names could start turning back around. I wish it was a little more frothy, like a little bit more of a hit to the downside. But to me, this is a pretty calm pullback for Google. We gapped up. We're filling the gap. Yesterday's open was right, 176.20. Yeah, let's see the pullback like just maybe, dude, that'd be so cool if it's maybe a buck more. So I'm gonna do this. I'm gonna go into this time frame because I want to see
NATO Secretary General saying that we've seen dangerous nuclear rhetoric from Russia, and we have seen more nuclear exercises from the Russian side.
I kind of like the idea of trading Google to the long side, given where it just came from and how this is just now turning green. We're basically flat on the trading session. I think maybe an intraday trade to a bounce. Still got 2 hours though. Before Jerome comes out, and that is where I think everything will change, so it wouldn't really matter. Do I want to do it? I'm going to see if it can come down a little bit further, and maybe I'll make my decision from that point. Another dollar or so. 175.50, maybe back towards the 5-day moving average. I'll try to play from there. Because the trend is down, lower highs, lower lows, but if it gets a little extended, maybe we can play a higher low, higher high sort of thing. So I'm looking at this right now. Let me see. So what I'd want to see is, so we have lower highs, right? This is just a minute time frame, and lower lows, right? This could take out that low. And then I'd want to see, obviously, a higher low, and then higher high, and then maybe a pullback sort of thing to play into the strength coming up out of it. So I'll do that. I'll keep an eye on Google. Let's take a look at Shopify. I'm not ready to enter yet. Shopify, I did get out of my position today. No necessarily big reason why. We were coming into a declining 50-day moving average, and we traded it down here. Right, that was the main trade there, and it just was a very clean breakout trade. That's all. Nothing too much about it. Am I going to get married to the name? No. A little bit of a divergence playing. Does it have more upside potential? Yeah, obviously. But I'll just look for it to set up again. If it's going to come back in or go back higher and then consolidate at some point, I can always play the trade back up, after consolidation. But this was the consolidation into a trend line. I played it out of it, and I think it was for an 11% total gain. Let me see. Yeah, about 11.5%. And then obviously it's a little bit higher on the day since I've exited. Exit the remaining shares, I should say. So Shopify still looks good, but would I enter right here? Nah, I wouldn't enter right there. Let's take a look at Crocs. Crocolakagis. Crocolaki. I'll take a look at Apple, yeah, for sure. Brick. We'll pull those names up here in a moment. YOLO. Pull up my Apple Wyckoff. Oh, okay. Yeah. I'll pull that up. I haven't seen that for a while. Oh, whoa. Darren, thank you for the super chat, man. You did not need to do that. I'll read that message here in a moment. I'm just now seeing it. IP Paper Company, NK. I can pull that one up. Joffrey, yeah, weeklies, yeah, good stuff. Oh, the decision on Tesla, on Elon's pay packages tomorrow. Interesting. Okay, so that can probably bring in some, obviously some volatility there. Darren's mentioning TSLL. I have not a clue what TSLL is. Is that, I feel like that's like a leverage name. Oh, that's leverage Tesla. Mentioning that, which is on off the best dividend ratio since the share price is currently 774-ish, 774th. I don't know too much about that, but I'm assuming that you're just kind of finding the kind of the offset or the potential opportunity within that. I look at this, when I look at it, I'm just looking at a potential leverage play, shorter term, one to trade Tesla. And my thought here on Tesla too, it'd be just looking at the Tesla chart. I mean, they look pretty spot on. That pay package thing, it's kind of interesting note. But what I said earlier here was I wouldn't enter right here, right? I'd be looking for the pullback in consolidation and see if it can play. But even the weekly time frame, just how tight this is getting, it looks like it's going to be setting up for a move. And if you're looking for a leverage way to trade that, and potentially, there's this kind of like not necessarily a spread, but Darren's pointing out something on the dividend ratio thing. Shares is currently priced in 774. Maybe there's an opportunity that I'm missing there that I don't quite understand. But this would be a way of leveraging out Tesla. So even if it came to that prior swing high, I mean, that's a huge move. So just if you trade leveraged, obviously make sure you position correctly for that type of stuff. Obviously, goes without saying. Well, maybe not. Maybe it doesn't go without saying for a lot of people. Thanks. Yeah. Oh, okay. I just saw your message now. And thanks for the thank you for the super chat, man. Didn't need to do that. Okay, give me a moment here. I'm gonna pull up a couple of other names, and then we're gonna get into some other ones too. A firm, yeah, we'll pull up a T-Rab. We'll pull up a firm. We got Crocs, and then a firm. Firm would be next. Okay, so Crocs, a lot of these. So here's the weekly time frame for Crocs. It's a good looking chart. Is it a little extended from these 30 and 40 weeks? Maybe. I would prefer to see a little bit of a pullback, but man, this thing is coming, kind of breaking out of this area, sitting at highs that we haven't seen for a long time. A new 52-week high today. So yeah, I mean, these names look really good, but they're just not actionable. For me, they're not actionable like in this current moment. It's like, hey, if you're in the name and if you're just wondering, hey, is it in good condition? Like I would say, yeah, it's in a good condition, right? Because it's been pulling back, it's going higher. It's been pulling back, it's going higher. And strong stocks typically get stronger, and that's what it's been doing. So until that changes, until it breaks, these are good looking names, and you look for consolidations and you try to trade them up higher, right? Somebody had mentioned Ralph Lauren. Ralph Lauren's pretty similar, right? So this one hasn't made the move, but look at how it's kind of coming right into these levels. And this one's kind of cupping with a little tiny handle here, if you want to call it that, but also looking very strong, right? Burlington Coat Factory, right? Burl, right? BRL saw a big move on earnings. Now it's consolidating and flagging. Do you think that this is the, as high as it's going to go? No, maybe we consolidate and we, try to flag out and break up higher. So this is why I look at those earnings moves and then you watch those consolidations. I think even like Foot Locker, right, was, a huge move on earnings. This thing pulled back, seen a move right here from the 200-day, 20-day moving average, and we saw some follow through today. So this could even be one to potentially play up higher, right? Actually, look at this. Like we saw, I don't know why I didn't trade it, but a huge wedge here. Oh, it was going into earnings. Got very tight right here with the higher low. And then now we broke out and we're kind of moving up there, okay? So even Foot Locker looks pretty decent. Real, right? Real is coming in a little bit here after a pretty strong move. So this one might be setting up in the near future. What is it? Levi, look at Levi, man. Just nice flag breaking out right there. Just like a nice trend. These retail names, for the most part, look pretty strong. XRT is a retail name, and this one's kind of going sideways. Right? But we are putting in higher lows. So this is also, strong stocks potentially get stronger. So if I look in, I don't know, what's Etsy is kind of online retail. No, eBay. I'm looking at online retailers. eBay's, broke out of this trend right here, and now it's consolidating. This one doesn't look too bad. This one looks like it could be setting up here too. That was a pretty clean breakout of this, pretty clean area. And now its price is actually holding right above it. A little fake out and shakeouts maybe potentially happening before its stronger move. Once again, Fed will be up here somewhat soon, and we'll go from there to get an idea of things. But okay, those are some of those names. Look at Affirm. Affirm looks. Affirm. I don't know if this was on my tight list or not, but this one looked pretty good for a while here, and it's getting some follow through and breakout. But I don't like entering into a move this aggressive. So go to the 15-minute time frame. What are we seeing right here? Nice move, consolidating. Yeah, I mean, this could very well pop right back up. I would prefer to see it come in a little bit more maybe. But if you're trading this intraday, I mean, shoot. I mean, we came right back down to this opening. That could be a potential play right there, just an intraday sort of trade. All right. I'm always hesitant when it's under actually the opening range, so maybe not. Maybe if it came back in and got back above this and then started moving up through that level, I'd prefer to see some strength. But then at that point, Jerome Powell's going to be talking. It's just one of those days, man. It's just one of those days. Let's see really quick on Google. Was I right to wait? I think so. Did it move down $1 already? A little bit more, but it's not quite down the full buck. So maybe a little bit more here on Google. Let's see if the market net flow. Okay, market net flow did lose convergence here, so I'm okay with not having that position on. And this makes sense going into these events, so it is what it is there. I'm going to wait a little bit longer there to see, and I'd prefer to see some strength. MOARRR. MOARRRR, I was watching here for a potential breakout. It did move up pretty nicely, but then Bitcoin had that volatility, came back in, and kind of like shook out of this channel. But we're kind of right by there again. So is this a back test to potentially move lower? I don't know. I don't necessarily, you know, I wouldn't think so, because you typically have crypto equities that relate pretty strong to Bitcoin, or the correlation is pretty strong. But lately, it just hasn't been the case. And Bitcoin's still in a buy signal, buy trigger on the cellular shift tool. So I'm still leaning more bullish there. But these ones are very aggressive names. So you have this little breakout, shakeout. It's coming back in. Sometimes this happens before its main move. But is it actionable in this current moment? I mean, no. In my opinion, no, because I don't know where the entry would be. Like, okay, enter here, but where'd your stop be? Way down here? You know, minus 13%. That's how crazy these things move. All right, so, you know, it would be nice to see maybe, you know, come off a little bit and then move higher from that level, and then start building. The 5-day moving average starts to turn back around and start to kind of continue up. And then maybe it sets up something there at that point. But right now it's just chopping kind of just under this volume profile of basically 21 bucks. All right, let's take a look at Apple. Oh, I'm sorry, CLSK was part of that too. So CLSK is seeing a nice move today, and that's moving with Bitcoin. So that's important to kind of pay attention to there. I guess they're all kind of all moving there, and then Riot's up too pretty nicely on the day. So CLSK, okay, so from a technical perspective, it's consolidating, right? And one might look at this and be like, yeah, but careful right here, because if it breaks down from this, you know, kind of advanced type of like pattern of head and shoulders, these lower highs, you know, it could result in, you know, a quick flush down to 11 bucks. But also on the flip side to that, you can look at this and be like, well, yeah, it's lower highs, but it's also, you know, getting tighter as time, you know, moves forward. It's getting a lot tighter. The bulls are holding up their camp. We get little flushes, but it's holding up. So as it's kind of coming into this area, if we do get a solid break, this could produce, you know, actually more of a bullish sign to break out. Now, is it actionable right now? I think it's, if you're looking at it, maybe it just depends, right? So it depends on time frame. Obviously, we made a strong move. I prefer to see the consolidations. But if you go to the weekly time frame,
noting that their gene editing breakthrough has been featured in the Science Journal.
So look at the weekly time frame.
Delta.
This, you know, we saw an explosive move, and then for many weeks we've been going sideways. And as time progresses and we're going sideways, the 30 week is catching up, the 40 week is catching up, the 10 week is just flat and neutral. So you can look at this and be like, wow, actually, this looks like it's really gearing up for its next run here, and you would be right. So if you go long on a weekly time frame, you'd be like, okay, I can have a stop at the low of this, you know, way down here.
Stabilize U.S.-China relations and not create frictions that can escalate to unpredictable and dangerous ways.
Which, okay, if that's the case, understand that, you know, where would be an ideal stop? Well, maybe at the low of all these weeks over here, right? That's been holding up. So that's 20%, 21%. And even if it goes half down to that, that could be a nail biter for a lot of people. Like, it could be down to 10%. So what you could do in these situations, right? This is how I'd approach it is, if I wanted to just be like, yeah, I'll get a starter position, and if it goes down, I'll build into my starter position with the hopes that it goes up. But I don't want to take a full position here and then get stopped out at minus 20% of a full position. That's just not how I roll. Now, a lot of people will be like, well, what if you go in and then it doesn't come down and you can't build it and it goes up? Okay, cool. That means I'm up in the position for one. But two, if it consolidates and sets back up again, I can always set back in. I can pyramid into it, right? It's not like a end all be all, like oh, I got to go all in right now. Like chances are, like if you're going all in on a position or your full position size right out of the gate, the likelihood of you getting the perfect position, and if this is your strategy, you'd have to get the perfect position pretty much frequently all the time, right? It's very unlikely already to get the perfect entry. So a lot of the times you have to build into positions or take a starter position so you have it on your radar and you can come back to it. But when you're playing with high beta names, you really got to make sure your position sizing makes sense. If I went on a full position right here, like, and I have my stop down here, the trade idea itself makes sense, but the position sizing is what's going to really screw it up. Because a lot of the times, if it starts coming down and I don't get stopped out, I'm like, oh man, it was down 12%. This is wasting my time, and then it comes back up to break even. You may be like, I'm just gonna get out of this and go somewhere else because my focus is somewhere else, and then it makes its move, right? So it's just you got to be creative and clever, kind of how you do what's best for you. If you think that going all in on the position at that specific time makes sense, then you got to do that. That works for you. For me, it's never made sense, and I'm typically nail biting, or I'm like thinking about the position too much. If it's too big of that position, you know. Okay, we're gonna head now into Apple again. We've been having some questions about my kind of thoughts here. Look, I mean, this is a great breakout on Apple. That's all this was. Boom, smash it, breakout on this AI news. Do I think it's over kind of hyped? Kind of, but this is what the market's doing. Do I enter in here? No, I look for consolidations. And Apple's great at continuing, and they're also technically sound, like they work well with technicals. But yeah, if it starts flagging out and consolidating, it could be one to watch. Somebody had mentioned bring up the Apple daily time frame, the Wyckoff. I haven't seen that for a minute here. Let me see. Yeah, here we go. So, okay. So here was the Wyckoff. Now, it's actually, I don't know why this is matching this. So up thrust after distribution should actually be higher. So it's actually technically could be kind of doing that. All right. So up thrust after distribution is a higher shot. But overall, I did extend it out. So this is the same path that we drew out way back here, but I didn't do the time frame obviously accurately. But the moves, I just extended it further out on the timeline, and it's kind of still following it, I would say, right? I mean, the up thrust after distribution could be a lot higher. Let's see what an up thrust, like, let me show you so you can see what I'm saying. But also note that, like, it's not like tradable, in my opinion, right? Like, it's not like something I'd be like, okay, yeah, I'm confident this is going to happen. Like, I don't have the time for that. What is going on here? Why is it doing that? What is going on? Okay. I don't know if this is going to work. No. Okay, give me a second. I don't know why this looks all weird. Okay, so here's the, there you go. So, here's the up thrust and then the up thrust after distribution. You get this, like, pretty strong move, kind of blows people out. Actually, what's funny is IWM did this, right? So, is this the up thrust after distribution? And then we have to redraw this out where it kind of like goes sideways. Maybe not. I don't know. But it is kind of matching still. But does that mean I go in short here? No, dude, it don't mean that, right? I'm not going to take on a large position or a full-size position thinking that it's going to go down and try to get, like, catch a move way down here. Like, I'm just not going to do it. Plus, you're showing strength. So in my opinion, you would be waiting for the weakness to show up, if anything. What stock did I say that kind of, I forget. But yeah, it's pretty funny. S&P 500 sitting at, I think, roughly lows of the day right now. Of the cash market session. No, it's not. They're just sitting at local lows. Let me pull back up my chart here. Reset here. There we go. Okay. So we're trading now within the upper monthly expected move. This is, this is kind of what our thought process was in the early trading session or whenever we went live was, there's a higher probability that we come back within the upper and come back within the upper weekly or the weekly upper. Right now, to be honest, though, it's kind of just a nice consolidation, so we'll see what takes place here, but it's coming back in, makes complete sense to me. It's a very nice calm pullback so far. We have Jerome Powell around the corner coming up, right? A couple hours. So we can see some volatility. We can see volume dry up, obviously, before that. And then we could see, obviously, him come in and, we could be right back at all-time highs. We can also come fill the gap. Like, honestly, like it literally could do this. Jerome Powell can come out and market's like, yahoo! And then he says something during the press conference and then the market like keeps on up or whatever, consolidates. And then when it closes out the press conference, the market starts selling off and just goes right into oblivion and back to fill the gap. Like, that's how crazy this market can be, right? So how do you position for something like that? You look for stocks that are kind of uncorrelated to the S&P 500. And if you're trading the S&P 500, just be aware when the time comes out. And as the closer we get, right, the closer we get to that event, we can see some little bit wild of moves because of liquidity drying up, volume drying up. Okay, if I go into the trade tab here of the S&P 500, we'll go to the trade tab and see, what is the expected move right now. The implied volatility going into the event still right now is $4.56. Okay, let me just be very clear here. It was $4.85 as of yesterday going into the close. So the expected move has came in a little bit, but the price has moved a lot. You see what I'm saying here? My point is that Jerome Powell is going to hold a huge weight on the next decision of this market. And the market is pricing that in with it through implied volatility. They're saying there's still a $4 plus expected move. And yeah, we've already moved $4. That's what's going on right now. We moved over the $4 marker, right? Because we're trading outside of the daily expectation. And right now, going into this event, they're saying, once again, there's still $4 plus. Okay? So what does that mean? It means we can go up to this, we can still hit a 2 standard deviation move. I mean, that's more than possible. Don't rule it out, man. These are the days where you got to be a little careful, right? When we get into these higher volatility, people typically try to make a little bit more aggressive trading decisions. And they can, you're going into an event that's very binary. You never know what he's going to say or do. Like, remember that one year in June? Like, what was it? He came out, I was on vacation. And he came out, I think it was like, I forget what he was said exactly, but it was very quick and aggressive. No, maybe that was a different time. But let me go back in history here. I think it was like, honestly, 3 or 4 years ago. I think it was right here, yeah. Boom, right here. No, that was December. Was it here? Oh, yeah, it was right here. Right here. Boom, boom, boom. Yeah, I'm pretty positive. I'm almost certain this is when Jerome Powell, I'd have to look, but this is in June 9th, 10th, 11th, or 13th, and then so forth. So this move was caused, I'm almost certain, by Jerome Powell. Like, that's 3 days, man. That was like, look at this thing. 3 days, boom. 8% decline in 3 days. That was freaking wild. Close at the low. And then all of a sudden, then we started to bounce after that. I'm almost certain that was Jerome Powell. Oh yeah, we were talking about Wyckoff, right? The IWM. What I was saying was, remember this, right? So we went sideways and we had this up thrust and it was like boom, boom, boom. And then we're like, oh, it's breaking out. And then it completely reversed on itself. What if Apple's doing something similar? Okay, well, just now we know that there's a possibility that it could be. Does that mean we act on it? I mean, when the trade sets up, we can act on it. So if you go to Apple, you look at the 15-minute time frame, yeah, it's extended, right? But also, I mean, dude, what if this thing keeps going? Man, it could keep going. So look for consolidation, see how it handles after that. But I wouldn't really be more bearish until it's below the 5-day moving average and it's starting to decline, and it just ain't there yet. Just ain't there. You were trading? No way. Hey, what's up, Trader Joe? I just saw you in there. You were trading SPY puts at Olive Garden that day, dude. That's hilarious. Unlimited soup and salad for you. That's great. I was just at I think I was just where I just came from, actually, in Bridgeport. Thank you, Love Set Match. I always, you know, you all know how my head works. You just took a vacation too, Ruben? That's nice, man. Hopefully you enjoyed it, got some time, friends, family, whatever the case, or by yourself. Some people like to take vacations by themselves too. Hope you enjoyed yourself. It's been a while since I had a little bit of a vacation, and honestly, my mind couldn't wind down, and I probably could have stayed there longer. At least that's what my wife was encouraging. She was like, "Dude, just stay, get some time, you know, with your family or whatever." And I couldn't relax. It was a little hard of a vacation for me just to calm down and relax. My mind was everywhere. I just couldn't relax. Couldn't do it. It was tough. But there was pockets in there where it was nice and just chill, and brought me back. But overall, like the last 2 days, it was like just constantly thinking of stuff that I got to get done and do. I just couldn't clear my head. It's crazy because when you work by yourself, like when you work, self-employment, or whatever, like you're constantly thinking about like what you got to do. And I just remember when I was at Verizon stuff, when I was done with work, when I went on vacation, like I was on vacation, like you're not talking to me, leave me alone. There's people in place, like everything's set up. But I guess self-employment is just not the same, man. You just gotta, it's like always in your head. I gotta do this, and I gotta do that, and I gotta do this. All right, let's check out Google, because this was one that I was considering trading. I don't know. I mean, I don't know, dude. I kind of like how it's setting up. We're back at the daily volume weighted average price. Maybe I'll just put in a little starter there, and I'll see, and I'll play it and see maybe if I can build into it, if it allows me to. Give me a second. If I can log in, I gotta do it from my phone, unfortunately. Uno momento. Let me see here if it makes sense. I'm not fully committed on anything right now. With an hour left, dude. I would like to play that for a potential pop reversal. But the easier trade here is just like looking at Apple and looking at Microsoft or Nvidia and playing the follow through on these names. That would be the easier trade. Meta's creeping back up. It's quite literally just Amazon. Amazon moved up. Google's kind of sitting there. I'll execute on it, and I'm just gonna be a smaller position, because if it goes down lower, I'm gonna give it some space to breathe, and then potentially play on a better entry. And go from there. And then I'll probably close it out going into the meeting, unless if it's way up. If it's up a decent amount, I'll just cut it off a little bit more, and then I'll see how it resolves during the meeting. But I don't really want to get smashed during Jerome Powell. So what I just did right there was I entered right there. Low position in Google. And now I'm looking to see maybe if it goes up, cool, whatever. But I would prefer it maybe to come down a little bit and flatten out, and then start to turn up a little bit more here. That's what I would kind of more likely prefer. Okay. Market net flow is flattened out. This is all flattened out going into this meeting. SPY's up 1.1%. We're holding above the upper monthly expected move. And then we're trying to kind of break from this little flag here. Now, is this going to be a fake out and we're going to come back in, right? There's always a higher likely possibility that we come back in. So just keep that in mind too. But this is a pretty calm pullback overall on the S&P 500 as it currently stands. I just took my first technical trade of the day, but it's rather small position, so I wouldn't put too much anything on that. Okay. Yeah, Tesla dailies. Yeah, let's take a look at Tesla. Yeah, Tesla. Yeah, Tesla's looking pretty good, even on the weekly time frame. It's looking like it's shaping up. This little undercut here, I actually prefer seeing because it like gets people out of the position, and then people get like, oh, then they start seeing, and they might enter in again, and then you get a breakout and you get a little bit more forceful action. So we'll see. Apparently, the pay pack, like somebody had mentioned something about a pay package with Tesla or with Elon Musk, is that we get that information tomorrow. And honestly, I have no idea how the market's going to respond to that, and I don't really quite understand what that's about. But I mean, we're talking like, look at the weekly time frame here. Just look at how tight these closes are. Close, 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 and we're like right here, right now in the current part of the week. Just 4 weeks tight, very tight. And now we're working on a 5th week where we're getting a little bit of volatility here. So. The only one that you don't play is Tesla. I mean, I get it. Do I trade? Do I keep it to 5, 10, or anything that has? How many? Oh, how many stocks do I trade? Oh, like at a time, I mean, so in my swing trading account, I kind of like would be, I feel a little bit, messy if it's over 10. So I feel comfortable managing up to 10 positions, but right now I mean, I went on vacation and I took some off. So I don't really have anything on. I just took a trade intraday. I should clarify that that's a prop firm that I'm working with right now. And I'm trialing out a funded prop firm right now. It's not in my main account. But yeah, like up to 10 names I feel comfortable with. I have... Oh, I still have a position in BYON. I totally forgot about that. Or did I say that already? I have a position in BYON. Dude, I'm all over the place right now. I have... What the heck, dude? I only have 2 positions right now. And this one I have to close out now because I totally forgot about it. Not BYON. Actually, I'm going to check out BYON now that I brought this up. What was my entry? I'm up. I took it on this day. It was just it's just an extended type of trade move. Nothing crazy. And it's up on the position right now. I'll hold on to it. I got out of some of it, but I thought that I exited the position, but I have 100 shares on, so it's like literally nothing. I must have just mistyped something or whatever. But I have 100 shares there. Not, like I said, nothing crazy. That's like $1,500 of the equity. I think I took like a 500 share position in this, and then I exited some. Probably yesterday and a little bit today, I assume. Man. All right. Whatever, dude. All right, S&P 500 still doodling around here. I don't expect much to come from this until we have Jerome Powell. So just be on lookout. Like I said, the higher probability would make sense to come back down to the upper daily and upper weekly. I'm not looking to short it, but I would look for long positions. That's why I took a stab here at Google. Let's see how that's doing. I don't know. It's up a little bit. So it's not really doing exactly what I wanted, but I don't care. It's up a little bit. Cool. Awesome. And honestly, if it's up a little bit, I don't know if I'll clip the position yet. My thought here is I can move it to break even, but if it's before Powell and it's only like up right here or even comes back down, like it can literally do this. Even if it comes up here and if I hold the position, you can go like this with Powell, right? It can just move like that, or it can go, or it can go, or it can go. It can do all of that. So, I don't know. I'll probably just move it to break even and just, if it stops me, it stops me. It is what it is, okay? Just, I'll keep you posted on is kind of a whatever type of trade here, just to have a little something in there, just to feed the beast. Zero date, yeah. I mean, I don't trade the zero dates. I traded one time, I think, a zero date, and yeah, everyone knows how that happened, or knows what happened there. It's kind of annoying. That was pretty lame. I like traded a zero date and it flew through the moon, and then I went into close and it was already closed out by Robinhood, because apparently they do up to, like, they start closing trades out like 30 minutes prior or something. And I didn't know. You know, I didn't know. So, whatever. Can I check it out? KSPI, McKenzie? Yeah, we'll check. I'm kind of unfamiliar with that one. KSPI? Or just, it kind of sounds familiar. What is KSPI? This is definitely an equity that's, what is this, like Brazil maybe? What is this? Oh, is this Chinese equity? Dude, the chart looks great. What is this? KSPI, why does this sound so familiar? Zero dates for scalping. Yeah, I get it. You're still holding the shop idea? Nice, nice. You're just moving the stop up. Cool. Yeah, I think I'm out of it now. I just closed out of it because I was scaling out, and it got to the point where I was like, you know, I'm just leveling out my positions or whatever. But that was the smarter move, is to probably just move your stops up. I was just cleaning house, resetting, man. I needed a little bit of a mental break on my portfolio. You know what I'm saying? Like, sometimes you get to a point where you're just like, I'm gonna smooth it out now. I've been on a run. Chill out. Fintech mobile app, KSPI, that's what this is. I mean, so it looks really, I mean, the chart looks great. I mean, it's strong trend. I don't know, like, more of an IPO type of thing, I'm assuming, or maybe, I don't quite understand the back history of it, but, you know, you have these higher lows, and now it's kind of like building into this little tight here on the right side of it. So it could be a potential early entry to come try to retest this area of supply that we previously ran into. But overall, I mean, it's holding up. So if you enter here, I mean, you just have a stop down here or a stop down here, depending on, you know, your risk tolerance, right? Yeah, it broke out of here, and it kind of was a little choppy. Came in, a little move up. I mean, it's a good looking chart. I'm glad you pointed this one out. But I'm assuming that this is just not an American-based company, so I don't. But it's pretty smooth price action, so I don't know. It was on Trade Ideas. Wait, Trade Ideas? It was on Trade Ideas, or was it on the tight list? Oh, was it on the video where I was going through the tight list quickly? Perhaps. It's clean. You should have just took credit for it. It's a good looking chart. Hey, thanks for the super chat there, Indian. Look at the monthly chart. Monthly chart of you love trading BlackBerry. You're always talking about BlackBerry. It's so funny. Monthly chart. Let me see here, dude. I'll look at it. Let me see. Oh man, dude, I don't even know how to pull up a monthly chart. Give me a second. I'm gonna mess up all my settings. So, man, I don't know. I think it's just hard to understand what BlackBerry does, but I can see, like, your point, how it could be potentially, you know, look how tight it's getting here on the monthly time frame. Like, literally, it's like it closed, and now we're right here. So, I mean, if it comes back into this area, clearly, this area is quite important for BB, right, for BlackBerry. But you're playing with fire. Like, I wouldn't short it, because you can get these crazy squeezes. But it's also in a bad trend. So I would just go with what you're comfortable with. But right now, we started to see a move, and we're coming back in here a little bit here, there too. As far as, like, is it accumulation? I mean, we'll know in hindsight, that's for sure. Give me a second, man. Come on, man. What is going on here? So we have a big volume day to the downside. Then you have, I guess we get big volume over here, pretty decent volume over here, right? It came up, but it came all the way down. So I guess there is a lot of volume being traded here. And we have the, MACD, you have the low, a higher low here. So you have a positive divergence. I mean, I'm not going to rule it out as the possibility for it. It's not my type of style of trade, but it's not like you're completely wrong. But for accumulation, for me, I look at the 4 stages, right? I look at stage 1, 2, 3, and 4, right? Stage 1 is the accumulation phase. Then you get markup. Then you get distribution. Then you get decline. So when I think of accumulation, I think of like, what's the trend doing in the accumulation phase? Is it flattening out or is it still declining? And if I go into like that monthly time frame, well, I'd have to go to the weekly time frame because that's really kind of how I establish my stuff. So I look at this and I look at the 40-week, 30-week, right? That's how I gauge, a little bit bigger of a trend, and it's still declining, right? So if I look at something like PayPal, right? Look at PayPal, right? So PayPal, it's actually starting to flatten out now, whereas BlackBerry is like down here. So, can it come back up and start doing this? Maybe. It sounds like you might be trying to get the early stages of a possibility of that. So I look at this and it's like, could this be the potential accumulation phase for PayPal? This is where I'd say, yeah, potentially now we can be moving into that stage. Right? The 200-day is starting to kind of flatten out to potentially turn up as more time passes, right? And this, as we start to kind of get this data away from us and we start filing in this data, it's going to start to turn up. And that could be the early stages of a potential turn to a markup phase. But it looks like we're getting kind of hung up right here at about 68 on PayPal. It's been just one heck of a miserable name to trade. Tried a few times, but... yeah, I'm not, yeah, there could be good narratives for it. Who knows, man? I really don't know. I'm just, from like the trend perspective is all. So if you're right and the narrative plays out, I mean, that thing could get ripping. I like to, but see, when I trade, so I'll look for the rip. I'm not trying to catch the big rip necessarily. If I do, awesome, cool, congratulations. But if it rips like up here, and then all of a sudden there's like news that no, this is the newest, like this, they're doing something big, they're renovating or whatever. There's going to be consolidations, and I can always trade into the moves, right? So if I miss this move, there could be another move. Earnings is around the corner there too, so I don't really establish into earnings. I should probably just keep an eye on my position that I just took. Let me see here. What are we doing? We back down, we back up. What are we doing? What are we doing? Google just consolidating. So I'm not really looking to add to the position, but like if I was to think that, like maybe if it starts breaking out of this 176.80, right, it's kind of flagging there. I feel like it's going to just come back down, but whatever. When I say small position, like I'm literally up like a couple bucks probably by right now. Nothing crazy. FCell, yeah, we talked about FCell a little bit earlier. It actually looked like it was getting pretty tight there and setting up because of the earnings or whatever, Trader Joe. So I looked at that. I'm not that great at trading the the smaller price stocks like this, so I have to really tighten in the position sizes. But that earnings movement we're talking about a couple days in, and we're like, well, I mean, it's right by that dollar marker, and we're talking. I don't know what the short interest is on this. Maybe you might. But what I was saying was, I was like, if I was short here and we started breaking above $1, like I feel like I would get a little nervous, right? It's like a psychological level. If I was short, like I'd start to look to cover. Maybe that means other people might look to cover. So, and we're kind of like on the cusp of that. So like an early entry, might make sense for a potential break of that $1. And if we get, breakout traders breaking over the dollar, if we get, short coverings over the dollar, and there, like I said, there's degrees of freedom, right? If it comes up like $1.05, $1.10, who knows where it might be to really initiate a potential squeeze. And I say squeeze thinking that it's a high short interest name, but I could be wrong. So, thanks. Yeah, 23% short. Okay, cool. So yeah, I don't know what the days to cover then are, but I would imagine with that, it could be like a 4 to 6 day to cover sort of thing. And it could produce something, man. It really can. These names you can do really good at. I just my risk tolerance, I just never been good. So I always have to go like super small, which means I'm never going to make it. I'm never going to hit it big. It's going to be small progression throughout time. but I'm never going to lose big. So unless there's something just insane happens that I can't control, I guess there's always that possibility. Okay. We are seeing a little bit of uptick here, but really overall on the S&P 500, looking at Bookmap, we're just in and out, range trading, calmed down. We have an hour and a half before we get into the FOMC, which is going to bring in obviously some movement into the markets. Like I said here, it's a nice, pretty nice calm pullback. You still have the higher probability of coming back down here, but don't rule it out, man. The further we get from the weekly expected move here, we can have breakaway moments where dealers then look to, buy into buying, right? Buy into buying as they dynamic hedge. They were wrong on the week, so they have to adjust. And that's always a possibility there. So I'm kind of open either way. If we get further outside of the upper monthly expected move, that's where I typically put on hedges, right? If we're early in the month, which I think that we are, right? We're halfway through the month, basically. Okay, if we get pretty far outside of that, I'd say maybe if we come into, 54, I would even say higher than that, maybe even up to 5,500. That's where I'd probably look to hedge a little bit.
Reducing Japanese government bond holdings at its policy meeting.
I will say, but I don't really have anything to hedge right now. I have cash, so.
According to Nikkei News.
Sorry, yeah, it's So Kelly, Ian Kelly, yes, yeah. So it's 2:00 is when you get the initial when you get the FOMC the drop, right, and when you get the decisions and all that stuff. Okay, then the market does their thing, and then 30 minutes after that, you have the press conference where he answers questions after he reads this statement, right? Yeah, I was talking about the IWM a little bit earlier, and I mean, it's just hard to trade. I've had a hard time trading it. I traded it I traded this right here, this specific day down to the low, and I traded it and I got out this day. So it was like a very tactical move, and then it went against me, or well, not against me because I was out of the position, and then we're just up 2% today, right? So it's like this just very, very crazy volatile, and this is kind of my thought here is there's one of two things going to happen, right? So as the S&P 500, the SPY or whatever, and the Qs, all that tech is making new highs, what's not doing it is the Dow Jones Industrials and the IWM. So there's going to either one be a catch-up trade where IWM could really outperform, or we're going to have, that divergence resolve itself at some point where the market's like noticing like, dude, these stocks have just been ripping Apple, Microsoft, Google, Nvidia, whatever.
Updated phase 1 data in its allogeneic NK cell therapy for solid tumors at a conference, November Kilo Golf November.
And then they look at this and they're like, okay, well, where's the opportunity now? And then maybe there's the rotation into like the smaller names. And I think that's a possibility. And that could happen maybe when these start to digest and so forth. So I'm open to that. We're in positive gamma territory. The gamma flip line's at 53.20 as it stands right now. Okay, we're above a rising 5-day moving average, albeit that we're pretty extended given the context of today. But I'm looking for long setups, right? I'm looking for long setups. I'm looking for to digest up until the point where we start declining, or if we get way extended. That's when if I had more positions on, then I'd start to look to put on a hedge. And, I did that last month. We got way outside of the upper monthly expected move. I put on a hedge. It started going in my favor a little bit. And I was like, I'm just going to close it out because I was also getting into cash. And it came the last day, dude. It came right into the upper monthly expected move. And then we bounced from that level a little bit on the very last trading session. And I thought that we weren't going to be coming back to it, right? It just happened to be that we did. So yeah. Let's take a little peek at Google here. I just want to check in on the position. So this little move here, this is where I said you could potentially look to add or something. Like that would be probably a better idea if I traded it from there. But yeah, it's moving a little bit. So as the time gets closer to obviously Jerome Powell, this is where I traded it, right? We talked about the little potential move on Google. I'd probably update my stop to just slightly above break even. So now it's a green trade. So I'll do that. I'll get that taken care of. And then I fully expect it to come down and stop me out at some point. That would be my expectation, to be quite honest. But if it wants to keep going, cool. If it doesn't, I'll take my lunch money. I'll take my lunch money. So I'm going to update that now. Once again, this was being traded out of a more of a day trading account. So it's not my swing account. I haven't established a new swing trading position today. But we'll go into some of the names that I'm looking at. Give me a second here. Hey, Colby. Yeah, very well could. I'm not options trading. I just trade equity. That's my main focus is just trading equities. I've always felt more comfortable doing that. I stopped trading options a couple of years ago, I think it was. I was trading them. I did all right, but it just never seemed to get it was just like trading stocks is hard enough. And then you add in the element of time, it makes it even more difficult. And, I think the options, I think obviously you can be very successful trading, trading options, but remember, options are a risk management tool. They're not, touted like that or shown like that. And that's not how they're really promoted, but they are a risk management tool. And, if you're good at selling options, right? And then also setting up risk parameters and doing spreads and stuff like that. But if you're just buying puts or buying calls, it could be a very quick losing game. You got to make sure that you're doing it and you have a really clear idea of how to execute on it. For example, if you don't want time to be that much of an issue, you have to go out further, right? You have to do, leaps. But zero dates, man, those things could move 1,000% in a day. But they can also they go to zero much more frequently too. What do I think about the whole prop firm business? I think it's like yogurt shops. They popped up everywhere out of nowhere when all of a sudden Pinkberry became popular. And that's what we're doing now. And then a lot of yogurt shops went out of business because they realized that it was a quick money grab and it probably wasn't their initial passion to get into yogurt. And then they did things wrong. That's how I see it right now. I feel like it's exploding in popularity, but there's a lot of, shysters out there and you're seeing them drop like flies. So, I've talked about one specific company. I've tried multiple, but I've only said that there's one that I actually really like so far for the future side of things. And that was Top Step. That was the only one that I was like, okay, they seem fair. They're always front facing. The CEO is very active on Twitter. They do live stream. They want people to get paid. They move them up to live frequently and they talk about it. They talk about people that are successful and the people that have to get better. So I feel like they're unless there's something hidden behind the scenes that I don't know about, right, with their company, I wouldn't know that, but that's the only one that I'd be like, yeah, they seem legit. They feel like they're actually there for the trader. They set up fair rules, but understand this too. It's like the rules, some of these rules are, they're not going to make it easy. They don't make it easy. It's tough rules. And then the one that I'm working with right now, I've already ran into a couple problems.
LEVALE CFO saying that they're still constructive on the outlook for China. Victor Mako.
The one that I'm with right now, so there's a couple that I was playing with. One I got denied. I'm not going to talk about that, and maybe another day I'll get denied. I'll talk about it more because technically it was my fault. Denied payout, but it was also changed on me later. A very, very, very weird situation, and a little upset about that. But I'm still trying to maybe figure that out before I talk about it. And then two, the one that I'm with now, I've ran into a couple of things that are a little strange, but they were pretty quick to help me out to understand it, which ended up being my fault once again. but they were kind of like almost like they weren't hidden rules, but it was like you know, my like dyslexic brain like read over it. So I'll talk about that one more if I get my payday actually. And it's actually trading what I prefer, which is stocks. Also looking at NVGS. Let's take a look here. Navigator Holdings. Oh, that's cool. Yeah, good looking chart here. So Navigator Holdings. I'll share a chart that Trader Joe shared with me in the description here. Oh, whoops, I can't do that. So NVGS, here's his chart, is coming into this area of support, holding up on these volume profiles. It's always cool to look at these. And we're pulling back into kind of that channel. So it's a little clear look here if I can pull it up on my computer. Let me see here. So here's that chart. This is weekly time frame. Clear trend to the upside, pulling back here slightly these last couple of weeks. And then today, getting quite a reversal, right? We dropped at the low. So these type of moves, they could definitely mark reversals, right? You get this scary move, flushes people out, huge volume day. If we close at the highs of day, or even if we pull in a little bit and flag, these could create opportunities to trade it up to the upside. Navigator Holdings. I'm not too familiar with the company, but I get the chart. I get the reason as to why as we're pulling back.
Alphabet's Waymo.
Oh, great.
U.S. safety agency seeking new details from Waymo on all prior incidents involving their self-driving vehicles. This was after a report of a Waymo car hitting a telephone pole.
I'm pretty sure they just mentioned
Waymo
Alphabet
issued a
there.
software fix after that incident.
I got to make sure my stop's updated just in case. Did they mention Alphabet? Was that Alphabet news? I might have heard that wrong. I'm not 100% positive. I'm just going to make sure my stop's updated. All right, I'm good. It's a green trade. I updated my stop and just took a little profit right there. Okay, so I'll mark it so you guys can see it. I still find it very hard to trade and be live, so I apologize for that. But I feel like we did this one okay. We did a little early entry, kind of speculative entry here. It consolidated. We talked about a potential re-add, but I just didn't do it. I just didn't do it. And then what I just did here, right there, is I took a little profit off of already a small position, and I updated my stop just under this little swing low there. So I'm in the money. I took some profits up higher, and now I'll see what happens as we get closer to the what's it called? Okay. And by no means is this, advice to take the same trades or anything, but maybe, just seeing like what it is that I look at, when I enter and stuff like that. And then I guess we can zoom in a little bit so you can get a little bit clearer of a picture of how that looked. It's fairly quick, right? These are just a minute time frame. Right, so, I mean, it's only like a 0.25% move, 25 basis point move. But nonetheless, it's 44 cents per share. Taking green and 44 cents per share is pretty good for an intraday trade, especially if you trade size. I didn't really trade size there, but whatever. Whatever. Hey, whatever.
Vale CFO saying iron ore demand from China remains strong.
Let me actually move this way. If it keeps going higher, I want it out of the way. All right, let's take a look at some other names. Any other names here? I got some on the radar here. Someone had mentioned Kroger, Ralph Lauren. Oh no, I think we already looked at Ralph Lauren. Yeah, we talked about Ralph Lauren. We talked about a lot of these those type of names.
77 counterparties taking 447.6 billion in today's Fed reverse repo operation.
Sorry about that. I thought I heard something crazy just happen outside. I thought I heard this big boom, but it was nothing. Apparently it was just in my head. Okay, Kroger, let's take a look here. Pretty strong down on the day here. And we're coming into earnings when? Coming into earnings in just a little bit of time, a few days or so. So I want to go to the trade tab. And we're looking at roughly a $3.13 move for Kroger. So I don't like issuing new positions, like I said, going into earnings, but I would be looking at this pullback for potentially coming down into this range as we're kind of breaking down here. Somebody had mentioned Kroger. I wonder, now that you mentioned Kroger, SFM, that's coming down too. So Sprouts has been in a stronger trend, and this is pulling down. So I feel like if these grocers are going to start turning back around, these could be potential names to keep an eye for potential moves higher too. So, you know, it's always good to look at their, not necessarily, well, I would say their competitors or ones that fall within the same kind of industry. Kroger is, right? Kroger is shopping centers, if I remember correctly. And then I think ACI is like Albertsons. That hasn't gone anywhere forever, so I'll ignore that one. Somebody had mentioned Fubo. That looks invisible. Let me zoom in here. Fubo just yeah, I mean, I wouldn't short it given where it's at, but I wouldn't go long it either. These things could get pretty crazy, but when I look at the 15-minute time frame, when I see it look like this, all choppy, it's not my type of style. I don't like trading this type of stuff. I like liquid, and I like it moving around where I can get in and out, and they don't get stuck in place for a while. So not necessarily my style to trade there. If you're swing trading it, maybe like you can figure that out from that perspective. You know, have a stop at the lows, but just understand the trend is pretty beat to smithereens there. SoFi has been putting a series of lower highs in. So lower high, lower high, lower high, lower high. Right today, right, we started to see a move out of this very tight pocket. Look at this. See how tight this got right here? Woo, and then we started breaking out. So maybe this is the start of something as we're getting kind of right around that 50-day. And then maybe this is the start to give us somewhere, get us moving maybe. So how do I look at this? The 5-day moving average, right? See how we kind of held it, right? We're holding this resistance, started flattening out and started turning up and started holding it. So now I'm looking at this as like a potential flagging opportunity. Now, do I want to enter here? No, but if we start consolidating a little bit more, right, and the 5-day holds, and then we could start moving from these lower levels and start seeing strength, that would be something that I'd be a little bit more interested in. VLO was mentioned. Is this energy group? Yeah, energy names have been getting kind of just cracked. So I'll be keeping an eye on these energy names. I tried trading in and out of some, but just no love. One that I liked was Sting. Yeah, this one moved down. It was a nice flagging pattern, but then we, gapped down. It's seen these type of moves. Even CHRD saw some big volume come in right over here, and then we saw a nice breakout, and then it reversed on itself here. So a lot of the energy names are getting beaten down. I just be cautious on all of them. And if they get very extended to the downside, I'd be a little bit more interested in maybe playing shorter term bounces. Because overall, like, look at the weekly time frame. It's like, okay, it went on a monster move, and now it's pulling back into what? This is XLE, by the way. The 40 week and the 30 week, which just had a crossover there. So is this just a bull trap over here? Perhaps, maybe. Perhaps, you never know. Until it happens, I guess. Blink BLNK was getting very tight. I'd be interested to see what this one's doing now. Nice. Yeah, so this was part of the trade idea here. It was getting very tight. This is a clean breakout. So we were looking at this as it was getting pretty tight. I didn't, like I said, when I was on vacation, I didn't really execute into anything. But we saw the breakout, nice volume, okay, and then it came in a couple of days. And when you trade this, it's like, okay, you'd have your stop at the low here. And if it gets stopped out, you can look for it to reset up or so forth. And it came in, consolidated, saw more volume come in. We're getting follow through. So right now, like, do I enter here? No, because the move, this was, the better trade was here through this. Because now if you enter in and it comes back down, you're looking at a 10%, 15% drop for that stop down to here. So now I'd say, okay, now can it consolidate? Or maybe even pull back in a little bit and have the 200-day flatten out. So it was more of a quicker trade given the context of the chart. But overall, yeah, nice little pop there. So if you play the breakout, say if you even entered this day, like, you know, midday or whatever, you know, it's up 9% right now or something like that. So, which makes sense. These are high beta names. Today it's up, you know, 5% of that. So the trend is still down, right? So a nice pop, don't be surprised if it reverses and starts to consolidate more. That's very typical. But we are starting to kind of like get back
We're
into...
about 40 minutes out now from the FOMC decision. Stocks off the very highs of the day, but still holding on to solid gains, particularly outside of the Dow, with the NASDAQ up more than 300
tripping. I keep on hearing
points,
something.
the S&P up 63 points, and the Russell 2000 enjoying gains of more than 2.5%.
Oh my gosh, I know what it is.
The dollar index remains lower by more than 0.75% at 104.
This dude, it's his mic.
The VIX is down about 3%, almost 4% at 1234, and gold futures are up 29 or $30 or 1.25%.
It's the trade the news thing, dude. His mic is like he's breathing into it or something, and it's creating the background. It almost sounds like bombs explode. It's like boom, 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 boom. My bad. But it sounds like it's far away. Scare the crap out of me. Okay, so yeah, nice looking chart, nice looking breakout here. Still in a declining trend. So just always understand, like if you miss a trade, don't worry, it'll set back up. They set back up. You know, even if it goes up further, it goes all the way to $5. Right? You're like, I missed it. It's okay, but it might consolidate, right? And then it can set back up where you can make another 20%, 30%. I mean, if it's gonna move, it's gonna move into a markup phase. It's still the early stages, right? This is the start of a markup. Like if this was accumulation where we go sideways and now it's starting to flatten out and we're going to potentially rip, it's in the early stages. So if you do enter into like names like this where they've already made a move, make sure that you consider your position sizing to be able to withstand volatility and digestion in longer periods of time. Because once again, that's, we don't control where the price is going to go. We can only control what we can control. That's what we're buying, right? So that'd be Blink. When we buy it, it could be potentially now, or it could have been earlier. How much we buy, which is our position sizing, and then when we get out of it, or when we add to it, right? When we sell it. Okay. MRK. So this is a good example of like, the little fake out. So I traded MRK. It was tightening up, right? Higher lows. Boom. It broke out. So I traded this breakout here and it came back and I got stopped out on this specific day right here. I marked it and I got stopped out, right? Boom, boom. This was the risk. Like people say, yeah, show me your losing trades. Well, there you go. There's a losing trade. It was very exciting. Okay. But then it went lower. Okay. And then it turned back up. Okay. So right now it's like, oh, see, if you just stayed in it. Yeah. But if I just stayed in it, that means I'd have to withdraw, or I'd have to withstand all of that, and comes all the way back to break even then, which you never know what's going to happen. So now if it sets back up and it's just hanging out here, I can always look to re-enter, right? If it sets back up, this could set up to go higher. Who knows? But it's kind of out the radar now. I just wanted to show you kind of like, how I manage it or how I look at a trade. Okay. Here's a couple other names that Trader Joe's bringing up. MRNA. Oh yeah, that looks good. Yeah. So MOARRR, check this out. Yeah, this is great. Good call out here. So we broke out of this base, which is a nice style base, huge volume breakout, and that was actually on earnings. Then what do we say about earnings? You follow the name, right? On big earnings gaps, you want to see if it consolidates. It consolidated perfectly. Trade missed, right? Flagged out. Boom, we broke up. Huge follow through. Now what are we doing? Now we're actually building a larger consolidation where we're getting a little bit more volatility. Okay, so we have a nice base here, and now we're getting a little loose and sloppy, but needless to say, it is still kind of coiling up here. Okay, so yeah, MOARRR. So stronger stocks typically get stronger. So do you think that this is the high and that's in and not going to hit it? Chances are no. Chances are we'll probably try to go for that high again. This actually might even fall under the holy grail type of setup where it pulls into the 21 period EMA or 20 period EMA. Has a rising ADX of like a 30 or something like that. And I don't have it on my I don't have the proper indicators to look right now, but could very well be one.
Elevance Health, after affirming their outlook this morning ahead of their Goldman Sachs appearance at the conference, saying their Medicaid redeterminations did have an impact on Q1 footprint.
This is a similar one too. Looks pretty similar. So Chubb, little Chubb. Is this an insurance name? I forget. Chubb Insurance, isn't it? Yeah, nice consolidation here after a pretty strong move up here. I don't know why it moved up like that, not on earnings. Maybe this was was this the Warren Buffett thing? Is that's what you're mentioning? But yeah, nice consolidation here towards the lower end of its slow consolidation. Yeah, this also looks very good. These are really good looking swing trades. Another good name. These are my style of trades, I should say. And then GE. GE's been on a run. I always get a little nervous on monster runs, but stronger stocks typically get stronger. So is this the bigger consolidation right here? Well, we have a lower high. It's getting pretty tight here. So I'd just be more patient on this. If it starts breaking out of it, then I'd have a clear idea of the stop. I really liked, I like how Chubb looked, and I like how all these names look. They're all tightening up. They're all getting ready for a move. It's looking chubby. Sheesh. It's looking chubby. Where did my YouTube chat go? Oh, there you are. It's looking Chubb. All right, let's take a look here. I want to just check in on markets. Markets are still consolidating here. Did I get stopped out of my Google position? I want to see that. I think I did. Oh, no, I didn't. Okay, never mind. I'm still in Google. Yay, I'm still in it. It actually looks like it's setting up again. So, I mean, like if I was probably not on live stream, I'd be looking at these as potentially like pyramiding into and trying to just play it up higher. Also, though, we're kind of coming close to the whole event, so not really necessarily my style to be too aggressive into it. But we got the early entry right, and then it's like I look to build. These would be kind of things that I'd be looking for, right? We said, let's see if we get a higher low. Still not a great trend for the day, and be aware that we're below the opening range, so we're kind of playing against the trend here. The only reason why I went with this was because the pullback was kind of just calm for the most part, okay? And all the other tech stocks were kind of moving, so I figured, hey, if those start digesting, we might get a little bit of a rotation. That's literally the only thought process I put into that. That's it. So got a cool, nice little green trade there, but it was sized properly for the current environment. Meta is still down on the day. Look at Meta. Meta don't look as nice, but you know, they could potentially change, right? This is kind of like bearish flaggish. So if it starts breaking the low, maybe it comes into 186.40. It's not the greatest look. Yeah, look, we're getting some kind of volatility there. So that's probably the same thing with Google. No, Google's not getting that volatility. Just Amazon is. Maybe it'll come though. What's Nvidia doing? Nothing. Microsoft coming off a little bit here. Apple, they're all right by their highs of the day. They're just getting a little volatility. So we're getting, I don't know what happened here, but getting a little bit of sell side here, and we're getting some liquidity added above us too. You can see like there's sell orders are stepping in. We're trading back at the month to date expected move. I don't know, is Google going to break here? Google's holding up actually. I think it might come. I think it might break here. If something's happening, I don't know what's going on. I think it's just as we get closer, right? Volumes dry up going into these events, and you get these weird moves. So even on a strong move down, like don't be faked out, like because it snaps right back. Like we can just trade around. So I don't know. I'm not going to be executing into this. Yeah, it was a decent sized move there, but then again, is it a sustainable drop here as we're moving into this event? I don't know. It's all over the place. We need the event to pass. Implied volatility still remains high. Let's take a look at that actually. So implied volatility still, it's 441, so it hasn't changed, which the daily expected move was 480. So this is a big event. Yeah, SPY's coming in here. Like I said, I'm not really reading too much into this move, other than just it's coming in a little bit here on probably not that much volume. And we are still on actually bullish divergence, bullish convergence here. So where can we potentially come to if it keeps on coming down? Maybe look for the daily expected move or weekly expected move to retag. And I feel like I should be getting stopped out of my Google position, but it hasn't moved yet. There it is. There it's coming down. We'll see if it comes down and stops me out. It'd be funny if it didn't. Like a cent away. And they are adding liquidity on this little little sell side action here. So we're starting to add some beneath us. Here's a little bit coming in there. See if there's any other stuff being, yeah, we're getting some supported bids here. I don't know. I feel like it was just a little hiccup here in the day, and it's just going to chop right back up to the daily expected move. I'm kind of untradable little thing right there. Yeah, Qs are definitely better than SPY today. That's for sure, because it's being led by a tech rally. Definitely a tech rally today. Did I get stopped? I didn't get stopped. All right, we'll see. It'll probably happen. So you see these supported bids how they came here, but we also have still kind of stuff above us. I don't know. Like a little liquidity break of some sort. A couple orders came in. They moved the market. When volumes dry up, it's really easy to move this market in either direction, right? It doesn't take much. I mean, for an individual retail trader, yeah, but like if you're talking like larger traders that come in on these zero dates, the decent size, like large traders, it's a lot easier to move. And we're just trading there at the month to date. So. Give me a second here. Okay. Let's take a look at the meme stock, see what's going on over there. GameStop be doing nothing, man. Actually, so let's take a look here. So what were we saying? Where was it? I think it was, okay, so yeah, it was right over here. So remember earlier in the trading session we were saying, or is it a little bit further than that? I can't remember. I think it was right here. Or no, it was a little bit lower, I think. Yeah, I think it was a little bit lower. I can't really remember. We were saying how it's been technically kind of working good and we got very tight. We saw a little bit of a breakout, a little fake out, and it's been moving pretty cleanly where we said it gets very tight, right? Contraction leads to expansion. We got the expansionary move. This one happened to play out to the downside. But that's why I look at this stuff. So look for the tightness. When the tightness happens or after a strong move, it started consolidating, getting very tight here. And then we got the volatility that came in. Now, look at it. Okay, now we get a little bit move up into the opening range, pulls in. Now we're getting also kind of tight here, just in these little minute candles, right? And it's above the opening range. And notice how we had a higher low and we had the higher high right here. So is this gonna pop? Boom, right back up, you know, to where we had some more volume, maybe a few points, maybe, right? Maybe. See here, if I draw it out a little bit further, I draw it like this, you can see it's kind of been holding this trend here for the day. The downtrend at least, the downtrend portion. So if it comes up, careful because it can still continue this little path, but Is it the best setup? No, I wouldn't regard this as as anything that special. Like these little tiny, moves, but maybe like a C class sort of thing if for something quick. What else do we have? I haven't pulled up AMC forever. AMC is not nearly as clean looking, so I'll just pass on that one right out of the gate. What's KRE up to? Not much of a setup there. Bido has been holding up rather well. Semiconductors are holding up rather well. Actually, I'm interested in semis. They're up 3% on the day. This is a pretty big breakout in semiconductors, new high. So I'm interested to see how AMD is holding up on that. AMD has actually not been doing great. It's been kind of range trading. But when I look at this, is this the early kind of stages of an early entry to play it back up? And there's always that possibility, right? So we're range trading here. Perhaps we don't hold it. Maybe it comes back in. But if it does start breaking above the 170, maybe that's what gets us to start moving up higher. And that could be a potentially early entry to a better swing trade. So I have this on my radar. I've been watching this one. Letting your calls run through the move. Yeah, I get it. Bum 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 bum. Trying to see if there's been any pullback sort of plays. Utilities. I mean, utilities is consolidating after its recent run up. Maybe there's an opportunity in here somewhere. Started up way higher, but reversed on itself. DIA is up on the day. But man, DIA is just sitting at the lows of the trading session. So if I look at Dow Jones, like this kind of looks similar to Google, right? Google did the same thing. It gapped up, came in. Except we got a little bit of a move on Google. Did it reverse? Did it hold up? I don't really know. Yeah, it's just getting stuck right there. It's getting stuck at like 177. Right about there. I want to check back into GME. Maybe it's set up a little bit nicer. I'm looking for, right now, what I'm doing is I'm just looking for potential little opportunities here, maybe little scalp trades. I guess GameStop was somewhat decent of a call there, as we had the higher high, higher low. So is this the early stages of a move higher here in GameStop as we're trying to break this trend, or is it just going to fake us out again? TBD, to be determined. We are holding though, so I don't know. Like I said, it's not like my favorite type of setup here. I'm just kind of like looking. If you look at it now, you might be saying, oh, but it's also, flagging, it's wedging. Yeah, you'd be right there too. And it could break right back down and come back down, and come to the lower edge of the channel. Wouldn't rule that out. But I liked seeing the higher low. So at least gives us an idea of risk, risk tolerance if you're trying to trade it.
Markets remain largely in a holding pattern heading into the FOMC announcement now here, expected in 20 minutes. The NASDAQ and the Russell leading the way higher.
Hi guys, yeah.
S&P and the new all-time, just coming off another new all-time high up 58 handles at 54.33. The U.S. 10-year yield remains down some 14 basis points heading into the announcement at 4.262%. The 2-year also substantially lower, 4.69%.
All right, so 20 minutes to the decision, and then 30 minutes after that we have the press conference.
We have posted our preview for both the monthly budget statement and the FOMC announcement due out here in 20 minutes.
Oh, and we might get a little bit of an aggressive move as we come closer to the Fed decision. Like we'll get a quicker move potentially. My position's not up all that much, and I don't really feel like holding it into it. So I exit. Oh no, I guess I can just keep it. I just don't want to get slammed on the decision and have some weird entry. But Google has a tight spread, and it's a very liquid product, so I don't know if I necessarily need to worry too much about that. So I guess I can just keep it, but man, I just don't want it to get slammed on me. Volume or liquidity to dry up, and all of a sudden spreads to like blow out for a moment, and then I'm like caught way down. I don't think that's going to be that bad of an issue though. But then on the other hand, but what if it goes up? I don't care.
Southwest Airlines, LUV, Artisan Partners, Global Value, sending a letter to the board. They made over Victor.
Yeah, I feel like I'll get. I feel like it's going to stop me out before the announcement, but we'll see. Monitor it.
Artisan's 1.8% hold.
I really don't care now. Now I want to focus in on what else we can see.
Artisan saying that they echo many of the same points that Elliott made.
Yeah, the decision's going to be the rates are going to stay the same, but it will be interesting to see what the projections are, because I believe that's coming, the projections, and then any way that he answers and the various questions that come out, and that's what's going to really kind of move the markets. So. It's a calm session right now as we are held up in a holding pattern. Yep, 15 minutes. 15 minute. Let's take a look at some other stuff. What's crude oil been up to? The crude up about 1% today. Actually, this is kind of interesting. Crude oil has actually been seeing a nice little bounce here. And there's typically, this to me is interesting. Okay, let me walk you through this, because now I want to check a few other things. Okay. Huh. Okay, so I'm just thinking here out loud. Obviously, the move in the yields is being driven by the macro report, and we have some more data coming out here in a second. But I've shared this many times where, you know, sometimes if you look at oil's movements, they sometimes could lead the price of the 10-year yield, right? So if you like oil is the black line, it goes down, the yields followed. Black line went up, right? Yields followed there shortly after, right? Oil started going down, yields followed shortly thereafter. And the reason why I'm pointing it out now is because, right, yields are down pretty aggressively today, and oil is up on the day. It's been up on the day. So is this like a little temporary move fake out where it's getting exaggerated and it's going to come back up potentially in the near future? Maybe. If that is the case, oil, we'll look back at this and be like, oh, oil kind of signaled that, right? It's still early because the market has to digest all this news. But the reason why I'm calling that out is because there's typically a strong correlation between, right, oil and energy stocks. And you look at energy stocks, they're getting clobbered today. So is this just like a potential little like, hey, yeah, I'm looking at this and I'll play the trade thinking that oil is going to continue to hold itself together, consolidate, and maybe his energy name is going to potentially play a little catch up. I think that's an opportunity. How is my conviction on that? I'd probably say not crazy high, because I'm looking at the bullish percent index right now for energy. I'll just share it with you, I guess. This is the bullish percent chart for industry, and we're basically at 50%, right? So that means 50% of the stocks in the energy sector are on buy or sell signals. This one's a little bit choppier, so I'm not a huge fan of it, but RSI, you know, it gets oversold, it stays oversold for a while. It gets overbought, it stays overbought, but they typically rotate in and out. So it's coming down. It's not like I would like to see this a little bit lower, because the last times we were here, you know, at a 40% reading or potentially even lower, right, we produced some decent bounces. And now we're getting a pretty extended reading off this kind of aggressive move, and we're just right at about 50%. Even right here, you saw the high and the lower high in the RSI and the high and the higher high in the reading. So that right there was a divergence, and we actually started to see it rotate out. It would be cool to see this come in and have a positive divergence, but that we're probably pretty far away from. Oh, it's probably stopped out of my Google position now, just so everyone knows. At least I would imagine so. Dude, am I still in this position, dude? That's crazy. Or did I say I got out of the position? I can't even remember. Just trying to keep an eye on it. It's too hard. I am still in the position. Jeez, man. Stop me out already. I really don't want to hold into this meeting, but whatever. If it rips up higher, cool. Got about 10 minutes till. You're seeing a little bit, like I said, a little volatility coming into the inside. Let's see if implied volatility is changing at all. SPX. We'll take a look at SPX, the big boy product. We're looking at a $44 expected move there, $44.40 coming into this decision. So what we'll see probably here is implied volatility start to shrink after that it comes out, but it may hold up fairly well going into the press conference there too as well. So we'll kind of adjust and we'll see how that goes. If you're looking at the SPY is about a it's a $4.50 expected move. Now, I want to remind you that going into today's trading session, it was a $4.85 move. So volatility came off a little bit, but it's still rather elevated here. So the market's saying like, there's still risk here, okay? And risk meaning it's upside risk and downside risk. It's not directional risk, right? We're just talking about risk in terms of a range of it. Okay. 10 minutes still. Underneath the daily VWAP. Market net flow. Lost convergence. We've been in and out of convergence. Okay. 0-date levels. Let's update you on 0-date levels. See if there's anything that's changing. Our pin is at 54.50 for the day. That's the call wall. Really nothing's changed pretty much the entirety of the day. So 54.50 is right here. Okay. 54.50, 135 million, maybe probably a little bit more. I haven't updated it yet. Okay. We had some at 54.25 as a 0-date level too, and we've been trading kind of within this realm. The other level to pay attention to is 5400. Coming back into 5400 to me makes absolute sense at a point, right? We've done that multiple times where we break up and then we come back down to these main levels. The new call wall though is 5500. That's where traders have been reaching out to. Okay, if I go to net gamma, now look at 5400 is still really, really high, right? So to break from this level, it's going to be very hard unless the traders continue to reach out. Okay, so we have this level, which is what we just mentioned, 5450, which we're right by. And then the call wall of 5500 is traders are trying to reach out there. So whatever Jerome says right now, if the market likes it, we could be at 5500 in a moment, right? This little flag right here, boom, we're going to 5500. It's a very strong possibility, okay? Be aware, we're already outside of the monthly expected move and outside of this. So my thought process here is if we do get good news, I may start to look to actually have a small, like maybe, I guess I don't really have too many long positions on, but what I would do if I had more long positions would be look to hedge up in this range, 5,500. Because to break from this would be probably quite difficult, you know, given the context of gamma until that changes, okay? So if you're looking at short right here, you can get lucky, but you can also get blown to smithereens if traders really reach out there. So this is a calm before the potential storm, good or bad, right? So patience. Tick tock, tick, tick tock, tick. What's GameStop doing? Still riding that trend line. Look at this trend line ride. It's like wee, and it's holding that little opening range here too. It's down 2.2% on the trading session. GameStop is, so that means Roaring Kitty's down $45 million on this today. No, I'm just kidding. I have no idea, but that was crazy. His live stream, he was literally down like 200 million. And he was like acting like he didn't even care. Like, I just don't get it, dude. I just don't get it. My brain doesn't operate that way. Incredible. Incroyable. You crazy, man. Dude, why do I feel like GameStop's gonna get moving here? It's a little trend line, man. I just hate being in front or just in front of an event. All right, chopping sideways, people. You know what? I'm gonna re-up my water as we come into the event. I'm gonna turn on a little bit of tunes, turn them up a little bit, and then I'll be back here to obviously stream this guy.
Over 5 minutes to the FOMC rate decision. Expect to keep rates on hold once again today, and will likely reiterate that they still need to
Thanks,
gain
Jason.
greater confidence that inflation is moving sustainably toward the 2% target before considering a policy change. Maybe some minor changes to the
Money's just imaginary.
paragraph on the current state of the economy. But
I'll be right back, people.
small downgrades in the descriptions for economic growth and employment, which are currently at solid and strong, respectively. In the event dot plot, we are expecting to see the median expectation roll down from 75 basis points of cuts for this year down to 50. Will be an adjustment for next year as well.
Okay, I'll be right back.
Also note we're looking for a change in the long run forecast for the second meeting in a row, expected to rise to 2.75%.
The U.S. 10-year yield holding right around 4.25%, 4.265% heading into this OMC announcement, and we remain below 4.7% in the 2-year.
Okay. Here we are. 3 minutes. Got a bloody nose, man. this elevation change really messes with me. Spy puts, what do you think? Me? I'm just not, I'm not, oh my gosh, my position actually. I'm not going to have anything on. I think I might have a little bit of Google on, just because I'm up in the position and my stop is basically, I have a strong feeling I'm just going to get stopped right out right when it drops, probably like a whipsawed out. But I've already reduced the position like 75%. It was a small trade, but I'm not trading really into this. Okay, I'm not executing a trade prior to this, given the context of volatility, and I just don't feel like taking it. So I'll wait to see how the market digests it, and I'll kind of go from there. Couple minutes here. Gear up. Okay. This right here is the daily, the volume weighted average price. The blue line is the volume weighted average price from the morning report. Okay, right here. Like I said, we're just flagging out, consolidating right here at around 54.50. Excuse me. Moonraker.
Just over a minute to the FOMC rate decision. Also expecting the monthly budget statement for May, expected minus $276.5 billion.
No, it's not a free site. That's responding to the news right there. It's called Trade the News. You can probably get a free trial. I think it's like a very short trial though. It's not cheap. All right, here we go. Countdown. Nice job, Cash Cow. You're going to say that they're cutting rates? The current FOMC projections are that they're going to remain the same. If they do cut, if they do anything...
Rate decision in just a few seconds.
If they do anything that's unexpected, the market will have a move, that's for sure, a big one. Much more so than if it was just as expected. There it is. Whoa!
Interest rates on hold as expected.
Okay.
The median forecast for 2024 rising.
Here we go. Initial reaction to the downside.
4.625%. Longer term also rises to 2.75% as expected. Four Fed officials penciling no rate cut for 2024. The officials putting down
no rate cut for 2024.
The vote was unanimous, 12-0. Fed statement saying that job gains have remained strong, unemployment is low, but they reiterate that risks to achieving policy goals have moved toward better balance.
Okay. Market's digesting it. Let's see here. I just put in a range, the 30-second range of the of that Fed rate decision. So we'll see here now. I would imagine I'm stopped out of my Google position at this current moment.
The higher than expected median dot for 2024 and the expected slight rise in 2025, that does pencil in 100 basis points of cuts for next year versus 75 previously.
All right, so right now we're just trading actually at the volume weighted average price for the early report today, the CPI data. We're above it currently, and we're trading actually above the anchored VWAP currently, the 30-second, just right when it launched. We're trading actually above it. We're trading at it now, slightly below it, for the Fed interest rate decision, okay? That's pretty much right here.
We've seen a slight dip in equity markets, mostly
right here.
Constituted
Careful,
in the
right
Dow.
here.
Once again, the S&P holding on to gains of 50 basis points. Treasury yields remain right about where they were heading into the announcement. And again, that's largely as expected, that they did raise that median dot for this year, maybe a bit more than expected.
There we go. There's the market moving. Whoa. All right, so we just tagged outside of the 30-second opening range for that. So we'll see if this picks back up. Holding above the VWAPs, volume weighted average price for the meeting. So that's a positive sign. so far, and it's holding above the also the anchored volume weighted average price from the CPI. Just a quick reaction. We'll see what happens. Highs of the trading session, roughly at about 547 on NQ.
Just looking more closely at the Fed statement, only minor revisions. One of them includes saying that there's been a modest further progress toward the committee's 2%.
GameStop breaking that trend line, still holding up rather well here.
A lack of further progress, as stated in the May readout.
I got stopped out on the remaining, obviously the Google position, clearly. Okay. Trading around the 54.25 level. See if market net flow is giving us anything here. Dang, there's a big order that came in underneath us right here. Okay, let's see how this digests, see if anything can happen. We have Jerome Powell coming out here soon. So far, it's a nothing burger. I mean, there's been some subtle changes, but the market hasn't responded quite yet. Initial reaction was to the downside, digesting that move. Now we're going to start to see, hey, what's going to really take place here. Market, basically, they had mentioned that we're not really projecting a rate cut, which the market's been saying that we're going to get a rate cut, and it's been good news for the market. But now, if they change it... You never know, man. You never know. Yeah, pretty much saying the same thing. There's nothing crazy here. We'll take a look to see if the CME watch tool updated at all. Might be a minute for that. See, I want to see where Google came down to, because now I'd be interested too. So yeah, I stopped out. I entered here, took some, and I got stopped out. I probably, that candle right here, had to have whipped it out. I'm out of the position. Okay, now it's coming in. All right, I'm going to check one other thing here. I want to take a look at the SPY and see how much volatility came off. It didn't really come off yet, so it's waiting for Jerome Powell once again. So we're at 4.37. It was 4.5 for the expected move going into that, and we're at 4.37. So you guys, implied volatility, we can shoot right back up. We can break down here further. Just once again, this is let the market resolve itself. Remember, expansion, contraction. Right now, we're kind of in an expansionary realm. You know, it's consolidating here in the shorter time frame, but volatility is still in kind of an expansionary state. So risk remains, you know, pretty high on both directions. Have some sort of support beneath us here, so trying to hold that up. I'm gonna add this in. Just getting the Jerome Powell stuff ready. Japan's rate decision tomorrow. That's a good point. We can pull that up, see when that's going to happen. All right, let's take a look here. Just anchor volume weighted average prices, see where we're at. So we're currently below it. So this is the area I say kind of watch out. So right now we're trading currently underneath. Well, I mean, it moves so quickly. So just be aware. We're trading in the first 30 seconds of the announcement. So we haven't broken from that, but we are trading underneath the volume weighted average price from when it started, which is, just be aware of that, be cautious. And then we're also underneath the CPI. We're talking 30-second time frames here. So 30-second candles. So it's very quick, very fast. But, you know, it tells us where we can potentially start trending. So keep an eye there. Okay. As far as 0-date levels, 54.25 here on S&P 500, we've been floating around kind of pinned at. So if I update this, let's just see if that's changed at all. 54.50 still remains the main level, and then 54.25 would be, you know, one of the other kind of sizable levels. So if we start breaking from 54.25, there's not much beneath us, you know, other than 54.20, but 5400 would be that level to really eye in on if price comes off, you know, another 26 handles or something. But right now it's chop city. Powell coming on at 2:30, yeah. We'll see if there's any interesting commentary other than the ones that we were already provided. All right, we're trading at those volume weighted average prices. So they're leaving rates unchanged. Made sense, right? No surprise there. The 2024 inflation forecast was from 2.4 to 2.6. The median forecast shows one rate cut in 2024. I'm just reading a tweet from Kambosi. Fed says that inflation is eased but remains elevated. And they expect their meeting by meeting approach. Well, there's no surprise there. Nothing burger. Let's see if volatility is coming off at all now. See if it opens the door for a nice trade. 4.4, it's still pretty elevated. Anything else moving? GameStop came in quite dramatically over here. I mean, it's holding rather well. I mean, it's kind of just still constructive here. We're back above those volume weighted average prices. Banana, thanks for subscribing to the Prime membership, man. Appreciate that. Yep, dot plot was moved higher for longer. Thanks for subbing to the channel on Twitch. The Banana Prime sub. For anybody that doesn't know that's on Twitch, you can sub to the channel if you have an Amazon Prime account for free. So you don't get ads and stuff. And then you get, I think, there's all kinds of like random benefits. I have to mess with them still. But that's the main one. All right. Just waiting for something. Dun, 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 dun. Okay, let's go. Okay, let's go. We want Jerome Powell. 54.30. All right. Dude. Can you take me higher? See if we're getting anything here. So still we have no convergence, but we do have the bullish divergence. And we had some pretty wicked orders come in down here. 541, pretty large size. That was the biggest orders of the day coming in at pretty much the lows. $541 is the current magnet, so maybe S&P 500. Where's 541? That's kind of where we came into. That's the magnet. We're trading at the daily expected move right now, the upper daily expected move, with still a huge implied move still left. And we came back in the weekly expected move, right? That was kind of to be expected. We saw that happen. So now if we get this out of the way, can we start making our run for it? Ooh, can we do it? Let's see how some of the bigger names are holding up here. Take a look at NVIDIA. It's up still 3% on the trading session, holding up, I mean, honestly, rather well. Actually, it's looking like it's kind of getting pretty tight right here. All right, we saw this aggressive move down, consolidating. Still got Jerome Powell around the corner. We have Google sitting at lows of the day. Microsoft still holding up rather strong for the day. Apple's up 5% on the day. Apple literally just came into a high of the trading session pretty much. Darn near close. Pretty wild. Hey, Malice, thanks for subbing to the YouTube channel. Still waiting to see if anything opens up here. We're still trading very, very tightly here. Okay? Very, very tightly. We're trading in the middle of the range, the very first 30-second range of that report. We're back below both the anchor VWAPs from this morning's report, CPI, and the report from just now. Is what it is. 541.65 is the... Yes, upper weekly expected move. Yes. Market's like, we want Jerome to confirm everything that we just read. Because maybe he's going to say something that we like.
The dollar index climbing a little bit here in the wake of the FOMC announcement, still down about 0.75% on the day, but its best levels since earlier this morning there in the dollar index.
Yeah, so dollar's coming up like they said. Okay, what's the 10-year yield doing? Off the lows of the session. That makes sense, kind of, because it was got beaten up. So if the dollar and the 10-year yield want to go up, I mean, this could put pressure, obviously, on the market. As we just seen, the reverse of that. At a standstill. I wouldn't necessarily call this bearish. I wouldn't call it bullish. I just consider it a standstill. Be neutral. Don't be in a position where you think you know what's going to happen next. Just be willing to adapt and change if you're wrong. I personally would think that we're going to go back up to 520, but, and head higher. That would be the bias, but, well, we can easily get snapped. We got about 15 minutes left here before Jerome Powell comes in. But all my positions are thinked on that. Yeah, no, I just got to will. You know what I mean. You know what I mean. You think what's going to happen, or it's not even that they think. It's not even like my position that I think I know what's going to happen. It's like the ideals are stacked in a certain favor, so that's why I think it. And if it ends up being wrong, I just get out. You know. I'm interested. Okay, what's oil doing now? I feel like that energy trade, like a smaller.
Eli Lilly, FDA granting
Okay, what else coming off?
selpercatinib traditional approval for thyroid cancer.
Coming back up to the daily volume weighted average price. Lily's getting some news. Ooh. So far, price is holding up rather well. We're right back at that. We're close to about that 520 range. Be aware, he's coming out in about 10 minutes. He's going to start talking. Is he going to talk some sense into the markets, or is he going to talk some euphoric push? Looks like it's like flagging right here. It's a little tight consolidation, so we're going to get probably a little aggressive move here. Right here. It's getting pretty tight. Okay. All right, so there was that 520 tag. So we'll see if we can actually get through it, though. Holding above those volume-weighted average prices. We're getting a little bit of supply overhead here. So see how they just added some supply over here at around the daily volume-weighted average price?
You're listening to Trade the News.
You're listening to me and Trade the News. It's coiling up here. It looks like we're going to break out of this range. We'll see. All right. Let's take a look at some of these memers. GameStop still down. AMC, not really even interested in it. Yeah, not even interested in it. NVIDIA. Let's take a look at NVIDIA. NVIDIA's chopping around pretty heavily right here. Apple up 5.5% on the day. This is hitting new highs of the trading session. So if you're looking for something to follow through on, I mean, Apple's the one. Apple's got the flow. Pressing and pressing, man. Okay. If we're going to have a catch-up trade and we're going to start moving up higher, I still think that there could be something there in Google, but it's flat for the day. Meta's down slightly here, and it's kind of just going sideways. The one that the attention's kind of being focused. Amazon's at the lows of the trading session. Very kind of sporadic day, but there's just a lot of focus here on Apple on this breakout, or on this breakout for the last couple of days here. And I know you might be thinking, well, it's already at 5%. How much more can it go? Who knows? Who really honestly knows? Okay. Getting hung up there at the 30-second range there from the announcement. Not like crazy pullback. It's just kind of going sideways here. Yeah, Apple would be the name that I'd say. Yeah, maybe 219 to 220. But we have 10 minutes before Jerome comes out, and these things they can move quick and potentially even reverse on us. So be aware of that. All right, let's see if we can get up there. Let's go, baby. Take me. Take me for a ride all the way up to the sky. S&P 500 is just kind of consolidating sideways. The focus here so far right now is Apple. It's kind of diverging from all of that. Up to 219 now. Almost. Just weird. We have some pull. So I'm just curious to know if the other big components fall, are they going to still rotate into Apple as the opportunity here, or is they going to pull it back down? Getting hung up right here at just the opening range, the 30-second range there for the report. And we're coming into, obviously, about 8 minutes for Jerome to come. We're above the volume-weighted average price from the announcement. And on top of that, we're above the CPI one as well. 54.50 would be a level to watch. That would be the zero-date call wall that we can get potentially pinned in and around. Where is that? It's right here, 54.50. We're not too far of it. We came close to it today. Below us, 54.25. Below that, 5400. Right now, we're just consolidating. And Apple just hit over 219.30. So that's like I said, this was the one to kind of keep that eye on. 220 is not too far away. Doesn't mean that it has to stop at 220, but that would be kind of the initial spot that I was kind of eyeing in on. If you've missed the trade, you can always look to say, hey, if it pulls back in, or maybe we find strength after a potential pullback or dip, or maybe a back test, that could be a potential thing to look for too. Okay. 19,520. Upper part of this range right here. It's trying to do it. It really is. Like you can see just kind of like how it's not really pulling back here, but man, when we're going to get like an expansionary move here soon, and it could be just one of those whipsaws again, a boom, like whipsaw type move, or a boom. Because Jerome Powell, like I said, is about to come out. Okay. My bad, my camera's out. I'll reset it. You're listening to Trade the News.
Note 4,
reset my cami.
PRA.
Overheat, maybe?
Incremental report saying that internal memo says they remain open to exploring strategic alternatives.
Give me a second.
For Romeo Alpha.
I've been my money now. Let's see here if that did it. Aha! Ladies and gentlemen, I'm back. Thank you for letting me know about my camera. All right. 5 minutes till Jerome Powell hits the stage. Getting a little bit of a consolidation here in Apple. And we're still consolidating here on NQ. Let's take a look at implied volatility, see if anything has been changing. Hey, it's up. Implied volatility actually increased right now, people. Just be aware of that. It hasn't come off yet. So they're really waiting here for Powell. It's 4.32. It was just 4.3 a second ago. So it's not a big difference, but it's not coming off. Okay. There is still risk here, quite a bit. And it's not directional risk. Like this is like kind of like a binary type of thing.
For J&J, tell plaintiffs filing a motion for a temporary restraining order to limit J&J's use of a bankruptcy strategy.
J&J saw a pretty extensive move there on that news.
Did see most of the U.S. states.
A little bit of a flush move right there. Kind of undercut the lows here.
Broad settlement of the talc issue yesterday.
J&J. Wonder if that's going to be a little bit of a reversal candle here on that news. Maybe keep an eye. I don't think it's trade worthy yet. But that news that just came out shot it down, undercut this little low. It's now trading at the high of that candle. It's only a 1 minute candle though. Okay. Apple's still consolidating at the highs of the trading session. Looking for a potential pullback to the breakout area. Or could keep consolidating and then potentially make its little push. Back at daily volume weighted average price for ES. And we're trying to go for that 520 thing again. Getting held up there pretty strongly. If we do break out of this range, we're looking at a 440. So like, what is this? 60 point range or so. You can play a potential one way of looking at it is you could just, the very technical, very easy measurement is you play, double the range or whatever. Okay, so that would be just a measured move. So for example, rectangle, let me rectangle it up. Let me rectangle this up for you. Okay, so if we break out...
This Paramount memo saying that they're focusing on optimizing their asset mix.
You potentially play it to the upper part of the range. Let me just change let me change the color to make it less aggressive. I'm just gonna do white. All right. So all I'm doing here is I'm just showing you the visualization of like a double the range type of thing. Technical measurement doesn't mean anything. It's just drawing on my screen, but it gives you an idea of risk, right? So if you're like, hey, I play the breakout, and I'm gonna have my stop at the low here. Remember, Jerome Powell's out in 2 minutes, so this thing's gonna move. It's gonna move. I don't know where direction, but if you're like just trying to trade it to a directional bet or whatever, all you would be looking here is like, oh yeah, I could potentially double the 30-second range, right?
Then we'll get the FOMC press conference starting in about a minute.
Okay. So we'll see how that plays out, just so you have an idea. Am I trading the futures right now? I'm not. Okay. Actually, I probably should be. I should have that open, actually. Yeah. I've already missed my move. My idea of trade would be up to the 520 and potentially play there. But all right, let's take a look here. S&P 500 on Bookmap. Trading around daily volume weighted average price. Apple's still holding relatively strong here. Actually, it is holding relatively strong. Jerome Powell in a few moments. I wonder how he's going to open it. Good evening, ladies and gentlemen. Good evening, everybody. I wonder if he's going to get a question about Roaring Kitty. Why do I feel like he's going to? Can you give us some insight into what is your take on the Roaring Kitty? He's going to be like, I have no idea. And we all know he does. He was on that. He was watching the live stream. Can I get your take on? All right. Everybody awaits. Shh, 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 shh. It's Jerome Powell. Do you have your questions ready? Yeah, I do. Oh, shit, my computer's down. Oh, fuck it. Can you reboot it? Oh, yeah. Did you bring any water? Dude, my tablet's all glitching out. I gotta close out all of these tabs. Oh crap, I shouldn't have that open here. Can they see my screen? Oh man, flick that tab. Flick that tab. Oh dude, I have 100 things open right now.
Powell saying the U.S. economy has made considerable progress.
Good afternoon.
Continued strong
My colleagues and I
job gains in
remain
the economy.
squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people.
Housing inflation is still
Our economy
too high.
has made considerable progress toward both goals over the past 2 years. The labor market has come into better balance with continued strong job gains and a low unemployment rate. Inflation has eased substantially from a peak of 7% to 2.7%, but is still too high. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply.
His tie's purple, so, nothing.
I'll have more to say about monetary policy
Here's the
after
volatility,
briefly
people.
reviewing economic developments.
Little volatility.
Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.3% in the first quarter. Private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, grew at 2.8% in the first quarter, nearly as strong as the second half of 2023.
Trading back into the volume-weighted average price of the announcement.
Consumer spending has slowed from last year's robust pace, but remains solid.
Oops. Right here.
And investment in equipment and intangibles has picked up from its anemic pace last year. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2.0% over the next 2 years. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 218,000 jobs per month in April and May, a pace that is still strong, but a bit below that seen in the first quarter.
Still trading within the 30-second range. We came out a little bit.
But remains low.
Came back in when Jerome started talking, and we're trading at the daily, the volume-weighted average price from the report. So we've literally moved nowhere since that report
in the supply of workers,
in terms of the VWAP.
reflecting increases in participation among individuals aged 25 to 54 years, and a continued strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs to workers
Looking to see if
gap
Apple
has
could pull
narrowed.
back in, but it did not yet so
A
far.
broad set of indicators suggests that conditions in the labor market have returned to about where they stood.
Say
on
220
eve
would be
of
the target here
pandemic.
still for Apple.
Relatively tight, but
Well,
not
shorter time
overheated.
frame on that breakout, but like to see him pull
FOMC
back.
participants expect labor market strength to continue. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.2% at the end of next year. Inflation has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in April. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The Consumer Price Index, which came out this morning and tends to run higher than the PCE price index, rose 3.3% over the 12 months ending in May, and the core CPI rose 3.4%. The inflation data received earlier this year were higher than expected, though more recent monthly readings have eased somewhat. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses.
Price action's getting very tight right here
forecasters, as well
on
as
NQ on the
measures
shorter
from
time frame.
financial markets.
Still holding above those
Median
VWAPs though,
projection
so
in the
careful on
SEP for
breakdown.
Total PCE inflation is 2.6% this year, 2.3% next year, and 2.0% in 2026. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As labor market tightness has eased and inflation has declined over the past year, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly
Coming back into
attentive
the
to
weekly expected
inflation
move, daily
risks.
expected move. Still kind of
We've stated that we do not expect
Flapjacking
it will be
around.
appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably
currently
toward
under the
2%.
volume weighted average price from the
So far this year,
CPI
the data
report.
have not given us that greater confidence. The most recent inflation readings have been
Still
more
within the
favorable than
opening
earlier in the
range
year,
of
however,
that
and
report,
there has
right in the
been
middle.
modest further progress
This blue
toward
line
our
right here is
inflation
the
objective.
CPI report.
We'll need to see more good data to bolster our confidence that inflation is moving sustainably toward 2%.
Apple might be pulling back into the lower
We
area
know
right now.
that
We'll check on that
reducing
right now.
policy restraint too soon
Apple's
or
not
too
pulling back
much
into that area
could
yet. It's
result
actually
in a
holding up
reversal
rather
of
well
the
right here.
progress that we've seen on inflation. At the same time, reducing policy
Apple's
restraint
not
too late
trading
or
with the
too
S&P
little
500 right
could
now.
unduly weaken economic activity and employment. In considering any
That
adjustments
is a
to
good
the target
sign
range for the federal funds rate,
if you're looking for
the
something to be a
committee
little
will
bit more
carefully
stronger
assess incoming
onto
data,
that
the
220.
evolving outlook,
Nvidia coming in
and the balance of
slightly. I think it's
risks.
really Amazon. That's getting hit. I think
In
probably
our
was
SCP,
Google up now. Google's
FOMC
kind of flat to
participants wrote down
sideways.
their individual assessments of an appropriate path for
Meta
the
was
federal
at the
funds
lows of
rate
the trading session.
based
So
on what each participant judges to be the most likely scenario going
here
forward.
goes Apple.
If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 5.1%.
220 would be target for
4.1%
me.
at the end of 2025.
Seen a pretty good snapback right there in futures too, but we're just careful the volatility. It's just trading around. Questions are coming soon. Okay.
Any kind of a decision.
Everything that he's
As the
saying right now
economy
was out on the
evolves,
report.
Assessments of the appropriate
He's just reading from it.
policy path will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we're prepared to maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly, or if inflation were to fall more quickly than anticipated, we're prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate.
I already hit it.
We'll continue to make our decisions meeting by meeting, based on the totality of the data and its implications for the outlook and the balance of risks.
Okay.
The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you, Mr. Chairman. Steve Leisman, CNBC. Just wondering if you could walk me through the committee's average inflation forecast. Core PCE is now forecast to be 2.8% by the year end. It's already 2.75, and after today's number, there were several forecasts on the street that it would be 2.6 at the end of this month. Does that tell you that the average official expects no further progress in inflation, and in fact that it's going to get worse? And if you have this wrong, doesn't it mean that you could have wrong the outlook for rates there?
Yeah, so what's going on there is that we had very low readings in the second half of last year, June through December, really, and we're now lapping those. So as you go through the 12-month window, a very low reading drops out and a new reading comes in. The new reading gets added to the 12-month window. So
Got quite a bit of liquidity overhead, people. Just be aware of that, right? If we can clear this, that'd be a nice thing to see. But it's trying to go for it.
You know, incoming monthly PCE and core PCE numbers. We're assuming, you know, good but not great.
Came within a
numbers.
few
And if
cents
you
here
put
of the
that on top of where we are
220
now,
there.
You get a very slight increase.
I'm being asked right now
in
about the
12
220
months,
target. This was literally just a
12-month, you know, reading.
just a round number, and I was just
That's
looking
right.
at like
Yeah,
kind
it's
of
just
a measured move from
conservative
roughly right from
forecasting
here.
things. If
Nothing
we were to
crazy.
get
Okay.
More readings like today's reading.
I didn't really
then, of
read
course,
too much
that
into
wouldn't
it,
be
and
the
I
case.
just came
So
out to
it's
around
just a
216, and I
forecasting
just
device.
eyeballed it up to
I think,
220.
Let me say that we welcome
Okay.
today's reading.
If you want to go a little bit
Hope for
stronger
more
of a
of that.
move,
But if
I mean, it's just a target, right? Targets
if it
are
comes in the way you forecast it,
targets
it
are
would seem strange for you to
just
be cutting
targets.
rates
So
at
you know,
all in
221
context of a
potentially if
rising
you're just trying to double this
core PCE.
consolidation
Thank
here.
you.
Yeah, no, I mean, I
Right.
think what we said is that we don't think it'll be appropriate to
So
reduce
I would say
rates
just
and
this
begin
area.
loosening
It doesn't mean it can't go
policy
higher.
until
This,
we
like I
have
said, it's
more
just a
confidence
potential
that
target for
inflation
like an
is moving
intraday
back
trade
down
sort of thing,
2%
right?
on a
We're
sustainable
basically
basis.
right there. So it's always
That's
if you
the test
traded the
we've
breakout,
applied.
right?
I don't know that-
Don't let a winner
I
turn
think
into a
if we-
loser.
I don't know
but-
that this rules that in or out. I mean, really, it's a forecast, a fairly conservative
All right, that's-
forecast.
I'll draw it
month
out
by
for it.
month that would lead to
There you go.
slightly higher, 12 months rates by the
That's
end of
all.
the year.
That's
If
the only
we
reason.
get,
No
you know,
other reason than that.
good, better ratings than
And
that,
we
then
have
we'll
this
see that
we have this
come down
liquidity
or
overhead,
remain
so
the same.
yeah,
If you're
just
at
be aware of it. Like
2.6,
we're seeing a little bit of move to the upside, but
that's
things
a
can
really
change
good
very
place to be.
quickly. Okay, very quickly.
Nick Tamaros of the Wall Street Journal. Chair Powell, if I
Nick
look at
Tamaros.
the rate projections, I see 15 of the 19 that are anticipating either one or two cuts this year, fairly evenly split between the two.
Hey, come back.
And so I wonder if you could explain a little bit more the nuances or the differences there. would 2 or 3 more inflation readings like the one that we saw this morning
That's such a child.
make a September interest rate cut possible?
So as far as the SEP part of that is concerned, as you know, I talk to all of the other participants on the FOMC every cycle, and we talk about their summary of economic projections and the their dot plot and everything.
Still
And
holding under that
what
liquidity
what I
here.
hear and see
Apple
is that
pulled in basically
people
to
are
that
looking
target
at,
area, just so you guys
a
know.
range of plausible outcomes, and in many cases, they're thinking, I don't really.
I mean, we're a few
I
cents
can't really
away.
Distinguish between two of these. They're so close for me. These are very close calls, but we asked them to write down the most likely one, so they do. And I think as you've said, there's 15 of the
I'm out.
19 are kind of close.
I'll let,
to
I'm not going to
around
even let remainder go. I'm
one
just
or
kind of, I'm
two,
just,
so
like I said, it was a,
I would look at.
well, maybe I didn't tell you,
I'd
but
look at all of them.
oh, I don't
as
know if it actually
plausible,
exited me.
But I'd look at, so I think that does tell you kind of what the committee thinks. But what everyone agrees on is it's going to be data dependent.
No, it didn't get me
no
out.
one
That's
brings
that's
to this
BS.
or takes away from it that is on the committee
Whatever.
a really strong commitment to a particular rate path. It's actually just their forecast and it's a combination of their forecast and
All right, I'm
their
gonna
own
change it up then.
reaction function. But again, everyone would say that this is very data dependent, and I don't hold it with high confidence.
So
And think if
I took my
you're
part,
looking
my
for-
profits there.
don't
I
really
had
think that
I had a
they're-
profit order
they're
at
not trying to send a strong signal that
219.99,
this
and
is
it
what I think is
literally
the right thing.
it
It's
didn't
just
fill
what
me.
they think at a given moment in
It doesn't
time,
mean it can't still
subject
come up
to
there, but just so
data.
you know, I
In
took
terms of,
pretty much
future
75% of
meetings
that
we
trade
want,
off.
we don't.
I took it right
try-
around
we
here
don't
though.
make decisions about
Okay.
future meetings until we get there. I think in terms of what we
I'll
need
leave
to see,
a few shares
I
on.
mentioned
I
it
have
earlier, we want to gain further confidence. Certainly, more good inflation
I have 50
readings,
shares remaining,
will help with
so.
that. I'm not going to be specific about how many because, really it's going to be not just the inflation readings, it's going to be the totality of the data. What's happening in the labor market, what's happening with the balance of risks, what's happening with the forecast, what's happening with growth. You look at all of that and you ask, are we confident? Have we reached an appropriate level of confidence that inflation is moving down?
This is just a
sustainably
chart of
2%?
Apple for those that don't know. It's a minute time
Alternatively,
frame. We're watching this
do we
breakout. It's
see
been moving
really
very
unexpected
strong
signs of
relative to the
weakness in
other
the
market
labor market that would
participants.
call for a response?
We're pulling back from
Which
that
is-
target
which is another
area.
thing that could
Okay.
happen, but again, we don't see
Just so
that.
you know,
And we
I
do
had a
see
position
we see today's report
a little
as,
bit right after the
as
breakout.
progress and as
And I
building confidence,
put a
but we
target
don't
order at
see ourselves as
219.99.
having
That
the
hit
confidence
that,
would
but my
warrant,
order didn't fill, so it came off a little bit, and then I got out at some of the
beginning
position
to,
manually
to,
and decided to
do some
keep on
policy
just
time.
a few
And
shares.
if I could quickly follow up, did
Okay.
you or
S&P
any of the
500's coming off a little bit
change
here on this news of
inflation
on
numbers,
Timrose
today?
while he's asking questions. Okay,
happens
let's pull up NQ
too
chart.
often,
Where
but
are we?
it does happen.
We're just
It
chopping
is,
sideways. We're at
data came out, it
520.
happened a couple of
That's the
meetings ago,
upper
a few
portion of the
meetings ago.
30-second
So
range
when that
of
happens,
the
when there's an
announcement. Okay,
important data print during the meeting, first day or second day, what we do is
not
we
really the
make
greatest
sure people
tradable
remember
area
that
right
they
here, just so
have the
everyone
ability
knows.
to
Okay,
update. We tell them how to do that.
it's not like anything is clear here yet.
Some people do, some people don't. Most people don't. But, and I'm not going to get into the specifics, but you have the ability to do that. So that what's in the SEP actually does reflect the data that we got today, to the extent you can, reflect it in one day. I think we'll see PPI tomorrow. We'll know
actually
more
clone
about
this.
the PCE reading as the month goes on. But the initial CPI reading and its kind of first level translation to PCE, we did have this morning. We were briefed about it, and people were able to consider whether they should make changes. And as I said, some people generally do, but most people generally don't.
For those just tuning in that didn't hear me out, so this here on the left-hand side is the S&P 500, where we're floating around that zero-date level,
Hi,
5425.
Chair From Bloomberg.
This is the opening range for the announcement, and those are the VWAPs from both macro drops today. If you break out of the range, the target area would obviously be, just a double measurement of that move.
Do you think
Okay.
that there still needs to
We're
be
s-
more
we're s-
cooling in the
still
labor
within it,
market
though.
to bring inflation all the way down to 2%? Or is there any sense that maybe the labor market is more vulnerable now to higher rates? now
We
that
tagged
many
into
of those
5425
imbalances
once
have
again over here,
eased?
okay, and we're still holding that level. Okay.
Sure. So
If we start breaking from it, there's not
by so
much,
many
5420, and then
the labor
below us,
market was kind of
5400,
2 years
which
ago.
would be a pretty
And we've seen it
dramatic move, okay?
gradually move back into much better balance between
Really
supply
quick,
and
we're right back at the weekly
So what have
expected
we
move and
seen?
daily expected move.
We've seen
We're going to take a look at
labor force
implied
supply
volatility
come
now.
up quite a bit through immigration and through recovering participation. That's ongoing.
Implied volatility
mostly
came off a
now
little
through the
bit, but there's
immigration
still
channel, but we've had
$4.13,
some
so there's
increases in,
17% vol.
prime age labor
I'm
force.
sorry, yeah, my
In
bad.
terms of
This
on
is
the
my
demand
apologies.
side,
$2.73. I was reading the 1 day. I'm
moving
stupid.
down.
$2.73. So volatility
Job
came off.
openings
That
moving
was my
down. We've
apology. My
seen
apologies.
Wage increases moving from very, very high levels a couple of years ago back down to more sustainable levels. We have seen unemployment creep up now 0.6 over the course of a year or so, very, very gradually. So you put all that together, what you have is still low unemployment, still 4% unemployment, historically low. But it's moved up a little bit. It's softened a bit, and you know that's an important statistic.
Give me a second.
But more than that, you've got strong job creation. You have payroll jobs still coming in strong, even though there's an argument that they may be a bit overstated, but still they're strong. So that's what we see. We watch the labor market, of course, and the economy as a whole, but the labor market very carefully, and that's what we see. We see gradual cooling, gradual moving toward better balance. We're monitoring it carefully for signs of something more than that, but we really don't see that.
As a quick follow-up, the surveys that make up the jobs report are showing different tales. There's been some divergence, especially we saw in the last report that we got on Friday. So how do you interpret that, and how does it change your view on the labor market?
So sometimes you can't reconcile the differences. You just have to look at it and try to understand, and that's why it always makes sense to look at a series, in 3, 6, and 12 months of things rather than just one report. But you're right to point to the last report where there were job losses in the household survey, job gains, big job gains in the establishment survey. So, we're left with ambiguous results, and we have to deal with that uncertainty around data. Nonetheless, the overall picture is one of a strong and gradually cooling, gradually rebalancing labor market. Job openings, while they've come way down, are still greater than the number of unemployed people. The jobs workers gap is still a significantly positive number, greater than it was before the pandemic.
Okay,
so
sorry.
Overall, we're looking at what is still a very strong labor market, but not the superheated labor market of 2 years ago or even 1 year ago.
Yeah, so what's my strategy right now? Right now, I'm just letting the market digest. This right here, but I'll give you a couple points of interest.
Back on the rates path, the SEP showed
this range right here. This range right here where price is at. This is on the announcement, the first 30 seconds, okay? And we have the volume weighted average prices. So my thought is if it breaks down, maybe it'll double that range. If it breaks up, it can double that range. This is NQ, by the way.
Yeah, the big thing that changed was the inflation forecast. So the inflation forecast moved up several tenths for the end of the year.
And then the other main idea was Apple. Trading Apple's breakout into 220, which we did hit that goal. So there you go. If you took that trade, congratulations. We came into the target area of 220.
Second half of last year,
okay.
Then kind of a pause in progress in the first quarter. And what we took away from that was that
doesn't mean it can't go higher too, by the way.
To get the confidence that we need to
sitting around that 54.25 level, getting right below. So, remember what I said. 54.20. There is kind of a level there, right? So the zone could act as support. If we start breaking from this level, right, the main other level on a zero date and net gamma perspective is 5,400. Sorry that I'm talking over.
There's one more next year. So you really, if you look at year-end 2025 and 26, you're almost exactly where you would have been. Just it's moved later because of that progress. Now you get data, different data today. So we'll have to see where the data light the way. We're at the economy has repeatedly surprised forecasters in both directions, and today was certainly a better inflation report than
I usually trade stocks,
we'll just have to
equities.
See
I don't trade Forex.
Incoming data flow
and I'll trade crypto too, but I'll trade typically the crypto-related equities and like Bitcoin and stuff, but now through the ETFs.
Gina Smiley, New York Times.
My dog is going nuts. Give me
our questions. In the summary of economic projections, the long-run interest rate forecast moved up a bit. I wonder if we should read that as a sign that you think that policy is not sort of as restrictive as we previously expected. How should we interpret what that means about how the committee views its current policy setting?
So two things about that. One is this. You're right, it did move up, but I want to remember to point out that long-run neutral rate of interest is a long-run concept. It really is a theoretical concept. Can't be directly
dog
observed.
be going bonks, bro.
The
bonkers.
That would hold the economy at equilibrium, maximum employment, and price stability, potentially years in the future where there are no shocks. So it's a little bit. It's not something we observe today. Today we've got a very specific economy with all kinds of shocks we're still getting over from the pandemic. So
I am noticing that they are stepping down the
don't
liquidity.
think
So
that
notice here,
the concept of R-star, it's a very important concept in economics and in what we do.
stair
but
stepping
honestly,
down.
It doesn't
Okay,
really get you where you need to be to think about what appropriate.
it's not the
policy
greatest
is
sign.
in the near term.
So we want that to change
But
quickly.
back to your original
Okay.
question, people have been gradually writing it up because I just think people are coming to the view that rates are less likely to go down to their pre-pandemic levels, which were very low by recent history measures. Now we can't really know that. That's an interesting dispute and discussion to have.
Back in the weekly expected
now,
move.
but ultimately. We
As
think
previously
that things
stated,
like
this
the
was
neutral
stepping
rate
down.
are driven by
Now there's not
longer-run
much above us, so
slow-moving
we can always
forces.
snap it,
And,
snap back up.
There's a really good question about
Okay.
whether those really have changed or
Those
whether
that don't know, this is
instead
Bookmap.
rates and the economy are experiencing a series of persistent but ultimately temporary shocks. That's been the debate, and we can't know. But in the meantime, we're making policy with the economy that we have, with the distortions that we have. And I also, to your other point, I think it is
Dollar heading up.
the case that as time has gone by, the question of how restrictive is policy has become one that everyone's asking, and we're asking it too. And my answer has been that policy is restrictive. The question of whether it's sufficiently restrictive is going to be one we know over time. But I think for the reasons I talked about at the last press conference and other places, I think the evidence is pretty clear that policy is restrictive and is having the effects that we would hope for.
Yeah, so price is breaking down a little bit here. This gave us a good insight. The stair stepping down of liquidity, but we have some now stepping in. Do you see these bids right here? That's all of a sudden coming back in.
The combination of
Okay, so we'll see if it can hold. Comes in, comes back up. There's not much above us now, so we'll see if they keep on pressing us.
On the level of restrictiveness that you need.
See if they
that
keep
you, in fact,
adding.
have concluded that
They
you
kind of are actually. They keep on
weren't
adding
quite
there.
yet.
So we'll see if that changes. Okay,
I'd be reluctant to try to draw that conclusion. I think this is about.
we're still within the opening, or sorry, the
looking at
range
the
of the
incoming
very
data
first candle, the
and
first
asking
30-second
How
candle.
much progress are we making on
Okay.
inflation, and how is the rest of the economy doing? Is the labor market still strong? That's what we're thinking about. You can translate it into the language you're talking
We're
about.
below
but
the
to me, the
CPI
focus is
VWAP,
more on,
and we're
we have a
below
goal, which
the
is
Fed announcement
price
VWAP right
stability,
now.
another goal, which is
Really, we're
maximum
just kind of
employment.
trading sideways
How
in
are
it.
we
There's
doing
really no
there?
trend
We
to
think
them.
We've got a good, strong
Okay.
labor market still.
Just chopping,
We think we've
chopping.
been making progress toward
Holding above the
price stability
54.25
goal.
in this
And then
area
for a
right here
while
too,
there was a
okay?
pause, and we look
Remember,
at today's thing and we think,
this is a big level
well,
down here at
that's-
5400, so
that's
if
a
we
good
get some
reading,
crazy
and we
sell
hope we get
side,
more like that. And
keep an
you know,
eye
in
there.
the meantime, we're asking,
As
is
far
our
as market net
policy
flow, it's
stance
bullish
about right?
divergence,
And I
but
think
there's
yes,
no convergence
it's
here.
about right.
So we can
We're
have
prepared to
counter-trend
adjust it
moves.
as appropriate, but we think we're getting the things
542
that we
is the
would wanna get,
Magnon
broadly
SPY,
speaking,
so up a little
and
bit
that's why
higher.
we've been at this policy rate now for almost a year.
So just to follow
Jerome
up
Powell
on
can
that,
say anything in
what
a
I'm
moment's
curious
notice,
in
and this
here
market
is
can
you've
completely
got
change,
now
so
this
please be aware of
restrictive
that.
policy in place, and virtually
Apple
no
was the trade
change
for
in
me
any of the
and
major
Google earlier.
things for
So we
all
nailed a
this
couple
year.
today if you managed to
You've
catch
got
that on the
growth
stream.
that stays above long-run potential
I'm out of
throughout
my
the
day trades
forecast
currently.
period. Unemployment that never goes above the long-run estimate, right, of 4.2. So this isn't a story of slack improving inflation. So where's the improvement in inflation coming from that it's going to pick up pace so much in 2025?
Well, it's been coming. Where's it been coming from? We'll start with that. Clearly, a lot of some of what we've been getting is just the reversal of the unwinding of the pandemic-related distortions to both supply and demand, and that is complemented by and amplified, supported by restrictive monetary policy. So those two things have been working together. We've also had
Let's
a
take
very
a look at some of
positive
these
supply shock
names. People are
on the
saying that
labor
there's some
side,
movement
and also
happening to like
you get
AMC.
a positive supply shock when the
Yeah, it's just
supply conditions
dripping
on the
lower,
line
nothing
return
crazy.
to
GME.
normal. So you've had above trend potential.
GameStop's
growth
just been holding
and-
this
and
trend
high
lower.
Growth, and yet you've had the benefit of.
I was
of
interested in
inflation coming
trading
down,
it.
really
It's
fast,
getting very tight
actually,
again right
last
here.
year, and we'll see what the rest of this year
But
brings.
they're underneath now.
So
Their
these
opening
dynamics
range.
can continue
Okay.
as long as they continue. Ultimately, the question is ultimately.
Yeah,
are
just
you
be careful on
down
all this
to
stuff. It's down
demand?
8% on the trade
And
session.
we don't know that, though.
All right.
we're
So
looking
here's
at
this. So,
report.
okay,
If
you
we
guys
see
see
more
that?
like that,
Oh, see, okay, they just stair-stepped us down
we
again.
can't know what
Okay,
the future
so
holds,
watch,
but
watch.
In the meantime, we've made pretty good progress on inflation.
See, these stair steps
with
down,
our
they gave us
current
insight
stance.
to a potential drop. It did. What happened? We got liquidity beneath us. Okay? bam. And then what happened? While it started moving up, right? Now it's getting a little bit more stronger of some sell side right by the daily volume weighted average price. Okay, so it's coming up. Careful, because it come right back down, and we try to fight through this level. You can see them stair stepping. You can see them breaking lower. So we need to absorb it. We need to clear that out. Okay.
And your inflation forecasts basically average out to no change. So if at the end of the year there is no change from conditions now, why would you anticipate cutting rates? What would be the point for a rate cut?
Well, we think policy is restrictive, and we think ultimately that if you just set policy at a restrictive level, eventually you will see real weakening in the economy. So that's always been the thought, is that, you know, since we raised rates this far, we've always been pointing to
let's see if we
cuts
can do
at a
it.
certain point. Not to eliminate the possibility of hikes, but, you know, no one has that as their base case. So no one on the committee does.
All right, there we absorb that liquidity there.
You know, that's how we think about it.
Now
And
let's see if we
that's
can
what
hold
we've
that,
been
and
getting.
the buyers still
What
step
we've been
in.
getting is good
Okay.
progress on inflation.
How's it good?
with
It was good
growth
right there. We're right
at
at the daily volume weighted average
a good
price.
level, and
Still some
with a
liquidity
strong
overhead,
labor
okay?
market.
Now what you want to see is
ultimately,
bidder buyers to
we
start to
think
step
rates
in
will have to
and
come
start
down
doing
to
exactly
continue
what they did
support
here,
that.
but do it beneath us.
So far, they haven't
Okay.
had to. And, you know, that's why we're watching so carefully for signs of weakness.
There's
we don't
one.
really see that. We kind of see what we wanted to see, which was gradual.
And what are we
cooling
doing here?
demand,
We're still in the
gradual
opening range
rebalancing
of that.
labor market
Okay,
while
we're
we
getting
continue
really
to make
hung up there.
progress on inflation.
Okay, this is a very simple way to make things simple for you. Is just look at the first 30 seconds or a minute, however you want to do it.
Any kind of
Okay.
concern for
Technically,
the
that was the
housing
first minute
industry
right there
or
anyway.
Financial stability banks
Same thing.
in leaving rates.
Okay,
where
and
they
you look
are
for the break.
too
It tried to
long
break it a
at
few
this point.
times, but it didn't get quite there.
On housing, you know, the housing situation is a complicated one, and you can see that's a place where rates are really having a significant effect. I mean, ultimately, the best thing we can do for the housing market is to bring inflation down so that we can bring rates down so that the housing market can continue to normalize. There will still be a national housing shortage, as there was before the pandemic. There will still be one. But the distortions that we see now with lock-ins and things like that.
Apple's still digesting around that
In
220.
terms of banks, the banking system
Tells me
has
like
been,
this is
you know,
still holding, looking at
solid,
very strong. So to come back up to 221 for another buck,
lending.
do not roll it out,
You know,
right?
We've seen good performance by the
Definitely
banks,
not a
we
name
had
that
the
I'd be
turmoil
shorting
early
today,
last year, but,
especially coming from the
you know,
strength in
banks have
recent
been
trade.
focusing on,
When
on
Apple
bringing
gets
up their
going, it's
liquidity,
very
bringing up
simple
their
to trade the
capital,
trend
and
with
having
Apple in the
risk
short term,
management
okay?
Plans in place. So the banking system, you know, seems to be in good shape.
Thanks. Chris Rugaber at Associated Press.
I'm out of my day trading positions, just so everyone knows, but there's still definitely opportunities and room for all of this.
Can you tell us a little more about where you see inflationary pressure?
We're trading
in
right there at the
economy?
upper level of the
You
opening range there.
mentioned, labor markets coming into better balance.
Jerome Powell's still on stage.
Inflation expectations appear to be well anchored.
When he gets
You're
off stage,
seeing,
we've
you know,
seen some big
anecdotal
volatility
stories of
happen
large
after
chains like
the
Walmart
fact,
and
okay?
Target are announcing price cuts. McDonald's announcing a $5 meal deal. So, you know, people may still be unhappy about prices
Cracky,
at
this
the
is
grocery store.
Bookmap.
It doesn't seem
Bookmap
like there's a
allows
lot
you to
of
see
inflationary pressure
behind the
built into this economy. I
candlesticks.
wonder if you could
It actually
tell us more
lets
about
you
it.
see liquidity.
It's true that
Real
inflationary
orders.
pressures have come down, but
It looks
we still have- we're still
confusing, but
getting
it's
high
really
inflation
not.
readings,
They're
so,
just little
you know, I
dots are
think you can see it
volume,
in
volume
various
beneath us, and then we have
places,
orders
in,
that have not
you
yet
know,
to be
in some
filled, okay?
parts of non-housing services, you see elevated inflation still, and that's probably to do with, it could be to do with wages. Goods prices have kind of fluctuated. There's been a surprising increase in import prices on goods.
Got an
which
hour
is
left,
kind
so
of
this
hard
is
to
the power
understand.
hour, okay?
And, you know, we've taken some signal from that, but, you know, and of course, housing services, you're continuing to see high readings there. To some extent, that's you know, catch-up inflation from earlier pressures. But, I mean, overall, you're right, inflationary pressures have come down. As I mentioned, the labor market is.
If you're
coming to
long
better
S&P
balance.
500
Wages are
and you
still
want to see
running,
if it
you
wants to
know, I
continue
would
higher,
say
I'd still be paying very close
above,
attention to that 5450
a
level.
sustainable path, which
I
would
wouldn't.
be
I'm not
that
going to rule that
trend
kind of
inflation and
opportunity
trend
potentially out.
productivity.
Okay, there's
You're
still a
still
wide
seeing
open
wage
range. We still
increases
got risk in the
moving above
markets.
that. We
Implied
haven't thought
volatility
of
is.
wages as being the principal, you know, cause of inflation, but at the same time, getting back to 2% inflation is likely to require
2.27 still
return
as
to a
far as
more
the expected
sustainable
move goes.
level,
I was
which
looking
is
at the
somewhat below
I was looking at the one day.
basis in
That's
the
where I got messed up. So I apologize once again for that. But it's $2.27. So volatility did come off. Okay, but it's still remained.
Hi,
That's
Chair
still kind of
Powell, Rachel
elevated.
Siegel from the Washington Post. Thanks for
My
taking our
fault.
questions.
Dude, Coco, chill out.
There's obviously
Coco's
a lot
trying to
of
margin
focus
call me
on
right now.
how many cuts could be expected this year, but can you give us a sense of what one cut by the end of the year would actually do to the economy? What you think would be a meaningful difference if there was a cut by the end of the year, or even two?
I think if you look back in 5 or 10 years and try to pull out the significance to the U.S. economy of one 25 basis point rate cut, you'd have quite a job on your hands. So that's not how we look at it.
Hey, good job, Hoover,
really
on
whole
the
rate
on the
path
GME puts.
matters, and
Nice
I
stuff.
do continue to think that when we do
Which
start
lines,
to loosen
Cracky?
policy,
These
that
blue
will
ones?
show up in a significant loosening in financial market conditions, and the market will price in what it prices in. I have no way of saying, we're not at that stage, so I don't know what we'll be thinking about at that time. But it's a consequential decision for the economy, and you want to get it right. And fortunately, we have a strong economy, and we have the ability to approach this question.
Oh, he has a
carefully.
Band-Aid on his
And
nose.
we will approach it carefully while we're very
That's-
much keeping
that's
an
bullish,
eye on
I think.
downside economic risks should they emerge.
And you've been talking about this.
Those
clear
are
sense that
orders,
it's just going
by the
to
way.
take
It's a heat
longer.
map, so it tells you where there's
Have the
more
confidence
orders
that's needed for
hiding.
rate cuts.
That's what the
Is there
lines are.
something
So
about
the
what
darker
happened in the
red,
first
there's more
couple months
orders.
of the
So like,
year
for
that
example,
you're seeing
5450
differently now
right
with
here,
more
there's
time
quite a bit of
hindsight?
orders.
Do you still characterize
It's
it
gonna
as
require,
expected
more
bumpiness or
buyers to
something
push
more
through that,
lasting
obviously.
is affecting our policy for the
Absorb
rest
those
of the year?
orders above us.
We
That's what the red lines are.
always want to avoid the tendency
It's a heat map of
dismiss the
orders.
parts of
So the
inflation
lighter
that we-
blue, the
that we
less orders.
don't like.
And you have levels where
Just
there's
make
more
it go
orders
away.
hiding out.
So, but we had a quarter where
In short,
inflation was
dude, this is
running
what it
higher,
is,
and
really.
Yes, I could stand here and
If I go to level twos, if you've seen this market depth, basically what they're doing is they're painting that in a heat map form.
Low inflation is low inflation, high.
Right.
So if you have a quarter where it's higher, we tried not to take signal from the first couple of months, but we got a third month and we said, okay, the signal we're taking is that we think it's going to take longer to get confidence that inflation is moving sustainably on 2%. That's what we
chill.
said. I think that was the right thing to do. I still think that's the right thing to do.
Coco be
Now
crazy
we
right now.
have
Come here.
Today's inflation reading, which is very different, very much more positive. We're going to have to see what the trend is, what's going to be the data going forward. We're looking for something that gives us confidence that inflation is moving sustainably down to 2%. And readings like
The
today's,
Band-Aids a Nelly reference?
that's a step in the right direction.
Shit.
But, one reading is
Hey, this move can get completely reversed, dude. As soon as he stops talking.
You don't want to be too motivated by any single data point.
Jolene.
All right, guys. Coco's streaming.
Hi, Chair Powell. Thank you for taking our questions. I'm Jolene Kent with CBS News. What's your message to Americans who are seeing encouraging economic data but don't feel good about this economy?
I don't think anyone knows, has a definitive answer why people are not as happy about the economy as they might be. And we don't tell people how they should think or feel about the economy. That's not our job. Where people experience what they experience. All I can tell you is what the data show, which is we've got an economy that's growing at a solid pace. We've got a very strong labor market with unemployment at 4%. It's been a long time since we've had a long stretch of time with
Coco's
unemployment
commentary.
at below 4%, very long time. We had a period of high inflation.
All right, we're outside of the opening range for the report. We're above the VWAPs, so
Everything we can to bring
that's a good
that
start
inflationary
for the Bulls,
episode fully
right?
to a
It's a
halt
good start
and
for the
fully
Bulls,
restore
but
price
he's still
stability.
talking.
We're confident that we'll get there. And
He
in
is
the
still
meantime,
talking.
It's going to be painful
Oops,
for
I don't know what I
people,
just
but
did
the
there.
ultimate pain would be
something like
a
that.
period of long.
I might have messed that
a
up.
long period of
Now
high
I gotta
inflation.
remove it.
It is people who
It
lower
don't matter.
income
It's
people,
pretty
people
similar.
at the margins of the
It'll
economy
work.
who have the worst experience, who experience the most pain from inflation. So, it's for those people, for all Americans, but particularly for those people that we're doing everything we can to bring inflation back down under control.
Everything we
Just a
can.
quick follow-up here. You've indicated
Everything.
one interest rate cut sometime this year, and I know you don't have a crystal ball up there, but a lot of people are watching and see, borrowing money remains very expensive. For everybody who's out there waiting on a rate cut,
Hey, Cracky,
about when can consumers expect some relief?
To explain my trading plan, there's a bunch of different plans. So it's not just like one specific thing.
That we want to make sure that
It really depends on
we're
market
confident
conditions.
that
You'd really have to
inflation
watch
is
my
actually
YouTube
moving back
videos
down to 2%.
because I talk about like market conditions
when
and
we
stuff like
are,
that, where I
then we
walk
can
through
look
the
at
market
loosening
stuff in
policy.
quicker form, like
So,
15 minutes.
having that kind of
I would
confidence that inflation
recommend
will
you
be
checking
at
that out
2%
if you haven't
just-
already.
just
If you just
pays
found me on
benefits
Twitter or on Twitch,
to
I mean.
the whole economy, to all Americans.
But I have a
for
YouTube
long
channel. That's
period
where I
of
post the
time. We
majority
had
of stuff.
that
So it doesn't.
period
You might
for a
not know
very
this,
long
but
time.
if you're new here,
We very
you're probably
much
looking
wanna
at
get
Twitch
back
and
to
seeing a few
place
people.
where
But I have
people can-
a bunch of
cannot
people on
think
Twitter
about
watching right
inflation. It's
now.
just
I have
not
some
a
on
concern
YouTube as
in the
well.
Everyday economic decisions that they make. We were there for a long time, and our goal is to get back to that place. And we've made good progress.
Look at Dow.
We're in the phase now.
Really
of
wiped out
just,
this morning gains. Yeah, let's take a
sticking
look
with
here.
it until we get it done.
Let's take a look at Dow. What's IWM and Dow doing? Let's take a look. IWM doesn't look nearly as good as Spire the Qs. Okay, what's DIA doing?
Further progress on inflation. Halfway, through the year and after today's CPI release.
Yeah.
What have you and other committee members
Yeah,
found
completely
that
came in
has
and filled the
been
gap from the morning.
particularly
It's pretty wicked.
encouraging to you? And just in terms of the
There's definitely some.
how much of that is about
It's kind of flagging right here,
stimulus
though.
and
Look
shelter
at this.
inflation in particular? Thank you.
So encouraging has been that growth, the growth clearly that we had last year.
I'm trying to think of the
particularly
word.
The second half of last year, and we continue to see
Not discombobulation,
still strong
but
growth,
what's the
solid
word? It's like
growth this year. That's been very encouraging. If you go back
bifurcation.
a year,
There's
there was a real
bifurcation in the
concern
markets,
about,
clearly.
Very much
Held up by
slowing
very
growth
few names.
and
Apple's, man, just
recession.
cranking,
Many
dude.
forecasters had
Look at Apple, man.
And that's
Still
not
getting
what
hung up at that
happened. Instead,
220
the
level.
US is, anyway, and it's in sharp distinction with many other
Digesting it
advanced
still.
economies around the
So
world.
if this
So
breaks, right? If this
that's
comes,
been
if this holds this
encouraging. I
and
would
breaks
say
above
that the-
220,
today's
still
inflation
221 could be
report
in
is
sight,
encouraging, but it comes after
I'm out of my trade.
several your reports that were not so encouraging. You ask about.
Do I think we tank?
Your second question was really about shelter inflation.
I don't really have a
So,
strong conviction right now.
I think if you go back
It's all
a
a
couple of
ruse. I
years,
like it.
we know that there are renters, and then there are people who own their houses, and we have OER, which is owner's equivalent rent. And so
Yeah, there
when
you go.
market-based rents
That's not a bad idea there, Jason.
go up sharply, as they did at the beginning
take a
of,
look
the,
at Microsoft,
of the when the economy reopened, they really went up sharply.
We're coming
Those
closer. Yeah,
play
Microsoft looks
into
great. Look at Microsoft take
rollover
off.
rents much more slowly for
Wish we would've
existing
cut that one a
tenants
little bit
than they do
earlier.
for new tenants.
I didn't really like the
And so
digestion
what
here,
we-
though.
so we-
But
we
nice little
found
consolidation
now that
here.
There are big lags. So there's sort of there's a bulge.
So
of
Nvidia's not
high
seeing that same
past
move, but
increases in
Microsoft,
market rents that has to
Apple
get
is,
worked off, and that may
Google's
take,
holding up
several
relatively
years.
well after I got out of my
Nonetheless, as long as
position.
market rents remain
And
are
Apple
going
is,
up at
Apple
relatively
looks like
low
it's going to go for
levels,
that
and they still
221
are.
still.
This
It's just,
is
when
gonna
Powell gets
happen.
off the
It's just gonna happen
stage.
more slowly than we thought.
Look at, so see how we have the higher lows right here?
We
And it's just
also
building
do
right to the
sort of this thing
220.
where we impute a rental value to owned homes, and that's many countries around the world do that. Some do
I don't
it
know if I'm
differently
willing
than
to
us.
trade
It's
into
something
it,
that
though.
they,
I'm pretty
that
happy with my
the
gain
price
already, but
experts have regularly looked at.
still holding
It
up.
is not something that we're the
Got a
only
little bit of
country that
liquidity
does,
overhead.
and it's not something we're looking at changing or would look at changing, anytime soon.
Definitely
But
bullish
it's
convergence,
true.
bullish
It's one of
divergence
the very
there.
hardest things in
And we're
in
still above the
inflation
opening
in
range
prices
for the
is
first
how to
30
think
seconds
about,
of this report drop of the
services that
interest rate
someone is getting
decision.
by living in a home that they could rent, but they're actually
And we're
living in
above
it.
both
And
those
some
volume
countries
weighted
choose
average
to just
prices.
ignore that, but
The measured move
that's
of this
not
opening
how-
range would
that's
be
not
just
how
right
we
up here
do
to around
inflation
50.90.
here.
Okay.
We do it the way we do it, and we've been very transparent about it.
And we got-
it's true that
We still got that liquidity
we're
overhead on
seeing,
us. Okay.
delays in realizing
All
what's
that.
happening economically, but we
So
understand
we need them
that.
buyers
We
to
understand
remain.
that
Press
very
this
well.
up. Okay. Chop, chop.
Edward Lawrence with Fox Business. Thank you for taking the question, Chair Powell. So I want to go back to jobs and the consumer. The last jobs report showed that over the past year, 634,000 more people took multiple jobs. That's up 8.2%. And since January of 2021, we've seen prices rise 19%. So people are using their credit cards to pay for their lifestyle. What pressure points will signal to you that the slowing economy could maybe break companies in terms of hiring or break the consumer in terms of spending?
So, we monitor all the things you mentioned and more. What we're seeing is basically spending was going up faster than disposable income during big parts of last year rather. And so what you'd expect to see is people spending more on their credit cards. That has been happening. Credit card balances have been going up. Credit card defaults have been going up. They're not at high levels. Remember that after the pandemic, people were cooped up. They couldn't spend money.
Okay, Apple's trying to break that
They couldn't go out
220
and
here,
spend
so
money.
we'll
They
see if
could
we can
spend money
actually
from
get
home,
through.
but households were in very, very strong, historically strong financial shape. They've now worked off a lot of that. So we're watching that carefully. And, you know, what do we see? That's what we see. We see the same data that everybody else sees, but you've still got household sector that's in
Target for S&P 500 would be 5450.
You know,
Trader Joe
nonetheless, it's
points
not
out a
in
really
bad
good
shape.
point about the
It's in a year or
50-day,
two, and
the
we're
breadth on the
carefully
SPY.
watching that.
So how close then are we to that point where the consumer can't continue to spend as it's spending, or companies can't hire like they're hiring?
Consumer spending is still growing. It's not growing at the pace it was growing at a year or so ago, but it's still growing solidly. And by the way, other parts of the economy are picking up. Spending on equipment and intangibles has picked up quite a bit in in the wake of all the construction that we saw of new tech plants. So
Breaking the 220 right
overall,
now.
the economy is exhibiting solid
If you are
growth,
trading it, I'd be
and,
looking for
something
just
around
kind of the double
2%,
of that.
which is
So
good.
just trying to
a good
do it.
pace of growth for the U.S. economy.
And we're also
But
we're getting a
you're-
lot more.
you're right, though. We do.
They
see
keep
the
on
same
adding
thing
supply
other
right when
people
we
see,
get up
which
to this
is,
area. Did you see that?
Increasing financial
Look at
pressures.
yeah,
on,
they keep on adding it. Sellers
more
stepping in right there at
lower-income
5450 on ES.
And the best thing we can do is to foster a very strong jobs economy, which we think we have done. Ultimately, to get inflation under control, because those people experience inflation, very directly, very painfully, and once we get inflation under control, rates can come down, which will also.
So what Trader Joe was mentioning here too was the just the breadth of everything, right? There's a few stocks bringing the market up higher. Let's see what they say, and then I'll show you the chart.
You've mentioned that an unexpected weakening in the labor market would bring rate cuts sooner, and I was just wondering, can you talk a little bit about what that would look like? Is it more of like a quicker pace of people losing jobs? Is it more the level of the unemployment rate if it were to start to go above 4.2 or something like that? How are you thinking about what you're looking for to see the job market unexpectedly weaken?
When I say unexpectedly, the first thing is more than kind of is in our forecast or in common forecasts.
So this isn't necessarily as important for an intraday trade, but what he was mentioning was the breadth of the market, obviously, right? So if you look at the percent of stocks above the 50-day and 200-day in the S&P 500, notice how the price action is moving higher on the S&P 500, but the percent of stocks that are even above their 50-day or below their 200 has been declining, right? So you have a divergence in breadth, meaning that there's a lot of stocks in the market that are falling, but the S&P 500 continues to press higher based off of fewer and fewer stocks moving it. And these divergences have resolved themselves to the downside. So it doesn't mean it's going to happen. It could be a catch-up trade where many stocks start picking back up, or the market could resolve itself to the downside and kind of and fix that divergence. And they could build out for a very long time, but it's worth noting those as they grow longer and longer, because they tend to matter. They tend to matter.
We look at the broader context of what's going on too.
So something like negative payroll numbers would be.
I'm not going to. I mean, I can think of things that many things would make it on that list, but I don't think I'll utter them here.
Thank you, Chair Powell. Simon Urbanovich with The Economist. May I ask, you mentioned with the slightly higher PC readings earlier this year that it wasn't 1 or 2 months, but 3 months that tipped you to be a bit more cautious in the rate outlook. Should we take from that it looks like
Somebody had
maybe
mentioned
quite good for
Shopify.
PC as it was for CPI.
Shopify did pretty good today. It's up
Does that imply that
2.8%.
kind
It's
of
off
2
the
or 3
highs.
months
Got above the
would instill
50-day.
confidence
I'm out of
that
my
rate cuts
position,
could
but
be coming sooner than
still
you currently
holding rather
project?
well strong. Just
I
may need a
don't actually
digestion
have
here
that kind
soon.
of
Said
mechanical
race
thing
is
in-
holding
in
up
my
4%
thinking.
on the
I
day.
get
Yeah,
that.
look at race.
You know,
Who
there's
wants a
many good
Ferrari?
ones as we
I'm
have
going to
bad
trade
ones,
race
but
until I have a
that's not like
Ferrari.
that.
How about
It's the
that?
whole- It's going to be the totality of the data.
Also bullish trend,
Labor market
bullish
data,
looking
the
chart,
growth
just
data, in
consolidating
terms of
a little bit longer of a
inflation,
base here.
You'd want to see real progress that builds your confidence that we're
Apple's
on
like,
a
look at
path
Apple's
to
cranking. So we're
2%.
like,
And, I
wild,
don't want
dude.
to try to give you specific numbers of things because that points to a date.
We're literally at the highs of the trading session for Apple right now. I'm just all like trying to squeeze out pennies pretty much.
Thank you for doing this. I'm
All right, we're coming up into this liquidity that kind of shot us down, but prior,
to know about
if we can fill this,
dollar on
I think we
US
go a little bit
economic
higher
growth
here
and
into
prices.
that 54.50 target level, which is kind of that level that I
markets
said.
should determine the
Okay,
exchange rate, but
that would be the
Japan
level to watch,
and some
54.50, right
emerging
here on the
market,
left of my screen.
suffering from the strong dollar. So I want to know if it is having a positive impact on U.S. economy in total. Thank you.
So we don't. Actually, it's our finance ministry, the Treasury Department, that has a responsibility for thinking about and if it sees fit, doing things about the level of the dollar. So for us, it's just another financial variable. And you're right, the dollar has been
Oh, my camera went out again,
some
huh?
strength over the course of the last year or so because the U.S. economy is very strong. We don't think of it as benefiting or hurting the U.S. We don't manage the level of the dollar. That's not our job. It's not. And for our economy, what we're trying to foster is maximum employment and price stability. And we feel like we've made good progress on both of those goals over the course of the past year.
Jennifer.
All right, pulling up to around the target area on this 30-second range breakout.
You said you would cut rates before inflation falls to 2%. You're forecasting inflation to end the year at 2.8% on core PCE, or at 2.8%, of course, on core PCE. Right now, you said the inflation forecast is conservative and that if you got 2.6 to 2.7 on PCE, that would be a good place to be. You also indicated the job
They're really
market
trying to
has
fill this
mostly
liquidity overhead.
normalized.
400 contracts,
why not
54.50.
cut rates this summer just once? You're well above neutral.
Yeah, they want rates
to
cut
try to
so bad.
preserve the soft landing rather than risking waiting too long in the quest for
He's going to start
confidence
getting
for
mad at these
inflation.
questions.
So we're well aware of the two-sided risks here. Let me just say
Don't talk about risks.
We understand that if we wait too long, that could come at the cost of economic activity, of employment, of the expansion. We understand that if we move too quickly, we could end up undoing a lot of the good that we've done and have to then start over, and it could be very disruptive. So we're extremely aware of both of those risks and just basically trying to manage them. And what we said is that we don't think it'll be appropriate to begin to loosen policy until we're more confident that inflation is moving down to 2% over time on a sustainable basis.
I'd have to look cracky on DX feed. I can't quite remember how much it is.
Which is,
I feel like I did a yearly thing.
Deterioration in labor market conditions. So I think that's.
But I think Bookmap now offers data, so you'd have to check into that actually. If you're looking into it, just so you know, there's a link that has discounts on my YouTube videos. I always post it, or maybe it's on this one actually. On my YouTube video, my current live stream. There's links in the description or whatever.
The labor market
and you get, I think they do up to 50% off the annual and stuff like that. But then they do, I think, 20% off like the first monthly or something like that. If you do a monthly one.
To approach this question carefully.
They're actually building me out a landing page right now.
Just to follow Chair Powell,
because I partnered with them.
Do you need to be ahead?
All right, so we're filling that liquidity at 54.50.
Otherwise, is it too late, given that the labor market
Apple came in a little bit here.
Right, when you look at the monthly jobs data.
Yeah, we completely understand that that's the risk.
S&P 500, not too far off of that 54.50 level. And then we're trying to look for just a double of the opening range of the report, right? That was kind of the trade idea or whatever.
Consistent with our framework. And
which is pretty much there now. Well, I mean, we're off like a few points, but not bad.
Thank you, Chair Powell. Evan Reiser with Market News International. You have mentioned before the framework review process will start in the latter half of the year. At this point, do you have any specific time frame for the start of that?
Microsoft is absolutely cranking right now.
A committee group of your peers? What will be the parameters? Do you anticipate the review will consider changes
holding up rather well, breaking out of this little downtrend. I would like to see it pull in a little bit. We're coming into like pretty much the final 40 minutes of trading, okay? So let's be aware of that. Google made a nice move. This was the original entry. I'm no longer in it. I got whipsawed right here. Not bad there though, right? We were talking about pulling into potentially the 55-day moving average.
Communications generally.
Nice move there on Google.
Say that we'll look at this or that particular.
Meta holding up well. It's in its opening range for the day.
We don't want to get prematurely into a conversation until it's really time to have it. And so, I'm going to leave.
Apple's pretty much stuck in place. We might not get up to that 221 unless we get some sort of squeeze.
Go to Nancy.
So 220 was a good target area.
Hi, Chair Powell.
May still have some guts into it. Maybe some gusto.
Just one more question on housing. Can you still cut rates with shelter prices high, or will you wait until they start to moderate a bit?
I wouldn't. There isn't any one.
We're pretty much right there at 54.50, right?
Housing prices.
That was a new high on the day for S&P 500.
Really decide against what we're doing. We've got an overall test, which is greater confidence that inflation is moving down to 2%.
I think I have Global Plus, but I don't even use the necessary all the things for Global Plus. Nico,
in the labor market.
like I don't think it's necessarily.
Those
I
are
use
two
like I
different
pull up
tests,
some
would say.
stocks and I pull up ES futures pretty much
we're
all the
not
time.
looking at any one price in any one sector and saying that's the one. We don't target housing prices, for example.
But I don't think you need Global Plus for that because I don't execute orders on Bookmap. I just use it as a tool.
Prices and overall.
My trades today was
But if housing prices
I traded a little bit of
remain
futures
sticky, could
earlier
that
on, and then I
slow
traded
down the pace of rate
I
cuts?
traded Google and Apple today. Pretty much stagnant all day. We're coming into 54.50 now, people. Okay, this is an important gamma exposure level, so just be aware that we can get pinned around these levels. Okay.
And, and of course, if
We can push away, pin. We can go outside of it. We can come back in. But if you caught that from the long side, that was a pretty darn good trade to be happy about. There it is. There's the tag, 54.50. Where are we at? We just tagged the upper. I'm going to call that a tag. He's coming off right now. Okay, he's done He's done, and we just basically tagged a double of the opening range right there. Okay. That 54.50 literally tagged to the T here, and it's pulling off a little bit. Doesn't mean it's over, but that was the level. Okay. There we go. Okay. Coming in slightly there. Apple's still floating around. Nothing there. And we're coming to the final 30 minutes or so soon. All right. We'll pull that back up just so everyone could see it. That 54.50 was incredibly important. You like that? You like that? Pretty rad, right? Pretty rad. Hope that helped out. Hope it helped out. What am I doing? Oh, no. Okay, this is all I needed. Yeah. You like that? It's pretty crazy, right? Hopefully you guys were aware. Hopefully you all were aware. Guys, gals, whatever. Hopefully you're aware. Let's take a look here. S&P 500 is coming in after the meeting. Liquidity is still adding. It doesn't mean that it does, honestly, this don't mean nothing really right now. It's just kind of coming off a little bit as Apple's coming off here too, as he's getting out. So just be aware, calm, careful, cool, collective. Don't make any crazy judgments. This was literally spot on. Okay, spot on. 54.50. What was the high? The high was 54.50. It was to the penny. To the penny. Okay, you got to be quick, especially if you're trading intraday. Back to the opening range here, the first 30-second opening range there, coming back down into it after he got off stage. That whole 30-minute candle right now, right? We have about 6 minutes left of the 30-minute candle on the left-hand side of my screen. It reversed completely on its face from 54.50. Crazy. Crazy. Apple came off. Microsoft came off. NVIDIA is coming off. Google is coming off a little bit here too. Okay. And they're adding quite a bit of liquidity overhead here. So just be very, very cautious in this area. $54.25 would be a level to keep an eye on. That was a pretty aggressive move to the downside. Yep. Coming back right down, back in the upper monthly expected move and coming right back down to the weekly and daily expected move. Pretty crazy. Market said, all right, now that that's out of the way, it's a lot of liquidity being added here too. Look at these things could snap right back. So still like, just don't be too aggressive. All right. This is some movement here in the market. We're back underneath the opening, but we're back in the opening range and we're at the volume weighted average prices for both the CPI and
systems for the foreseeable future.
Coming off hard and fast. Oh, 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 oh. 54.25, we're back in that level.
Seeing some commentary from the Double Lines Gunlock responding to the FOMC press conference on CNBC, just saying that overall he's less confident in his base case of a one rate cut this year, and he believes the Fed has gone into a reactionary mode.
Came right back into, that was a wild range. Came all the way to 54.50, and look where it came down to, back to 54.25. They call that a round trip. A round trip. Now, it'd be even crazier if we close right back here after the highs. Then we'd be like, what do we do? Oh my gosh. Yeah, Randy, the reason why is because they're looking at CBOE's S&P 500. I'm looking at Awanda. It's just different. So it's off by a little bit, but you can still kind of use the similar levels. My chart shows the continuity of everything, so I get to see, theirs will obviously have the gaps and everything, but SPX is totally fine to look at too. Is IWM puking? Is Dow Jones puking? Let's see. They still keep on adding liquidity beneath us or above us, but there is some steppers. They're stepping in right here. So if they keep on holding this up, they're going to kind of like try to mitigate that move down a little bit, right? If they can hold, they're trying to add here. Right? You see how they kind of stepped in right here? So we'll see. But then look, you see they're lighting us up. Sellers keep on walking in. Okay, so where do we go to? 5,400 is 573 contracts down here. That's on ES. Okay, that's a lot of contracts. The longer that they're there, they can act like a magnet and price can pull to those levels. Careful here. Careful here. Careful now. Let's see what oh boy Apple's doing here. That came off right at that 220 back to here. Oh, no, extend to the right, I meant. There we go. Okay. Yeah, Cracky, you can use level 2 data. Level 2 data is on a lot of platforms for free or very cheap, but it just doesn't look like this. It's not presented to you in this way. This is pretty heavy duty sell side, people. We're now coming towards the bottom of the opening range of the first 30 seconds here on the announcement, the Fed decision. Okay, remember what we said, under 54.20, like this area can hold, right? But if it gives way, there's still a lot down there at 5,400. All right, we're chopping there. We hit the lower range. We're coming back into the middle of the range. Below the volume weighted average prices there. 30 minutes left. They're trying to sell this thing down. Where are we at? Back in the weekly expected move, ladies and gentlemen. Back in the daily expected move, which was always the higher probability. The daily expected move is the white lines here. 541.80. Below us is 532.10. That's where we are currently. Remember, it's very common that we trade around the weekly expected move when we tag it. So to come outside of it and come back up and trade around or come outside and come in, like, it's very common to do that. And it's only Wednesday, so we still have a couple trading days left. Tomorrow, we have a big expected move there too as well because we have PPI data. PPI. That felt like a little bit of a capitulation kind of there. So maybe Maybe we can bounce from these levels here on Apple. We'll see. Coming into the final 30 minutes. 30 minutes, people. Ooh. Turn on some tunes. Hopefully y'all had a good trading day. Caught some pretty interesting levels there, that's for sure. 54.50, that was just spot on there. That's crazy. Dropping outside of the opening range here. So we broke above the opening range and came up to the upper end. Now we're floating around the bottom of it. The opening range for the day was down here. So if we come all the way back here, that's exactly where we started our trading session. It's pretty wild. Have a good day, Flylear. This got just smashed from 54.50. Smashed from 54.50. Do. SPY 540 game exposure level. Let's take a look. Yeah, we're about 50 cents off of that. That's quite a ways down. I guess not that crazy, but yeah, we're not too far off. 60 cents or so. I wouldn't be shocked if we come right back to the weekly expected move. Come snap back into this volume. It is what it is. Apple getting smoked from that 220. Microsoft got completely smoked from that 443. Nvidia came in pretty hard. All the tech stocks, that's what's moving the market here. They all came back in. Amazon's down 0.5% on the trading session since that move. Meta is down too. It's underneath its opening range here. They're yelling out, "Save me!" Hey, thanks for this tier 1 sub there, Cracky.
Seen a bit of a rollover in equity markets here as with less than a half hour now to the cash close. The Dow back in negative territory. The S&P holding on to gains of about 40 points with the lowest levels of the afternoon for the S&P.
Do I have the yearly expected move? I think I do. Or no, I don't think, maybe I don't. No, I don't have a yearly. Maybe I do, I don't really know. I think I do monthly and quarterly. The year, there's so much that changes within the year. I'd have to look into that. I don't know.
Taking a look at market internals, NYC volume 13% above its 1-month average. Advancers lead decliners by 2.5 to 1.
Selling is slowed slightly, but it's really just consolidating. They're trying to get these bids here to support everything, but
VIX index trading lower by 4% at 12.
Still 5,400. There's quite a bit of orders down here still, so be aware of that. This thing could just move. We have PPI coming in tomorrow too. EVGO. Pull up EVGO. AVGO. Is earnings coming out for AVGO? Earnings expected move for AVGO is about $92 plus or minus from wherever it closes. Basically where it's at right now is about $14.88. Okay. I mean, technically we can probably go out that far on the S&P 500 and look at the expectations for the year, but so much happens. I like to look at the monthly and quarterly just to give an idea of risk for like a few months. Okay. we're holding the lower range right now, just so you know, on the just the first 30 seconds of that report. So come back up into these volume weighted average prices, see what happens there. We're coming back into that 54.25. So it was an extended move, big break from 54.50. Okay. I'm still keeping an eye on Apple. I'm just interested to see where this thing could potentially push to. I want to see where it closes more specifically. We'll watch AVGO, I guess, if it's reporting after the bell. Yeah, are you saying on NQ, Joe? Yeah, this little kind of like tightness right here. Yeah, I was thinking the same thing. So we're back in the middle of the range here, right? So we saw that volatility, right? So we broke out of the range, and we said about this little white. All this is a drawing on the screen. It was basically a technical measured move, right? Doubling the 30-second range, that would be a potential target. I'm giving that as a tag. We're talking a $19,000 product right here, right? Over 19,000. Nice move. Completely reversed on itself as soon as we hit 54.50 there on there. And now we're trading right back at these volume weighted average prices for the CPI and the Fed decision. My camera's down again. Sorry about that. My camera keeps going off. I'll fix it. I shall fix it. Uno momento, por favor. Por favor. Por favor. Play earnings today too. Nice. Yeah, some of these tech stocks are really getting hammered right now. Apple keeps on going down. This makes, it's probably profit taking coming off from the highs of the trading session. Let's take a look here at Microsoft. Oh, my camera's back. Okay, there we go. Microsoft's holding up rather fine, actually. The volume weighted average price from the CPI is where we're getting hung up out now. Take a look at Play, PLY. So this is reporting earnings here after the bell, I guess. Trade. Looking at roughly a $6.5 expected move for PLAY. Dun, 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 dun. Sellers are still hitting hard. Don't fight that. 5,400 still in sight. They really reversed this one. We're right there at that opening range again. Oh, any other names? Apple down to 215. These things are getting just smoked right now into the close. Microsoft kind of flattened out. Apple keeps going down. Nvidia, that's holding up rather well. Google, that's holding up pretty well too. Meta, it's not getting as smoked. Apple's the one that just keeps on coming down. Apple's getting just smushed. Thoughts on McDonald's, the Golden Arches? That is pretty funny, actually. I saw that. Feels very heavy here. All right, so now they're breaking out of the opening range to the downside. Careful there. I don't really use any indicators for TradingView. I have the opening range on. It's not really an indicator in my opinion. It's just watching it. And then I have some gamma levels that I pull from other sites. And then my favorite, if I was to use an indicator, just the anchored VWAP, and that's free, is right here. Anchored volume, anchored VWAP. Tech's not getting as cooked. Apple's getting cooked. Yeah, small caps have been getting cooked. Small caps haven't been going anywhere. But technically, they're still up 1.38% on the trading session. Right? So IWM is actually performing quite well relative to Qs and SPY. So it's actually outbeating those. It's coming off, but Qs and SPY are actually not performing as well as IWM. Still up 74 basis points on the trading session. You can see we're trading back in the daily expected move and weekly expected move. I got a song for you guys. I guess they're still up though, so it's I can't. Oh wait, did I do the right one?
Market crashing down hard, pineapple dreams sinking far under the sea of despair. Hope's a ghost in the air. Charts and red lines, numbers playing cool lines. Fortunes washed away, tears blend with the spray. Stop sinking low, they're drowning. Let's come off and we're founding. Economy like a shipwreck, futures now a pitch shack. Brokers panicked in the haze, screens to drowning. Masks come off and we're frowning. Economy like a shipwreck. Futures now better check. Brokers panoply like a shipwreck. Futures now better check. Brokers panicked in the haze.
Oh no. All right, now let's turn this thing around, huh? There we go, dude. That was our pineapple song. Sinking like a pineapple under the sea. They're coming for us. Little punks. Now we gotta get in our rocket ship. Should I end up in our rocket ship?
Bundesbank Chief Nagel saying inflation is going down, but is still very sticky.
Come on, baby, let's take us back up.
From an event in Montreal.
Wouldn't that be hilarious if we just timed that perfectly? Here we go. Technically, we are up on the day, so it makes sense. But if it drops, then we have to stop it.
Wall Street's my scene. Flipping stocks like bees. I hold when I believe. So when I deceive.
Can I post a link to the song? I can maybe post a link to the song.
Gains I will retrieve. To the moon. To the moon. To the moon. Take it higher, sweet big fortunes. To the moon. Is on my mind. Dollar signs I find. Bullish all the time. Candles in a line.
Nagel saying the last mile inflation is the most complicated one.
There's I must ignore. There's I must ignore. Lambo at my door. To the moon, to the moon, to the moon. Take it higher, sweet big fortune.
Back to the daily expected move. We flipped that quick. That's funny.
Nagel saying that the ECB is not on autopilot.
Soaring to the stars like balloons.
Dude, we just flipped all that perfectly. We went from the pineapple to the moon rocket to the regular desk. That's how we do it. Quick trips. All right. We're coming into the close, ladies and gentlemen. This is where all kinds of volume comes in. Be chill. Be careful. Don't do anything crazy. Gonna call it a day. We do have, coming into the final hour, we have a couple of things on earnings. Look at that. All that just came in right there. The liquidity right here. Should I go back on my moon? Moon, 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 moon.
Here, market on closes to the sell side, about 3.5 billion to the sell side.
Let a man have his rocket ship. It's too good. Moon, 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 moon. Sheesh. Yeah, we're just trading right there at the weekly expected move. Not surprised, right? We came outside, we came back in, we came right back into it. Big, 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 big whoopee. And we're trading still within the 30 seconds of the initial announcement of the Fed interest rate decision. And we're right there at the volume weighted average price too. Trading around 54.25 there on the S&P 500 there as well, which is that 0-day level with about 9 minutes left to the closing bell. 9 minutes left to the closing bell. We have, I want to see where Apple's closing at. Apple's closing, that's closing at the low of the day, so I'm not going to execute. We have AVGO, right? Somebody had mentioned AVGO is reporting earnings. So the trade expected move there is 95.18. So basically right here. So AVGO after the bell, I think, is reporting the earnings, right? And it'll probably move around there. Is it after the bell? Yeah. So there's AVGO's expected move. And then play. Dave and B, D and B's, is looking at roughly a $6.65 expected move. So about there. Okay. These are what the market's pricing as far as risk on these earnings moves, okay? And we're still mooning, baby. Back up to the daily volume weighted average price. Coco was ready. Coco was ready at this level up here at 54.50. He's ready to attack. We're back at the the 30-second opening range of that report. It's been, look, it's pretty cool, huh? How that works, right? The first 30 seconds where all the volume trades at really quickly. Okay, you can anchor volume weighted average price, but this gives you a little bit more clarity as far as just a range goes. And we're just ping-ponging around. We doubled the range. We came back in it, which is right here. Right now we're coming back up to the end, and we're pulling back into these volume weighted average prices. Okay. Meanwhile, we're just trading there at those daily moves. So good trading day. It's fun. Good trading day. It's like the happiest song about the market going down, seriously. I showed a special midterm pattern on the Apple chart, which confirms on the higher highs. Which one was it? That whole the one that I showed earlier, the potential distribution chart, like a long time ago. Five minutes into the closing bell. $54.50 level, man. That got whacked when it came up there. Nvidia held up rather well. Not surprised. Microsoft up 2% on the day. Google up. Google's making its way up there too, pretty nicely actually here.
Reducing the number of vice presidents across the organization. Michael Echo Tango Alpha.
Yeah, Google's looking pretty decent there. Nvidia, Apple, still sitting at basically the lows of the recent announcement. But this thing has been running. I mean, this thing moved like crazy. Look at this thing. So the profit taking, they're kind of rotating there. Amazon's flat on the trading session. Amazon's looking kind of like what it just.
Macklem saying we've come a long way, but we're not there yet. Coming up after the close, we'll get earnings from Broadcom about 5 minutes after the close for ABGO.
All that volatility that we recently got is kind of erasing itself right now. The pineapple song. I don't know how to get that. Let me see here if I can get it. 1 second. It's not like a real song. I made it with AI. Let me see. Google. I think I did it under that account. There you go. I'll post it. I'll post it right now. There you go. There's the song, I think. Yeah, that should bring it up. For sure, Felipe. Thanks for tuning in. Thanks, Reese. Thanks for tuning in. We're coming to the closing business. We'll all be getting off the stream here soon. Yep, nice little double bottom here. Yeah, you can call, yeah, for sure. Because it also broke this little high right here. So yeah, double bottom for sure, man. Good call. We'll wait to see Broadcom's earnings to see how that works. Just to give an idea of semis. We're breaking back outside of that opening range. Not opening range, but the Fed interest rate decision opening range here. Those orange lines. I'm going to delete these white boxes now. I'll just actually, there we go. I'll clean it up a little bit. Chopped. Thanks for tuning in, Scott. Thanks, Zolfi. Okay, Coco. Okay. Calm down, little girl. Calm down, little Coco. Coming to the closing session. About a minute left, everyone. And we'll watch AVGO, and that's about it.
That a deal with Vale on railroads is coming soon.
Some volume into the close here.
20 seconds to the closing bell.
Remember, we got PPI tomorrow. Pretty strong sell side into the close. We'll see, though. And there's the bell. And there's the bell, ladies and gentlemen. All right, so we got AVGO reporting in about 5 minutes.
RARX announcing plans to file for an accelerated approval for UX 111, Romeo Alpha, Romeo Echo.
Now, AVGO is a big company, so I feel like this can hold...
There's a limit to how much Bank of Canada can diverge from the rates with the Fed, but we're not close to that limit.
Okay, so AVGO. This is the earnings expected move for AVGO. So this is just based off implied volatility, okay? For those that want to see it. And why implied volatility is good. So if it's market likes what it sees.
Saying there's a feedback loop from the U.S.
The market likes what it sees, right? We could take it up, maybe even more, right? If it's like out of expectations. You can always go 1 standard deviation or 2 standard deviations, but there's a high probability that we're going to tag the lower or the upper, okay? In the next few minutes, which is
hepatitis B virus.
Big move.
Bravo, Romeo, November, Sierra. Cara Therapeutics, CARA announcing outcome.
SPY's just back right at its weekly expected move, right in its happy place, right?
Avidity RNA, they're announcing a proposed common stock offering, raising $300 million. Romeo, November,
Oh, am I
Alpha.
still in my rocket ship, dude? Did I forget to get out? Oh, no, I'm not in it. Okay, my bad. I thought I was in my rocket ship for a second. Nice job on the calls, on semiconductor calls. Good stuff. My thoughts on SITM. We can take a look at it. I'm not too familiar with it. Gaps don't always have to get filled, but they typically get, you know, they can get filled, that's for sure. So there's always I wouldn't like base trades off of like them for sure getting filled or anything, but I do like making trades around gaps, like when they do come to get filled, you know, upside or downside and so forth. Down 16% on GameStop. Wow, that thing moved, huh? Yeah, nice big flush there. Ouch. Ouch, you mama. Pretty big flush there. So, I mean, when rates are higher for longer, I mean, that's kind of what's been holding the IWM down, right? A lot of these, like, and even same with Tesla. So what did Tesla end up doing today? Tesla finished pretty strong overall. So we'll see that news tomorrow on the whole pay package, I guess, is what somebody had mentioned. But obviously Tesla with the rates higher for longer has been hurting the company. Even Tesla, even Elon Musk made a comment on the rates being higher a while ago. All right, AVGO. Big dog. The big dog AVGO. Coming for us. I appreciate that. Thank you, man. Will Apple touch 200? I mean, sure, yeah, probably. It's not even that far away. I mean, on the minute, it looks like it's far away. But, I mean, really, that would just be a nice consolidation. I mean, that's probably kind of a pretty big pullback. But it also would make sense. That was a pretty exaggerated move to the upside. I don't know if it gets down there like tomorrow or anything, but you never know if it, like, moves up and eventually consolidates and sets something up. It's a tough call. NQ is still coming off. It's going to be interesting, actually, when AVGO reports. It should be coming up right now. It is 4 till, or 4 after. And I think that it was supposed to report at 5. Broadcom. Thanks, Daryl. Thanks for tuning in. Thanks for tuning in, everybody. I'm going to be getting off here after they just report. Just want to see it move. GG.
From Daigle saying we can't show any complacency on inflation.
PLAY, Dave & Buster's revenue $588 million, misses the $614 million consensus estimate. Comparable store sales were down 5.6% for Play.
CURV $294 million in revenue, beating a $280 million consensus
Dave
expectation.
& Buster's, the earnings expected move is right here. It's coming down.
$1.12, and Dave & Buster's still well below the estimate there in adjusted EPS.
Not the white line.
Curve at 12 cents, a 5-cent beat for CURV.
Dave & Buster's just reported. Market does not like what it sees so far. Okay, but we haven't tagged the expected move. It's $44 would be the implied move. AVGO should be right around the corner here.
And RARE announcing a public offering of common stock and warrants. Romeo Alpha, Romeo Echo.
You're welcome, Colby.
Argentine Central Bank is renewing a swap line with China Central Bank for $5 billion. Argentina.
All right, almost there. I would imagine this coming out. Where's the AVGO? Where you at, buddy? I did look at some gold and silver and stuff. Yeah, I pulled those a little bit earlier in the trading session though. I mean, they look fine. I mean, they're just consolidating after a big run. I was shocked to see that the dollar was down so aggressively though, and they weren't hardly even up, which I thought was interesting. This graph? This graph is this is Bookmap. It allows you to see behind the candlestick. It shows orders that are hiding out. It's basically level 2 data, but it's heat mapped on the screen. Easier to read. Looks hard to read, but it's not. It's actually quite easy. It's heat mapped, so there's more orders in certain areas. It shows you the auction on the S&P. This is the S&P 500. This is ES futures, SPOOs. Dang, Darren, you don't need, man, thank you for the, thanks for the super chat. You didn't need to do that. I'll share the chart with you. Give me a second.
From Bank of Canada's Macklem saying the thought was productivity would pick up following the pandemic.
I'm sending it to you right now, right on the chat, if you want to see the S&P 500 chart that I have there. Probably be a closer photo for you. Darren, you didn't need to do that, man. If you're in the Discord, I could always send it through there too. And I only charge $9 a month for the Discord, and it's even less if you do the annually. And we'll post a lot of stuff in there, but like, can sending over a multiple months worth of just being in the Discord. I appreciate it. Thank you for the support. All right, AVGO. I'm still waiting on this one. My camera's down. Yeah, I'm gonna be hopping off stream here soon anyway. So my camera's been I think it's been overheating. I'll fix it here. Take a look. Take a look. Take a look. There we go. Oh, maybe not. It's kind of like all funky. They might be pulling it out a little bit later. The earnings, they haven't showed it yet. I know the earnings call's a little bit later. I thought they were going to drop it 5 minutes. That's at least what they said. But I'll give you the expected move for AVGO, and then we'll go from there. I'm going to call it quits. 1590 to the upside, about 1400, give or take a few bucks. That's the expected move for AVGO. I'm sure that one can move markets. It's a bigger name. Broadcom, it's in the semiconductor space, so it'd be interesting to see how this one reports. That's all I got for you, everybody, on today's stream. Hope it helped out. We played some pretty decent areas, right? We saw a good Apple trade. We saw a good Google trade, and then NQ, man, we tagged that level to a T. So hopefully those levels helped you out today. It's not always exact like that, but man, those were pretty spot on. So hope you enjoyed today's stream. I'll be seeing y'all later. If you haven't subscribed to the YouTube channel, make sure to do so. I'll post things out there on YouTube, obviously, the daily stock market brief show. I try to get it every day for the most part, but just got back from vacation. 4 minutes AVGO. Oh, okay. Should I wait? Should I wait? You said 4 minutes? What's 4 minutes from now? What does that equal? Oh, is it really 4 minutes? Thanks, Moonraker. Moonraker! All right, I guess I'll give it a few more moments. I'm tired. I need to get some air, go outside. Damn, Dow Jones closed down on the day. What a reversal. IWM it's closed up on the day, but near the lows of the day. SPY did just fine. Gapped up, closed basically where it opened up at. We're right there at that weekly expected move, monthly expected move. So to see it come back in, I mean, that could make sense to me, but this market's wild. Q had a nice finish, so tech really led that way. That one held up pretty good overall. So we'll see how AVGO. All right, what is this reporting? It's been no, it's only been like 2 minutes. All right, we're almost there. Doom, 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 doom.
See Broadcom earnings in about a minute.
Ladies and gentlemen, here we go. Broadcom. Doom, 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 doom. All right. Come on, Broadcom. Hit me with it. What you want, Coco? All right, here's earnings. Positive reaction so far.
AVGO 12.49 billion in revenue beats the 12.0 consensus estimate. Just EPS $10.96.
Holy macaronis.
1079 estimate for Alpha Victor Golf Oscar.
And there it is. Earnings expected move tagged. Boom. AVGO ripping through it right now.
They're raising their revenue guidance to 51 million, including the contribution from VMware. Adjusted EBITDA guidance of approximately 61% of projected revenue.
That is a big move right there. Trading outside of its earnings expected move, AVGO coming in hot, so I can only imagine this is helping the semiconductor ETF. SMH, boom, saw a nice little boom there. We'll see if NVIDIA is responding anyway. Nvidia's moving nicely on that news.
I'm also announcing 10-for-1
Nothing
forward
crazy, though.
stock split for AVGO.
Stock split announcement. Stock split announcement for AVGO.
WR Berkeley raising its quarterly dividend 9%. Whiskey Romeo Bravo.
There you have it, man. This market's just cranking. Take a look at futures, see if that's moving. Futures at all, a little bit. Nothing crazy here, but maybe NQ is moving a little bit more, so I'll pull up NQ. NQ, ripping on that. Yep, boing. There we go. NQ now is trading outside of that opening range there, back up to around near the highs of the trading session today on just that AVGO news. All right, people, I'll be back tomorrow. Actually, I don't know for sure if I'll be live tomorrow, but I'll try to be. See you later, everybody. Thanks for tuning in. Had a blast with y'all.